so far this year go into some of the equal weight, go into Europe, and that actually has legs? Or are you saying that potentially at some point, even big tech could become cheap?
No, I think the former. I think you want to lean into the things that have worked this year because they still are cheap. And they have catalysts now for them to advance in the future, which is where they haven't had much the past few years. I mean, cheap asset classes need a catalyst. I think they actually have that, and that's where investors are still underinvested, and that's where I think there's opportunities pushing forward.
Are bonds cheap? Are they a diversifier?
I think right now, if you think about the Trump put, it's probably out of the money. If you think about the Fed put, we're going to find out if it's out of the money. I think it should be. If not, then we'll see about that. But right now, the one thing I can tell you about fixed income and longer term bonds is they are hedging equity downside risk. And that's because I think people are thinking about an economic slowdown, even though they won't mention it too often, just because it hasn't worked in the past. That's where I think right now, I think you want to own longer, higher quality bonds in the event the economic downside does broaden out just a bit.
So I keep thinking about what Tom Becker of BlackRock said earlier on the program. He was talking about how everyone's becoming exceptional, how you have fiscal spending everywhere. You have European fiscal spending, you've got Chinese fiscal spending, and probably in the United States later this year, we will see another round of fiscal expansion of some sort or another. At what point does that concern you? On the flip side, the idea that you could end up with structurally higher yields and higher inflation that really reduce that mitigating feature?
I think that's a current concern for the next 6 to 9 months, because I think eventually whatever austerity that we're going to have, I think that probably ends at some point, as you're mentioning. And that's where I do think the way out of this, because there is quite a bit of debt around the globe, is still through inflation. But I think that's off in the future somewhere. And I think for the here and now, you want to own longer term bonds, because I do think there is still economic risk to the downside of an economy that was already bifurcated coming into this. I mean, we have parts of the economy that haven't worked for the past couple of years. That's why the market's been so narrow. If you think about our positioning, and Lisa, you kind of went through some of our trades, small and mid cap, equal weighted S&P, all we're positioned for is the broadening of the market. It's been incredibly narrow the past couple of years, and I don't think that could continue. How that occurs is less important to me than it actually occurring. And I think if you look historically, when you've had this narrow markets, that's what's happened on the other side, and I don't think this time will be any different.
Brent, you mentioned the Fed put. Is the Trump put dead?
I don't know that it's dead, but I don't know how he backs away right now from what he's looking to do. And so we'll see on April 2nd. That's where I think it's just further out of the money. I think that had to occur because everybody thought it was a negotiation tactic. And for me to believe that a negotiation can be successful, you have to believe that you'll follow through with it. And I think most people thought that he would back away when the market fell, and that has not been the case. I do think the bigger question, back to Lisa's inflation question, and something I'll be listening for in the press conference, given the fact that both sides of the Fed mandate are at risk, which side do they err upon the side of? If it's more along the growth side, with inflation expectations where they're at, with inflation still where it's at, then perhaps my comments on longer bonds need to be revisited. But for right now, I think at least my base case is that they will kill the inflation if they have to.
Well, when it comes to inflation and the potential concern around tariffs, what are you expecting the Fed to say? Because yes, we're waiting for April 2nd, but at the same time, 20% tariffs have gone on Chinese imports and 25% on aluminum and steel.
I think they're going to try to say nothing new. We'll see if that's where the press conferences become incredibly important, because that's where the opportunity for a slip up are. To me, they're going to keep it kind of status quo, talk about the outlook, shifting just a bit where economic growth has slowed. They'll probably talk about that being more in soft data. They may even make the comment, which I kind of disagree with, that inflation expectations remain well anchored, which I don't think that they do. But that's where I think it's going to be a lot of, can we get out of here without doing any harm and see what happens next type of a meeting.
If that's the objective, do you think that harm is all but guaranteed, Brent? Because they could come across as incredibly blasé at a time where we can all see downside risk accumulating.
If I listen to your show every morning and I hear a lot of people come on this show, I do think there's the belief that the Fed will pivot and save the day no matter what, which to me probably ties into your question. That I think if they don't offer that up during the press conference or during the meeting, that may be a little bit of a disappointment to some investors who have learned for the past 15 years to bank on the Fed to be there whenever they have to be. And that's where I don't think they're going to be as quickly as they were in the past, just because of the changing dynamics. And that's where I think you need to rely upon diversification, not Fed or Trump puts to bail you out of markets.
I'm with you, Brent. I still think it's what a lot of people are looking for tomorrow afternoon. We'll see if we get it. Brent Schutte does not think he will. Brent Schutte of Northwestern Mutual. Thank you, sir. The pain tolerance of the Trump administration, let's sit on that for a minute. It's almost as if we've forgotten what happened back in 2018. We had an ugly, ugly period for markets back in 2018, and not just equities, high yield. That December of 2018, and the Fed had a role in all of that, I know. That wasn't just about the Trump trade and what was happening with trade. It was about the Federal Reserve. But at that time, you remember, we had something like a 100 basis point widening of high yield spreads in the month of December alone. I remember the primary market, you do too, it completely seized up. No issuance whatsoever from junk issuers that month. They can take a lot of pain. They've shown that in the past. This isn't a major change from what we saw back in 18.
And if you look at some of the recent reporting out of the New York Times, they indicated that President Trump's attitude is if the market really determined political popularity, then President Biden would still be president. And that actually, if it really did determine how people felt on Main Street, we would be dealing with a very different political reality than the one where a lot of people were clamoring for change.
Equity futures right now on the S&P, negative by 1/3%. Lots to talk about. A Federal Reserve meeting concluding tomorrow. With an update on stories elsewhere, here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. NASDAQ is planning to open a regional headquarters in Dallas later this year. The location will reportedly house parts of NASDAQ's technology and financial crime management business. It's the latest push by a New York firm into Texas, which is trying to unseat the Northeast as the epicenter of U.S. business. Elsewhere, Harvard University is giving free tuition for students whose families earn $200,000 or less. That means about 86% of Americans would qualify for Harvard financial aid. The program will start in the upcoming financial academic year. Undergraduate tuition is about $57,000 a year, with more than half of students receiving financial aid. Rory McIlroy has won his second Players' Championship title in a thrilling 3-hole playoff against J.J. Spaun. McIlroy hit a timely birdie on the 16th hole, which Spaun followed with a costly triple bogey into the water. The win marks his 28th PGA Tour victory, and it moves him past Phil Mickelson on the all-time PGA Tour earnings list. And that's your brief, John.
With his B game as well. Wasn't even playing as well as he possibly could. Impressive. Danny, thank you. More from Danny later on this morning. No one round here.
I know, I was just about to say, the point where John talks to himself. I love it.
On the way out of the office yesterday, won't even look at you because he's staring at his phone. He's like, the golf's on.
I'm not even going to try and talk to you about it, all right? Up next on the program, The Morning Calls Plus. Pierre Federico of New Street Research with NVIDIA's AI conference underway. The conversation up next.
has the Fed decision under surveillance with the fastest coverage and exclusive analysis, including Powell's press conference. Nobody covers the Fed like Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
The opening about 1 hour and 14 minutes away. Equities going into that negative by 1/3%, coming off the back of 2 days of gains on the S&P 500. On the Nasdaq 100, we're softer by 0.5. That's the equity picture. Let's get you some morning calls. First up, Citi lowering its price target on FedEx to 317, noting investor sentiment is heavily skewed to the downside. That stock is down by 0.7%. Your second call from Evercore, raising its price target on Apple to 275, expecting consistent growth for the next several years. That stock just a touch softer, pretty much unchanged in the pre-market this morning. Finally, these stocks to watch at the moment. RBC lowering its price target on Tesla to 320. The firm lowering its valuations for FSD and Robotaxi. That stock is down by another 3% so far this morning. Softer yesterday. Got news from BYD as well, that essentially they can charge these cars in like 5 minutes with some great range too. So big developments coming from elsewhere.
It's two prongs of attack when it comes to the valuation story of Tesla. On one hand, you've got this question of international purchasing ability, given the fact that there have been drop-offs, particularly in European sales of Teslas. But then the other, can they remain at the vanguard of technological advancement when you have a real competitive edge coming from China?
That stock has had a phenomenal run over the last several years. It's been cratering through this month. We're down by another 3% this morning. Let's turn to another Mag 7 name. Let's talk about NVIDIA. Shares slightly lower in the pre-market ahead of CEO Jensen Huang's keynote speech at the company's developer conference. We're down by 0.5%. Pierre Ferragu of New Street has a buy rating on the stock with a $200 price target. Pierre joins us now for more. Pierre, welcome to the show. We'll get to Tesla in just a moment. Let's start with NVIDIA. What do you expect from Jensen Huang later on?
Well, from Jensen specifically this morning, I think the focus is going to be, as always, on the product roadmap. You know, what are the chips coming through? There has been like a fairly high amount of leaks, so we have good visibility. There is a Blackwell 300 that is going to start shipping towards the end of this year, whereas like the Blackwell 200 is shipping now. So you have this shrinking, you know, time between product and the next generation Rubin products. And as always, what Jensen is going to do is going to showcase on this giant screen in front of like 15,000 people, like 25,000 people even probably this year, the scale of the data centers these chips are going to power. You remember last year he presented the NVL72. It was a shock to see like a single server with 72 GPUs, with 72 like $35,000 GPUs. And we expect this year that he's going to announce like the next stage of super large cluster for very high performance inference, the NVL 288. So with 288 GPUs that are going to cost even more than $35,000, and that's probably going to come with the B300 or the Rubin architecture.
Pierre, is that enough? And I say this at a time where people are worried about the potential blockades on NVIDIA selling chips to China, on questions about technological advancements made elsewhere, and frankly, a real existential questioning of just how much the big tech players can keep spending on chips without showing some real advancements that can move the needle.
Yes, you're totally right. This is what Jensen is going to talk about. But yesterday, during the first day of the conference, that's not what people were talking about in, at the cafe and in meeting rooms and in the corridors. People are talking a lot about China, of course, and like on two fronts, like this idea of a blockade, of course, that has been lingering now for years. But there's also the question of how China is contributing to AI developments. And one of the buzzwords this year in the show is distillation. You know, how does this industry do well if Chinese players like DeepSeek can come in and produce a model that is 10 or 20 times more efficient for a similar performance to what has been developed in the US with like multi-billion-dollar data centers. So the focus is not so much on NVIDIA itself. Like, I think investors understand that NVIDIA has a very strong market position and will probably defend it, even if some of the clients are developing their own ASICs. But the question is more like people investing these now hundreds of billions of dollars in data centers, are they ever going to make a living if the Chinese can copy what they do relatively easily with smaller models. So that's really like the number one focus, I would say, of investors as much as industry practitioners on the fair today.
There's a question about whether this affects NVIDIA, but there's probably a bigger question about how this has ramifications for the likes of Apple and Tesla we were just talking about. If China truly is getting to a technologically advanced point where they can produce products that are competitive and even supersede the technological abilities of the United States products, does that engage with a new paradigm which not only threatens the sales of some of the Apple phones or Tesla cars in China, but more broadly, internationally, how does that affect the competitive landscape?
Yeah, it's not something new, to be completely honest. You know, we could have had this conversation 40 years ago about train technology. We could have had this conversation 20 years ago about car technology. And today we have this conversation about electric car technology for Tesla, chip manufacturing, and chip design, and also algorithmic design and AI development. So China has always been like a very fierce competitor. I think the key change today is that in the past, China used to leverage US and Western technology in order to be a competitor in the technology sphere. So they having access to mostly like the manufacturing technology, the IP developed in the West. And now the West is kind of like throttling access to that technology. So it's very visible on manufacturing. The Chinese can't access like the most leading edge manufacturing tools, and they're lagging behind still very much so today. We see that now with chips, where the Chinese can't access like the most advanced chips NVIDIA is producing. And now the debate is, how can we like protect our IP from the Chinese leveraging it to compete against us? And you know that in the terms and conditions of the use of ChatGPT, you can't use ChatGPT to develop a competitor to ChatGPT. And so now the question mark is, okay, can we enforce that kind of protection to protect Western-grown AI? So the way forward is that it's very, very difficult to know how things are going to evolve. It's a balancing act between keeping the market open, because of course US and Western technology companies like to sell in China, and also limiting sales to China in order to prevent China from making progress. And it's, you know, I just talked about the past 40 years. It's going to keep playing over the next 40 years, because for China to catch up on advanced chip manufacturing, for instance, we're talking about projects that are probably going to take decades. It's going to take decades for China to be able to develop their own tools and things like that. So we'll be here in a year from now still talking about it. It's not going to be an overnight change. That competition is mounting, and of course what we see is the risk of polarization of the world. Like that's what we call in our research the Silicon Wall. This idea that if the West becomes more and more protective with their technology, and China is becoming more and more like driven towards developing independent and competing technology at all levels of the supply chain, then what you'll see potentially is like this market polarizing, and China being dominant on their area of influence, and the West keeping China out of their area of dominance. That's really, one of the direction of evolution of the situation that you want to watch out for.
Pierre, it's wonderful to catch up with you. Next time you're on, we need to spend some more time on Tesla. Pierre Ferragu there of New Street Research talking about NVIDIA. Tesla, for Pierre Ferragu, still has a buy rating on the name, 465 price target. This is what Tom Narayan of RBC is looking for now, 320. So a cut to his price target, lowering its valuations for FSD and robotaxi over at Tesla. Really difficult month for that car company.
Yeah, and so far it has been driven by sales overseas and sort of the political association of Elon Musk with Tesla. But the FSD portion is really interesting, and Tom Narayan, for him to downgrade that, it's also another fundamental hit to the potential valuation.
Stock is down by 3% in the pre-market. Up next on the program, we'll talk about the economy with Stephanie Roth of Wolfe Research, and get to the bond market with James Camp of Eagle Asset Management as the Fed's two-day meeting kicks off in Washington, D.C. From New York, this is Bloomberg.
Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
The opening bout 60 minutes away. Equity futures right now negative by 0.2% on the S&P 500. On the Nasdaq 100, a little bit softer as well. We're down by 0.4%. With 1 hour until the cash open, let's get you some morning movers with Yahara Hacker. Say, Yahara.
Hi, John. We start with a big mover here, and that is Backed, cratering 36% in the pre-market. This is a crypto exchange and custody firm that just lost two of its biggest partners. Bank of America and Webull have decided not to renew agreements with the company. And on top of this bad news, the company is also delaying its annual report. Next up, we have shares of PepsiCo. Those are falling more than 1% after Barclays downgraded the stock, saying that PepsiCo's ability to re-rate higher depends on its U.S. snacking business. And right now, the analyst says there remains a heavy lift to shore up that segment of its business. And because of that and some macro uncertainties, they are taking a cautious stance on the stock for now. And last up, we have Li Auto. This is a Chinese EV maker listed here in the U.S. It could be getting a lift on that BYD news, but it also presented at NVIDIA's AI conference, unveiling a new autonomous driving framework that it says has human-like capabilities. And all eyes will stay on that conference, of course, with Jensen Huang set to speak later today. John?
The hits keep coming for Tesla, that's for sure. Yahara, thank you. Appreciate it. That's the latest on the stock front. The Fed's two-day meeting kicking off later on today. The rate decision coming tomorrow at 2 p.m. Eastern Time, followed by Chairman Powell's news conference a little bit after that, 2:30. Mike McKee, our economic and policy correspondent, joins us now for more. Mike, what's the big focus for you and everybody else going down to Washington tomorrow?
How fast they can get out of Washington after the meeting is probably the focus for the Fed at this point. With no news yet on the tariffs, there's not much they can do. So they're not going to change their monetary policy. They're not going to change their dot plot, and they're probably not going to change the economic survey very much at all at this point. We do have a couple of additional numbers this morning. Housing starts up 11.2% after falling 11.5% the month before. So that industry fairly flat at the moment. Building permits were down 1.2%. Then we get the import price index, and the import price index is up 0.4, with passenger fares rising 3.4%. That is one of the last inputs into PCE. PCE expected to come in higher at the end of the month, so another reason for the Fed to just stay on hold.
And get out of that meeting as soon as they can. Let's see if it's that easy. Mike, appreciate it, sir. Michael McKee there. We'll be down in Washington for us tomorrow afternoon in that news conference with Chairman Powell. Stephanie Roth of Wolfe Research joins us now. She says Washington is shaking up her economic forecast, writing, "We revised down our U.S. growth forecast from 2.2% to 1.6% on the back of 3 surprises out of the White House: DOGE cuts, early tariff implementation, and economic uncertainty." Stephanie joins us now for more. Stephanie, good morning.
Good morning.
That is quite a cut to GDP growth from 2.2 to 1.6. Is the Federal Reserve easing in that world or standing pat?
In that world, they are, but they're not easing for good reasons. They're easing because growth is weakening, and then they have to respond. But that's not something that they're going to put into their forecasts right now. Our base case is that they're going to call for 2 cuts in their dot plot, and will try to get out of that meeting as quickly as possible, as you said.
How much can they really signal that they can provide some sort of ballast at a time when people think some sort of economic downturn that induces job loss has a sort of prolonged scarring effect on the economy?
I think they'll say what they typically say is they're going to respond to the data, and if the data weaken, then of course they're going to respond, but they can't really promise that much more in advance, especially because this is an environment where they're likely to take down their growth numbers tomorrow, but they're likely to take up their inflation numbers. So this is a really difficult environment for them because they're going to have to wait until unemployment rate starts to rise more materially for them to actually be able to cut, as opposed to the idea of them being able to cut because inflation is low.
You know, I'm always struck by sort of the mass moves on Wall Street. Everyone seems to be downgrading their growth expectation to the U.S., for the U.S. GDP over the past couple of weeks. And part of it is this belief that this uncertainty isn't going to go away and that tariffs are here to stay. Is there anything that could make you revise it back? Is there any kind of caveat to that you're waiting for?
Yeah, so the April 2nd deadline is a big one. So this is where we're expected to get the sectoral tariff information as well as reciprocal tariffs. Our base case is that he'll do something country by country and he won't incorporate a significant VAT. But if he does just that, then at least that's a positive sign. And if he doesn't do some significant thing on the sectoral side, then that provides a little bit less of a GDP headwind than we were forecasting. But base case is he's not going to go light on that day. He's been talking about tariffs in a big way. He wants to do the sectoral things. He believes that that's going to help U.S. manufacturing and wants some right-size trade from a country-by-country perspective and has been talking about VAT. If they incorporate VAT, that could be a 1.4% GDP headwind. In addition to all the sort of the negative numbers that we've talked about.
You think that April 2nd is a key risk event that investors aren't paying enough attention to? We have reporting that Jameson Greer, President Trump's new USTR chief, is trying to really drive the narrative when it comes to April 2nd. This is someone who is a thoughtful trade lawyer. He's pretty calm, cool, collective compared to some other individuals, let's say, in the Trump orbit. Does that make you more encouraged about what we can see?
I mean, I think it all comes down to what Trump wants to do. Trump believes that the tariffs are going to be beneficial. He's going to do what he wants to do. And if that means doing sectoral tariffs, which, fine, there's arguments to do it, and country by country, that's fair. But what we've gotten so far has been a substantial headwind on GDP. And that's fine if this is the direction of travel. It's just a negative GDP shock. And 1.6 growth is, you know, if we end up with that, that would be a decent scenario, realistically.
At the end of the day, Trump will make the decision. It's an individual that's been speaking about tariffs since the 1980s, let alone before he entered politics. If that's the case, and it's such a hit to GDP, what does the Fed look like? The one-time inflationary shock of tariffs or actually growth slowing?
So back in 2018, if you look back to their teal book, they said there were two scenarios that they could go about this. One would be exactly what they did, was looking through the tariffs. They ultimately cut because it hurt growth. Scenario two is where they have to hike and cause a recession. And the deciding factor between the two is inflation expectations. So this is going to be the main thing that they're going to be looking at, is if inflation expectations stay anchored. And as of now, it's a little bit mixed. Some of the surveys are showing them ticking up. Some of them are a little bit more noisy than others. So this is going to be the main thing. If inflation expectations and people feel okay about the inflation backdrop, then the Fed can look through it and ultimately cut as a result. If not, their plain threshold is going to be a lot higher in order to do so. The main driver of inflation expectations, at least over the long term, is past inflation. So this is different than where we were in 2018, because 2018, people don't really remember inflation. Most investors didn't really experience it. This time is very different. Our inflation expectations over the past 10 years have been shaped over the COVID pandemic, where it's been a different backdrop. So expectations might react differently this time, plus the tariffs are likely to be a lot bigger.
So let's go through the SEP. Let's look at this, and if you could get the mic up, and hopefully that's up. Is that on? The mic's died, apparently. So
okay. We were talking about the statement of economic projections and whether they'll signal a greater willingness to look at the weakness in growth versus something that we have seen with inflation expectations. How much do you see sort of an increase in worries about inflation at the same time of potential weakness?
Yeah, so there's a couple things that are going to be interesting. One, what do they do with their GDP forecast for 2025? What do they do with inflation? What do they do with the Fed funds rate at the end of the year? So base case is they take down their GDP something like 1.8, take up inflation to something like 2.7. And then what we're going to look for is within the SEP, you're going to see the risks around growth and inflation, and they're both going to be to higher inflation and lower growth. So that's a backdrop where, you know, it's a very tough situation for them. And right now, I think they're probably going to keep the two cuts and kind of see how this plays out. ultimately they'll probably be, forced to cut a little bit more than, what's in the dots.
I keep getting struck by what Tom Becker of BlackRock said, which I thought was really interesting. This idea that everyone's exceptional in this new era where fiscal spending is taking off in places like Europe and places like China, at the same time that, on the margins, fiscal restraint in the U.S., but not really later on, where you're going to get further fiscal expansion as well. How much are you looking at a structural shift upward in inflation globally that's going to also rebound on the United States in a new way with a lot of debt sloshing around and a lot of debt-financed funding?
You know what? If it all plays out the way we're sort of forecasting for this year, you're going to end up with a Fed funds rate that was lower than would otherwise be the case. That is, we have a material slowdown in the economy because, it's more about growth and inflation, and then you ultimately have lower rates as a result. So I don't necessarily believe in this big structural shift up in inflation. Temporarily, of course, because of tariffs and some of the fiscal. Perhaps you'll run slightly above 2%, but I don't think we're talking about anything 2.5% to 3%.
They're so stealth here. New batteries in the mic pack. Not sure why that happened. Stephanie, I apologise. Had lots to ask. We'll save it for another time. Stephanie, appreciate it. Stephanie Roth there of Wolf Research. I want to get back to Mike McKee. Mike McKee, we had some economic data moments ago. For people just tuning in, Canada, inflation, not something we usually talk about. Let's get to it. Big upside surprise.
Big upside surprise. Last month, inflation was up just, this is CPI inflation in Canada, just up 0.1%. This month, up 1.1%. However, there is an explanation. The federal government had a sales tax holiday through half of the month, and when that came off, that pushed the rest of the prices up. And of course, the hangover from the previous month kept part of it lower. So year over year, inflation comes in up 2.6%, would have been 3% without the sales tax holiday. The inflation problem in Canada, much like in the U.S., it's housing. But the Canadian central bank cut rates again last week, 7th time in a row. So they're going to have to think about it again now when they meet on April 16th.
Mike McKee, certain central banks, including Canada, Lisa mentioned this in the last week, have tackled the policy uncertainty head on. They've said what it could do to the economy, and they've signaled how they might respond to it. We've seen something similar from the ECB President Christine Lagarde. She's been able to talk about the data in a way that maybe Chairman Powell has not. We have seen a subtle shift from Powell, though, in the last month, where he's begun to talk about various issues with the policy and what it might mean for their policies going forward from now. Do you expect him to be even more transparent and blunt about things tomorrow afternoon?
I don't really, John, and the reason is the Fed is in what it considers a pretty good place at this point. They are somewhat divided over where neutral is, but they're not that far from it. And with inflation being a little bit higher on the PCE numbers coming in at the end of the month, they can justify just staying where they are and saying, we don't know what the impact of the tariffs is going to be. We can model out a lot of things, but we don't know what the impact is going to be because we're putting on these tariffs. Our economy is also a lot bigger than the other countries. So the Fed is probably going to just try to stay out of it as much as possible and then try to measure what happens, which is why you see markets pushing out any kind of a rate move until the fall.
Mike, appreciate it. Mike McKee breaking down the economic data out of Canada, what that might mean for that central bank. And the bigger picture tomorrow, Chairman Powell in that news conference. James Kemp of Eagle Asset Management joins us now for more. James, good morning. Good to see you.
Good morning, John. Good morning, everybody.
What are you expecting from the Fed chair tomorrow afternoon? Let's start there.
I think this is one of the more interesting moments for the Fed in my career, and I say that because I don't suspect Jerome Powell approves of policy. He had an economy that was moving at or close to potential before the events, post-election, post-inauguration, I should say. He had inflation trending the right way, and now he's got this uncertainty that he has to deal with. So I think what will be interesting about the news conference is, does he talk about things like independence? Does he talk about working with Treasury? And we've got a debt issuance calendar that's going to pick up here pretty aggressively. And there typically was a pretty good relationship between Treasury and the Fed. I suspect some of that is splintered. So I'm interested more in his context, more of the feel of his language. Probably nothing on the rate front, probably till May or June. You do have a window here where inflation is going to be better. It's going to be more benign prints for a month or two. So if they're inclined, they've got a May-June time frame. Thereafter, I think the inflation story is prohibitive.
So Secretary Bessent sat in your seat. Let's talk about the debt market first. And we were interested at the time as to whether the Treasury would extend duration, issue more debt at the longer end of the curve. And one thing he said in his response was that he didn't want to compete with the Federal Reserve, who was still engaged in QT. What happens with QT?
I think it slows. I think there's a realization that these tariffs are going to slow growth. Perhaps we already had a negative print because of the import-export. I think Bissett is absolutely the key to this administration. And how he behaves and how he manages the debt, which is increasing, will continue to increase despite what I would call performative measures in headcount. And he is going to have to structure the term structure of interest rates so that we can absorb both domestically and internationally a heavy debt burden. So I look at him as key. I feel, these are opinions of mine, that he's been stilted and awkward in his responses. I think it's an uncomfortable place to be a Treasury Secretary juxtaposed against policy right now.
To John's point, some people have speculated that we could get an announcement of a slowing of quantitative tightening at this week's meeting, possibly as soon as tomorrow. If they don't signal some sort of wrapping up or ending of that program where they allow treasuries to roll off and not repurchase them, do you think that will be a signal that they're at odds in some ways with the Treasury Department?
Absolutely, and I think that's a great insight, Lisa, because I do think you'll get some relaxation, but if that were not the case, it just adds to me to the long-term pressure on longer-term yields. I do think the Fed would like to see some slope in the curve, and let's just talk about what that means. The banks are underwater at the regional level. Loan growth in small business has been stymied because of the yield curve. I think the Fed ideally would be a 350 funds rate and a 450 10-year, but I don't think the events of the day are going to allow that kind of nice configuration to play out as theoretically we might see.
Which raises this issue of if the Fed were to cut rates in the near term, would that lead to another rise in long-term rates at a time when we have inflation ticking up in Canada, albeit for specific reasons having to do with the sales tax holiday being ended, but also fiscal spending around the world?
It's our belief that the long-term pressure on interest rates is to the higher side because of the issues that you espouse. It's our belief that inflation is structural, not transitory. I think we've proven that. We'll get through a couple of relatively easy months with the inflation print, but then it accelerates. It reaccelerates because of math, because of owner's equivalent rent, the other things that are died in the economic machine, if you will. And kind of like we talked about in September when I mentioned the 50 basis point cut, we kind of got that. It was maybe a little more fun but the idea was there's going to be narrow windows for the Fed to normalize. The fall was one. This period is one, and thereafter, I think they're back to the inflation fight. And the policy moves of this administration don't quell the concerns of inflation. If you look around inflation means, they're anchored. If you look around inflation volatility and the deviations around those means, they're as wide as I've ever seen.
Is that because of tariffs?
It predated the tariff moves, but I think we don't know what this economy post-COVID really is going to look like. I think we're still wrestling with labor market dynamics. We're still wrestling with onshoring, nearshoring, supply chain. We're still wrestling and the unleashing of pricing power at the producer level. So what I tell clients about interest rates is unanchor yourself from the financial crisis to COVID. Just take that away. That's the moment in economic history that won't be relived. This is more normal. 2.5% inflation rate, a treasury rate with a 4.5% yield, income markets being more balanced relative to risk in equity markets. It feels abnormal because of the anchoring to the pre-COVID period.
I'd love to pick up on one point you made, performative cuts. Are you talking about, is that a translation for Elon Musk and Doge?
It is, and my belief, and I grew up in the D.C. area, I've seen the footprint, I know what's happened in the Washington area, but head count doesn't get us there. It's just math.
But do you think they're making it more efficient?
No, categorically no. Efficiency requires work. Efficiency requires what Bill Clinton did with Congress in the 80s, where you cut 170,000 jobs, but you did it judiciously. This is getting attention. There are probably agencies that had a political disagreement with the administration, but if you just do the math of 10% of the federal workforce and you give them $100,000 jobs, you got $23 billion in savings. We've got multi-trillion-dollar debts.
We've got a lot of work to do, that's for sure. James, appreciate your time, sir. To break it down, James Camp there of Eagle Asset Management. We've got to talk about a big deal in the tech world as well. Let's get to your Bloomberg brief with Danny Berger for more. Hey, Danny.
Yeah, breaking news on that deal. It is official, John. Alphabet is buying cloud security company Wiz for $32 billion in an all-cash deal. It is Alphabet's biggest acquisition to date. Wiz will help boost Google Cloud security offerings and help it compete against Amazon and Microsoft. Elsewhere, President Trump has promised to overhaul the Kennedy Center and accused prior leadership of improper spending. Trump said that the center will host Les Mis instead of Hamilton, which he said he never liked anyway. The president plans to ask Congress for additional funding to, quote, save this structure. And after 9 long months in space, 2 NASA astronauts are finally heading home. Butch Wilmore and Suni Williams departed the International Space Station aboard a SpaceX Dragon capsule at 1:05 a.m. ET. That started a 17-hour trip to Earth. The astronauts are due to splash down along the Florida coast around 6 o'clock this evening. That's your Bloomberg Brief. John.
Hey, Danny, thank you. Thanks for this morning. Up next on the program, we'll set you up for the day ahead and get you the latest on that big tech deal from Alphabet. Live from New York City, this is Bloomberg.
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because, being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics of the math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take 2 numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
The opening about 38 minutes away, with equities declining 1/3 of 1% on the S&P, down 1/2 of 1% on the Nasdaq 100. Your trading diary looks like this. Interesting couple of days coming up. This morning, President Trump speaking with Russian President Vladimir Putin. Overnight, a BOJ rate decision tomorrow at 2 p.m. Eastern. The Fed rate decision followed by Chairman Powell news conference. On Thursday, it's the Bank of England's turn, plus we'll get another round of jobless claims and another read on consumer spending with earnings from Nike and FedEx after the closing bell. That call set to take place a little bit later this morning, potentially in the next 10 minutes or so. Bloomberg's Tyler Kendall joins us now from the White House with more. Tyler, set it up. What are you looking for over the next few hours from this phone call?
Well, John, I actually had the chance to catch up with Treasury Secretary Scott Bessent here on the White House North Lawn last hour, and I asked him how the U.S. is using its economic might going into this call when it comes to sanctions and potentially opening up Western financial markets, and he said at this point it is all, quote, path dependent. That is how high stakes this call is going to be. He told another media outlet in an interview this morning that President Trump has authorized him to ramp up sanctions from a level 6 to a level 10 if that's what it would take to get Russia to the negotiating table. Our Bloomberg News reporting that Russia could slow roll these negotiations after a headline broke this morning that Putin is looking for all military weapon flows to halt going into the country. Sources familiar tell Bloomberg News that at a minimum, Putin would like to see the U.S. stop those weapon flows. It remains to be seen if that's something that this White House would commit to. After just last week, it lifted its own halt on military assistance and intelligence sharing to Ukraine after they did agree to that 30-day ceasefire.
Tyler, thank you. Tyler Kendall in Washington on a phone call set to take place between the Russian and U.S. leaders. Later on this morning, we also want Washington's reaction to this one. Announced just moments ago, widely expected, reported overnight, dropped 24 minutes ago, that Alphabet has agreed to acquire cybersecurity firm Wiz Inc. for $32 billion in an all-cash deal. Where will Washington stand on that one?
Well, it's a good question, right? Because what have we been hearing? That this administration is kind of following the same tact as we saw from the previous administration when it comes to making sure that big tech is really working within guardrails and there's no concerns on antitrust. But potentially, this looked like this might actually go through. I think the deal is there, but it really depends on if there's going to be any antitrust concerns.
Number 3 player, I believe, in the cloud business. They've got Amazon and Microsoft in front of them. I imagine that's the argument they're going to make as the number 3 player, that we've got to compete with the other two when the other two are bigger than us. Whether that works in Washington, I've got no idea what works in Washington.
We've gotten conflicting signals. To put in some numbers on this, it's $32 billion in cash, as you said. It would potentially join the Google Cloud business, and it would give those cybersecurity tools to customers to try to compete better with rivals. Question about what kind of antitrust business they're trying to prevent, right? It's one thing to say there are other cloud providers. It's another thing to say that they're going to own the cybersecurity world in a way that they wouldn't otherwise be able to. So this is an interesting moment and the first inorganic deal that Google has done in a long time.
Caroline Hyde and the Bloomberg technology team on top of the story later on this morning, of course. I believe at about 11 o'clock Eastern time. Later this morning on Bloomberg TV, Alphabet shares in a pre-market, not doing much, negative by 0.06%. Tomorrow, it's all about one thing. It's the Federal Reserve, and our lineup looks like this. Sebastian Page of T. Rowe Price. We'll speak to Mohammed Al-Aaron of Queen's College, Cambridge, the former Kansas City Fed President Esther George, Gagi Chowdhury of BlackRock, and a whole lot more. And special coverage of that Fed decision starts at about 1:30 Eastern time tomorrow afternoon. The decision's at 2, the news conference 30 minutes later.
Which might be the most interesting part, when you have to hear Jay Powell respond to plans that actually are out there. You can't just say, we don't know what the plans are. The plans are available to us to some degree. So how does he parse that inflation versus growth?
The plans are fluid. The policy's volatile. I don't know what's going to happen.
Is that what you're going to say? You're channeling Jay Powell?
I've got no idea what
do you think the market would do if you did that?
This is what I think.
Fluid.
Good luck. From New York City this morning, good morning. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
In 2015, I was not optimistic because nobody was working on the hard problems. The energy R&D budgets had gone down. The venture investing in climate had gone down. It was completely out of fashion. So I don't know what people are optimistic about then. The fact is, we built essentially from scratch, with lots of supporters, a really mind-blowing level of innovation against emissions. And in the last 9 years, that's gone better than I would have expected. So only now could you even, plausibly be optimistic about the path of emissions. And someone who said, hey, nobody's ever scaled things up like this speed that we knew to before, they're welcome to say, hey, I'll believe this when I see it. You know, in the meantime, some people who care about this issue are really out, you know, trying to think, do we need permitting reform? You know, do we find, what new ideas haven't we found yet? You know, how do we fund people with those new ideas? How do we get the costs of these things down? How do we collaborate on a global basis? So we're still not at the point where it's guaranteed or even that it'll be easy, but at least there's a theory of change.
What about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that, other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Futures down on concerns about the economy and the geopolitical situation. 30 minutes until the start of the cash trade. I'm Matt Miller.
And I'm Shonali Bassett. Katie Reifeld is off today, and Bloomberg Open Interest starts right now.
Coming up, Google's biggest deal ever. The tech giant buys cloud security firm Wiz for $32 billion in an all-cash deal. And peak U.S. exceptionalism? Bank America's latest survey shows investors slashed exposure to U.S. equities by the most on record in recent weeks. Meanwhile, on the geopolitical front, investors are watching what emerges from President Trump's call this morning with Russian leader Vladimir Putin, and we've got a re-invasion of Gaza. Let's take a look at where markets are trading this morning. You see futures down, and they're moving further down. We were positive around 4 a.m., but have been deteriorating ever since. Off 0.5%. NASDAQ futures off 0.7%. And we're very focused on what's going on today in the tech sector. You can see the 10-year yield still holding right there at 431.60, so no change from that 430 level that Shonali's been watching. Some of the stocks that I'm keeping an eye on this morning are, well, they're all tech stocks. Investors hoping to get answers about the direction NVIDIA is headed as competitors catch up to its dominance in AI. That's the concern, right? CEO Jensen Huang is going to try and convince you otherwise when he speaks at 1 p.m. Eastern. We'll bring you all the breaking news from that. Shonali?
Yeah, very much excited to see what he says. Excited to break this down throughout the course of the show with you. Also excited to break down exactly what's happening here. Alphabet shares. This is the parent of Google. They're spending, as we've been talking about, $32 billion in cash to take over cloud security company Wiz. This has been a dramatic story for the past year. Alphabet shares, though, now down about 0.3% pre-market. There's some doubt that's baked in here, uncertainty. And speaking of uncertainty, there's also uncertainty around growth, and that's continuing to weigh on market sentiment. Here is what we've heard from some of the top guests on Bloomberg Into the Trade.
Unless the Fed does something tomorrow, which they might, but I don't think they will, when we see a real change in messaging, I think we resume the sell-off, and I think we're going to head to bear market territory down at least 20%.
As long as the economy grows at 1%, credit markets are dancing and singing, having a great time. Meanwhile, equity markets are suffering, and they're not going to show a lot of appreciation, going to show a lot of volatility through this transition period. So I think credit is the place to be. It's the golden era of credit.
There is a fundamental rethinking of everything in relation to investing in the U.S. or being exposed to U.S. Just because the U.S. today is a fundamental different environment than the U.S. 1 year ago.
It's been a perfect mix for taking capital outside of the U.S.
All right, great to hear from Bruce Richards there on credit, but we're so focused on equities ahead of the open this morning, Shanali, and the Bank America survey I found pretty shocking, right? You found U.S. exposure, they found U.S. exposure dropped 40 points to 23% underweight. Obviously, everyone's getting overweight European stocks, but it's the cash levels that surprised me the most. They've risen to 4.1% from 3.5%. That's the biggest jump since 2020.
Cash is king still, and you also have to wonder whether people are just waiting to know what that bottom is. We've been talking about it. It is ephemeral. No one knows exactly what that moment is to deploy that cash. Another note that Yardeni put out, Ed Yardeni, I've been watching him very closely because he's pointing out now that foreign investors, not just U.S. investors that have obviously been burned, foreign investors start to pull out of the U.S., particularly because of their overweight exposure to certain stocks, Tesla, NVIDIA.
Yeah, huge underweight on those stocks. There are a lot of shorts we're going to talk about later on the Wall Street beat, what hedge funds are doing, how they're making money. One of the few places that they're making money is shorting Tesla. Let's get back to the Google story, though. $32 billion in cash to buy the cloud security company Wiz. This is their second go-round, at least. Bloomberg Intelligence senior analyst Mandeep Singh is here. Mandeep, we were talking to you about this last year when it was a $23 billion offer and Wiz walked away. What's changed? Is it just $9 billion more?
Yeah, and also when you look at it from a Google standpoint, they, I think, need to diversify all the more given the pressure on the consumer side. And look, there is a pending DOJ case against breaking up Chrome. So there is a lot going on in terms of their consumer side of the business. Cloud is what's worked for them. If you look at, the whole AI wave, it's added almost, 10 percentage points of growth to their cloud business, which is a $50 billion run rate business. And security could be additional when it comes to, the enterprise side that Google has, which is much smaller compared to a Microsoft.
Truly, one of the biggest concerns in the market is, does this get past antitrust? I think this administration has come down harder. People look at HP for an example to see how things have gone. There's that report overnight. We'll talk about it. Capital One Discover as well. A little bit of concern there. Does Google have a clear path here?
I don't think there is any clear path here, but at the same time, when you look at Google as an overall entity, I mean, consumer side is still more than 80% of the business. And so from that perspective, cloud is still, 12 to 13% of total revenue. And I could argue they have very low exposure in security, so they're not stifling the competition. There are a number of pure play players, and the antitrust argument is weak, but you never know. Like you said, with HP, Juniper, we saw that, and there's always a concern when it comes to the antitrust.
Well, we heard from Andrew Ferguson yesterday, right? The new FTC boss. I think you talked to Caroline Hyde on Bloomberg Technology, and he was saying they want to get out of the way. Unless there are, rules being broken, unless there are laws they need to enforce, they want to get out of the way. So I'm sure you saw that.
Could be other regulators too. So it's not just U.S. regulators. I mean, this deal needs to be approved by EU. I don't know if it needs China approval, but there are other regulators that could stop the deal as well.
Yeah, we'll talk more about deals in just a moment. I want to shift gears. I want to talk about NVIDIA. Another big moment for Jensen Huang. Of course, a lot of negativity around this stock into this year. Can he shake off investor concerns around tariffs? How exactly do tariffs start to eat into NVIDIA's performance?
Absolutely. And look, even this Google deal, I would say, Google is one of their 4 top customers that contribute to 45% of the revenue. If Google is spending more cash, $32 billion in cash on buying a company, what does it do to their CapEx going forward? Because in the end, it's that same bucket which is being allocated to CapEx and M&A. So to my mind, all the hyperscalers are getting more prudent when it comes to, the CapEx plus OpEx and how it ties to revenue generation. And it's no more upfront spending on, building infrastructure, at least to the extent we have seen in the last 12 months. So that in itself is a sort of a bearish argument that you're not going to see the sort of lifts we have seen from these hyperscalers around the CapEx side in the last 12 months.
You ask him about his previous research, because I know you were reading back through Mandeep's old stuff.
I was. And you made this amazing point about how if SailPoint went through and was able to successfully IPO, then it would set the stage for Wiz. And the reality of it, yes, they made it to market, but it's been a really choppy trade in SailPoint. They actually were down the day they IPO'd. Was there a path? And frankly, Wiz is a giant in the room here. Was there really a path for other companies like this to IPO? I actually think this deal in some ways is pretty negative for companies that are not Wiz.
Well, so look at the growth of this company.
What was Palo Alto? Yeah.
So, I mean, Wiz, I guess, allure here is they are doubling their revenue from, 500 million to $1 billion AR. There are no other security companies like that, so that's why Google seems to be paying up. But SailPoint, when they went public, it was a pretty high multiple. So you really have to look at the multiple with respect to the growth prospects. And in this case, it looks like Google feels this is a company that is the fastest growing cybersecurity company out there. And that's why they're paying up to buy this asset.
Mandeep, we are so grateful to have your analysis here. That is Mandeep Singh of Bloomberg Intelligence. And of course, what a day. We have this deal. We have NVIDIA. I want to pull up something for you, Matt. I want to blow your mind a little bit here.
Okay, I'm ready.
I want to pull up exactly what's been happening in another deal, Capital One Discover, because when Trump won the election, you saw Capital One and Discover just soar on the heels of that news. And if you look at a one-year chart, you can see that they've erased almost all their gains. They're both up about 2% since the election still. Just look at that Trump bump that they had. Yeah. Now, with more doubt over this deal, that investor optimism has been pulled out. Remember, merger arb, event-driven funds, they have been a hot trade in this market. Anastasia Amoroso is an interesting person that has been suggesting event-driven would be one of the hottest strategies of the year, for example. But we're not seeing it. There's a lot of doubt out there. Let's see if Google gets done.
We need to cut some sound from that Andrew Ferguson interview. And we'll bring you that sound as soon as we do, because I think it's fascinating that he wants to get out of the way, he says, but as Mandeep points out, there are other regulators outside of the U.S. as well. Of course, we are watching very closely. Futures here down right now. You can see S&P futures off 0.4%. NASDAQ futures down 0.6%. This is something that could turn around. At 1 p.m., don't forget, we hear from Jensen Huang, the CEO of NVIDIA. He's pulled rabbits out of hats in the past, and he could do it again today at NVIDIA's GTC, the GPU tech conference that they have. So we're going to be watching closely shares of NVIDIA, but also shares of a lot of electric car makers that, NVIDIA has made partnerships with, could announce new partnerships with. We're going to be watching shares of all of their competitors, which tend to move. You'll watch the SOX index, I'm sure.
Yeah, absolutely. And I'm just fascinated. You and I have been watching. We walked in yesterday. NVIDIA, there was optimism around this moment for Jensen Huang. But then you saw the trade really turn around. You saw NVIDIA down about 1% yesterday. It's down another 1% pre-market today. Yep. Tesla also, which Morgan Stanley expected to maybe benefit from what NVIDIA had to say, down another 4% today. Can Jensen Huang bring positivity into this market, let alone
maybe
his
not
stock?
for Tesla, right? I mean, it's so interesting that these two stocks are so connected because Tesla's a car maker, right? NVIDIA makes artificial intelligence chips, but obviously Tesla wants to pivot. Their valuation is far higher than any other car maker in the world. So investors expect AI. They expect apparently humanoid robots out of Tesla.
Which I'm most excited about.
And they're going to need chips for that. So we're watching NVIDIA very closely today and everything around it as well. 20 minutes until the opening bell. Less than that, Victoria Fernandez of Crossmark Global joins us here in the studio. We got her out of Texas. And Vladimir Putin wants Trump to stop sending arms to Ukraine. More on those ceasefire talks and the assets they'll be divvying up next. This is Open Interest.
It's the world's second-largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Behind the bright lights and adrenaline of pro sports is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, but we can't say that in Bloomberg.
Maybe moxie?
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're the asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. No, nobody does that. They say, let's talk about the team.
And so many more.
You need a clap?
No, I never.
Go.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Let's get now to high interest. Look at what's making headlines around the world. The stock market's recent chaotic run is unleashing a windfall for equities traders on Wall Street. JP Morgan is on track to boost revenue from equities trading by more than 30% this quarter from a year earlier. If that trend keeps up, the bank could blow past its record of $3.3 billion set 4 years ago. German lawmakers are debating a plan to release defense spending from debt restrictions and set up a 500 billion euro fund for infrastructure investment. Germany's Chancellor in waiting, Friedrich Merz, called the package a first great step towards the broad European defense community. German bunds have risen since reports of a potential fiscal boost to the German economy that began in the wake of last month's election. We're expecting an outcome, by the way, of that vote shortly, and we're going to be following it for you. You can see German bunds falling today and yields up. Bloomberg has learned that Russian President Vladimir Putin is demanding a suspension of all weapons deliveries to Ukraine during any ceasefire proposed by President Trump. The two leaders are set to speak by phone sometime in the next 2 hours about ending the war in Ukraine, at least temporarily. A key objective of those talks is the 30-day truce that Kiev has already said it's ready to accept. Shonali?
And Matt, we're going to look at some of the stocks impacted by that Ukraine news. Of course, a lot of geopolitical uncertainty. So we're going to take a look at Lockheed Martin, RTX, Northrop, General Dynamics. It's interesting to see the disparity in the trade as well. Remember, some of this is valuation. Lockheed has been inching higher throughout the year, but still down on the year. RTX, though, up 14% this year. This has been somewhat of a darling when people have been looking at the defense stocks. So a lot of uncertainty, like I've been saying. But the thing about this is these geopolitical conflicts are now being fought on a different stage. People are looking more and more to companies like Palantir and other types of heavy tech companies as well when they think about defense.
Yeah, and especially European companies, right? Because when you expected the U.S. to be funding all of this, they were obviously spending money here at home. Now that it looks like Germany may unlock 500 billion euros in spending, and that its EU counterparts may also start to spend hundreds of billions of dollars more on defense, they're likely to do it on the continent. So you see Rheinmetall up right now 2 3/4%. ThyssenKrupp right now up almost 10% on the day this is. Leonardo up more than 1%. BAE Systems down, but these stocks have been soaring, outperforming any other group in Europe year to date, outperforming the S&P, and I see a smirk.
No, well, yes, because I'm taking a page out of your playbook. I'm looking at the price to earnings ratio. Rheinmetall was up to 65 price to earnings right now as a ratio. You have actually RTX trading at less than that. So I think that that's really fascinating to show you just how investors feel about the European defense trade versus the U.S. one.
Yeah, it's a huge, by the way, if you check out CHRT, and this week it's going to work. So if you're sitting at home in front of your Bloomberg or perhaps at the office and type CHRT Go, you're going to find a wealth of charts in the Bloomberg terminal. There are some great ones on the defense sector as well. Here's a great overview. You can filter through these, which I love because it's so searchable, and you can just see the incredible outperformance of European defense stocks. Let's take a look at the broader indexes ahead of the open. We have 12 minutes to go, and you can see that S&P futures are still down. Futures are down really across the board. We had industrial production out a few minutes ago, and we saw that it was up 0.7% month over month. That's better than the estimate, which was for 0.2%. And this is one of those numbers that President Trump wants to see go higher and higher. Nonetheless, it's having little effect on stocks today. And I thought it was interesting in the Bank of America note, Michael Hartnett said, in order for the S&P to get back to 6,000, you need to have kind of a ceasefire in the trade war, and you need to have inflation expectations come back down. They've been ramped up, obviously, in the University of Michigan survey, and the trade war, it's on full blast,
Full
at least
blast.
until April 2nd.
Yeah, it makes April 2nd a big day to watch. Also, just to point out what you've been trying to say for the last couple of days, Tesla, MicroStrategy, these are some of the biggest moves on the downside pre-market, which is going to signal some pain no matter what for the NASDAQ 100 in the open. We have been turning lower, and those are some of the stocks that are weighing on it right now.
Yeah, of course, NVIDIA could turn all that around, and we're looking forward to Jensen Huang's speech at 1 o'clock. Coming up, we have 10 minutes to go until the markets open. We're going to talk with Crossmark Chief Market Strategist Victoria Fernandez about what she thinks. Is this a buying opportunity, or do you need to hold tight until you see the whites of their eyes? This is Open Interest.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Versace in Davos, Switzerland, and this is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern. Only on Bloomberg. Context changes everything. From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
this is Bloomberg Open Interest. Let's take a look at what's going on with futures ahead of the opening bell. You can see that they're down across the board. Even after that better than expected industrial production number that we got out, there are real concerns about the geopolitical situation as Israel reinvades Gaza, as Vladimir Putin asks Donald Trump to stop sending weapons to Ukraine, and also really concerned about tech stocks in general. Shanali pointed out, tech stocks down across the board, and ahead of this Jensen Huang speech, I guess if you're a courageous dip buyer, this would be the time to buy.
We're going to find where those dip buyers are because, to your point, geopolitical overhangs really weighing on the market at the moment. A lot of scary headlines that are on the top of read right now on your terminals, but also, can Jensen Huang save the day? We're going to find out the answers to those questions. We're going to bring in now Crossmark Global Investment Chief Market Strategist Victoria Fernandez. And it's kind of hard to think that tech could save the day in this particular market. I mean, Jensen Huang, of course, is a massive moment in this market, but at the same time, there are a lot of fears that are kind of overhanging the ability for people to buy this dip. What is your biggest concern at the moment?
Yeah, so I think we're looking at the consumer and their concerns around growth and how that's going to really lead to some stalling in this economy. And so that's my concern, because I think that feeds on itself and starts flowing through. Obviously, tech had been the savior for quite a while, and that's come back, and we're looking for that breadth in the market. Friday was a good start, 9-1 on advances versus decliners. Yesterday was not quite as good, plus 5-1. But we really need to see some strength coming. And I think until the consumer feels better and until we get out of the uncertainty around tariffs, we're not going to see that.
I had actually written down 3 bullet points that Shanali liked earlier. So I'll go through them again on the consumer. 12-month checking and savings balances declined across all income levels. That's over the last 12 months. Back to 2019 levels. Wage growth slowed for all income groups over the past year. That's according to data from the Atlanta Fed. Americans' inflation-adjusted debt is rising past pre-pandemic levels. So even though we have unemployment at 4.1% right now, the consumer does not look strong at all.
No, there's a lot of weakness there, and I think the key word, Matt, that you said there was all. It's all income groups that we're seeing this. For the longest time, we saw struggles for low and middle income consumers. High income consumers were really kind of driving everything and supporting the economy because they were still spending. Now we're seeing the issues across the board. You're seeing underemployment, which I actually think is more important than the regular employment number. That underemployment number is reaching new highs. You're looking at employment to population ratios coming down. Hiring is coming down. And the jobs that we are getting, they're those non-cyclical jobs, right? It's healthcare, it's education. It's not those other jobs that you like to see to say there's a strong economy. And you get into kind of a negative feedback loop. As the consumer starts to worry about their job, they pull back spending. As they pull back spending, revenues come down for corporations. They have to look at their margins. They have to cut jobs, and you just start to see that cycle intensify.
Less than 4 weeks from earnings season.
Yeah, absolutely. And the wealth effect's not having a great impact either on the consumer. I mean, if you're looking at your 401k as often as I do, you're not in a good place right now.
It's a brutal thing because you're not supposed to look at your 401k, but you know, if you're my mother, for example, and you're retiring, it really doesn't feel
I mean,
good.
I'm her age. That's why I look so much.
You are not her age. You got a while.
I'm sure she's a very young and healthy woman. Victoria, you're going to stick with us through the open. Great to have Victoria Fernandez here from Crossmark. We are looking at futures that are down big into the open. Not huge, right? But 0.5% losses into the open after 2 days of gains. Maybe that's to be expected. We have less than 4 minutes to go until the opening bell. This is Bloomberg TV. This is Open Interest.
Joe Walk is helping steer J&J into a new phase of its history, expanding the frontiers of healthcare by discovering drugs and advancing medical technology.
Developing digital robotic capabilities where it's not just the robot doing a surgical procedure. It's garnering information from that procedure for your specific demographic or the patient's demographic, and then informing the next procedure down the road. Right? It's getting smarter. I would say it's starting to morph into personalized medicine, which we know will lead to the best outcomes.
Innovative medicine and medtech are run as separate business divisions, but in the culture of research at J&J, they interact.
If you look at some of the spaces that we're in today, specifically oncology, there is a lot of dialogue going back and forth. I think it's something that will position us extremely well as we talk about not only a continuum of care, but also a continuum of knowledge.
The convergence of technology and medicine is driving innovation in both sectors, with scientific and commercial possibilities just beginning to come into focus.
I'd like to actually see some partnerships down the road happen between healthcare companies and technology companies. I think we'd get to better outcomes faster if we did that. Right now, technology companies don't have the healthcare knowledge. Healthcare companies probably don't have the breadth of knowledge they need for technology. If we can figure that out together with great minds from both sides, I think that leads to a much better place.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
We are moments away from the start of cash trading on Wall Street. This is Bloomberg Open Interest. I'm Matt Miller. You see futures continue to be down across the board on concern about the geopolitical situation, Israel reinvading Gaza, Ukraine making demands from President Trump that a lot of people are worried he's going to give in to. You can see the Russell 2000 futures off 0.5%. NASDAQ, though, doing the worst, down 0.7% as the tech stocks really continue to weigh on these markets. Take a look at first of all, the bell ringers. Amex, I was looking at the stock, right? And it's been decimated year to date. It's down 11%. But if you look over a 5-year period, it's up almost 4 times, right? More than double the gains of Visa and MasterCard. I think 285% is the gain. Down on the NASDAQ market site, you have Analog Devices ringing the bell. They've done incredibly well as well over the last 5 years, up, I think, 170%. So a couple of winners ringing the bell. Maybe that bodes well for the day. Let's take a look at the major averages as we settle in. We're still going to see red arrows here across the board, about 0.5% on the S&P 500, more on the NASDAQ, almost double that, and the Russell 2000, these small caps not getting any love either. But this could really turn around in about 3 hours' time. NVIDIA's CEO Jensen Huang is going to speak at 1 o'clock at his own chip conference. It's going on all week long. Investors are hoping to learn more about his vision to expand his AI reach into real-world applications, new products that they have, new partnerships that they have. So watch across sectors. Car makers may get a lift. Tesla, obviously a maker of humanoid robots, a lot of people hope could get a lift. But also watch the other chip makers. And then the hyperscalers. Shonali, you're watching one of those very closely.
Yeah, very, very, very closely. A lot of implications here. But to your point, a lot of negative sentiment in the market right now. Things could always turn around. There's been a lot of intraday volatility. But on the heels of a large deal, a $32 billion deal with Alphabet, Google spending $32 billion in cash to take over cloud security company Wiz. It is the largest deal to date for Alphabet, but you are seeing some negativity, about 0.6% move downward in the stock. Let's get all those details. We'll talk about it more later in the show. But, you know, some good news here, Matt, is that at least some large-scale M&A is coming back.
Yeah, absolutely. The question is, are regulators going to be okay with that? We heard a little bit out of the U.S. yesterday, but as Mandeep Singh pointed out earlier from Bloomberg Intelligence, there are other regulators to worry about. We're back here on set with Crossmark Global Investments Chief Market Strategist Victoria Fernandez. And Victoria, before we get to, what could happen in tech, we're watching what is happening right now. Stocks falling. It looks like on geopolitical concerns. As Shanali pointed out, if you type READ GO on the Bloomberg terminal, you get the most read stories from our clients, and they're reading about Gaza. They're reading about Ukraine. They're not as focused on Google taking over Wiz.
No, it's all these geopolitical events that they are concerned about and how that's going to feed through to oil prices. I mean, oil has been one of the things that has been coming down that's been allowing possibly to see inflation relax a little bit. And now that
3 days in a row now.
Yes,
Yeah.
and because of these geopolitical events, right, that we've seen coming. And so I think there's some concern around what that means for the energy sector, what that means for inflation, and what that means in general. I mean, there was a lot of positive elements for the economy based on the fact that we would see some ceasefires and some of this come to an end, and now we're getting the opposite story.
Yeah, people were ready for stability. They were ready for peace, both geopolitically and on the trade front. I know this is about stocks at the open, but two things that I'm looking at in addition to oil, well, oil, for example, and then also gold, just to show you how negative things are. People are moving out of stocks. Where are they going to?
Well, we've actually seen, interestingly enough, a lot of flows into inverse ETFs, which tells you you are seeing that elevated sense of nervousness going out there, right? You're seeing an inverted VIX curve, and then the inverse ETFs doing well. That tells me there's a lot of concern, there's a lot of nervousness. Gold has been doing really well, so maybe you see some things going in there. And we've seen yields pretty stabilized here, as of late, right around that 430 level, between 420 and 430 on the U.S. 10-year. I think you have some funds flowing into fixed income as well to be a little bit of a buffer to the volatility we're seeing in equities.
I'll just point out to my mother, who often watches, that an inverse ETF allows you to bet against a stock.
Yes.
So it's essentially like shorting a stock, and the dangers there are high, right? Because your losses are unlimited as opposed to going along a stock. You know what? I spoke too soon about investors not being so concerned about Google. Shanali, look, if you filter out to 1 hour, it's the second most read story. As I was talking about earlier, we spoke with Andrew Ferguson, who took over the FTC. Actually, Caroline Hyde spoke with him yesterday. Listen to what he had to say about deals.
I think it's important to bear in mind, monopoly suppresses innovation. Monopoly makes it very difficult for little companies with the next great idea to sort of rise. And I think it's very important, if we want to sort of preserve the American innovating spirit, that we create conditions in our economy that allow little tech, who have the next great ideas, the next life-changing ideas for all Americans, to thrive.
So he's saying basically that they don't want to stifle innovation, and that they don't want to get in the way of things too much, right? But this is sort of the 4 pillars of Trump's election, right? He was going to deport people en masse. He was going to put up tariffs, and he's kind of acted on those 2 things.
Right.
He was going to cut taxes. We haven't seen that yet. And he was going to reduce regulation. Is Andrew Ferguson reducing regulation? Is this one of the good things?
I don't think we're seeing it to the extent that people were hoping. We had all those animal spirits coming in after the election, hoping that regulatory policy would be a huge boost to GDP and to growth here in the country. And I think they're not seeing it to the extent they thought. It was going to be a complete 180 and everything was going to get approved. And we're just not seeing that yet. And when you look at the IPO schedule that's coming too, you don't see a lot of things happening there. We thought we'd see a lot more going there as well, and you're just not. So I think there's a little bit of a pullback from what people expected. It doesn't surprise me based on the fact that we have concerns around growth. We have the geopolitical concerns that we talked about. And it makes sense as CEOs of corporations talk about, we don't know what the plan is. We have to pull back on CapEx spending. We have to pull back on some of the other elements we thought we would be doing now. It makes sense that M&A and IPOs would pull back as well.
Yeah, the pullback has been astounding. And I want to point out also that the stocks of Goldman Sachs and JP Morgan, which just soared after the election, they're now down on the year. A lot of people piled into this banks trade, and the behemoths of the industry are down.
Are they even off today? I thought that trading story was so good. Okay, they're up a little today, right? Because
we reported here at Bloomberg that trading revenue will jump meaningfully, about 30% over at JP Morgan. But one thing I wonder is, does that offset the weakness? You haven't seen as much M&A. You have Morgan Stanley's co-president warning today that deals are on pause. And also to the point on the consumer here, if the consumer is weak, Can that save Wall Street, right? Can the banks trade work if consumers can't borrow?
Well, I do think banks are probably one of your better places to actually put your money to work right now because financials are still in an uptrend. Even though they've pulled back and they've consolidated, they're one of the only sectors that are still in an uptrend right now. So there is some optimism in regards to that. Loan growth, hopefully, if we see yields come down, which is what President Trump has said is his goal, then you should see housing start to build. You should see credit and loans start to build again. We'll see if that comes to fruition.
All right, well, they're up today in a down market, right?
Yeah, that's true. A little bit of a place to hide because volatility, unless it's gapping volatility, which means people stop in their tracks here. As you know, I'm so bad at idioms. I don't even know why I try anymore.
You're right. It's a gap. That's correct.
It's a gap volatility. Anyways, they're up today. It's a place to hide. Cross marks, Victoria Fernandez, we thank you so very much for your time. We're looking at a couple more movers on our radar because two beloved stocks of last year are noticeably down today. Tesla, of course, has been noticeably down all year long, but now you're looking at another drop of 5.8% this morning. Palantir, I'm fascinated. This was one of your best performers last year. Having a choppy trade this year, down another 5% today. Remember, Palantir should have been a government beneficiary, right?
Yeah.
Well,
still could be. Still could be. I mean, Elon Musk has work to do yet, right? But it is, to me, surprising to see, you know, Tesla's lost half of its value.
Yeah.
This was a $1.5 trillion stock, and now it's worth 700 and change. That's still a lot, right?
Yeah.
That's still more than like almost every other publicly traded automaker in the world combined.
And speaking of, I think we're going to talk more about those automakers next.
Yes, we are. We're going to talk about, well, throughout the program, we have some auto coverage for you. So coming up next, the fast lane to the future. Chinese automaker BYD unveils a lineup of electric cars that it says can charge almost as fast as it takes you to fill up a gas car. And then later on, we're going to talk about some pretty awesome gas cars. This is Bloomberg.
What is the issue between the type of information that's being collected by investors and the marking issue that you're describing?
What mark-to-market assets do is it forces honesty into the situation. We're talking right after the DeepSeek model surprised everybody in its efficiency. It took hundreds of billions off of market caps because it legitimately raised concerns that maybe the future of AI was different. I guarantee you that if you look at other portfolios that aren't marked, they didn't move. If private assets are going to eat the world, as they say, with the equity market halving in the number of names, you come to a world that is increasingly an echo chamber. Imagine you have a firm that has some public assets and some private assets. If you see your public assets in AI going down by 20%, you're going to be thinking very, very deeply about what your private assets are worth differently than someone who just has the latter.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
This real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Listen carefully.
Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
It's time now for our top call, some of the analyst action from this morning. First up, we're looking at Pepsi getting downgraded. It is no longer a buy at Barclays. The analyst cites pressure on its snacking businesses and flags weaknesses in its Frito-Lay business. Pepsi down 1% after announcing a big deal just yesterday. Now, next up, Ralph Lauren is getting upgraded to a buy at Goldman Sachs. The analyst there cites the retailer's brand momentum. Ralph Lauren marginally on the rise, 0.3% higher. Finally, we're looking at Lucid because it's no longer a sell at Morgan Stanley, and it's getting upgraded to a neutral on its AI potential, and that potential is driving its stock higher more than 11% this morning, Matt.
Let's get more on Lucid and all things EV. We're joined for that by Bloomberg's Detroit Bureau Chief, David Welch. And David, I think, you know, it's the BYD news that's the most exciting here, that they have technology that allows you to get 300 miles of range in a 5-minute charge. How realistic is that news? And, you know, when can we see that coming to products on these great shores?
I think that'll be a while, but look, I think the technology is very realistic. One thing BYD and the Chinese EV makers have been able to do is they've really pushed the envelope here with infotainment and sort of HMI, customer interaction kind of technologies. They refresh, upgrade their models a lot faster than the rest of the world's automakers do, and they do have really good charging times when it comes to their EVs. So, look, I think the technology is legit. The question is, can grids handle them, first of all? And so they're setting up their own chargers in China to be able to handle these fast-charging vehicles. And, you know, there are heat and other things. There are some engineering issues with it that kind of require special investment around those vehicles, particularly with the grid and the charging stations themselves. But I think it's real. So to get to your question, how soon are they going to be here? Well, right now we've got heavy tariffs on goods from China. I don't think this administration wants to see Chinese cars coming in anytime soon and challenging all the companies that are here. So that's going to take some time. And then whether or not that technology would work on our grid with our charging system in the U.S. But look, these things often don't take that long, but I still think it would be years before you saw the 5-minute charging BYD for sale in the United States. Yeah, for sure. So how are EVs doing here in the U.S., David? I mean, we see a lot of really negative news. You know, Tesla's market cap is down by more than half in the last 3 or 4 months. But are we seeing negative sales growth, or is it just decelerating? It's just decelerating. Now, it's decelerated quite a bit. You go back and look at 2023, EV sales were up 50%. Last year in the U.S., they were up 7%. There was a strong fourth quarter. I think some people maybe thought that the credits were going to go away, the IRA tax credits, as soon as Trump got in office. And I've heard from dealers just anecdotally that the growth has slowed down in January and February, but you know, you're still seeing EV sales growth. We'll know when the quarter's numbers come out at the end of March, early April, but it's still growing. It's just we're kind of at the flat part of that S-curve where you have to get beyond early adopters and tech geeks and luxury buyers and get into the mass market, which is tougher to do because the vehicles are still relatively expensive. But you're seeing more offerings out there from Hyundai, Kia, and General Motors especially, and some of those are pretty affordable EVs. So I think you'll see maybe a little bit of acceleration in growth as some of those vehicles start to hit dealerships in bigger numbers. Yeah, David, how much of a problem is this for U.S. dealers here and car makers? Because you have BYD jumping so much that its market value surpassed over the last 24 hours Ford, General Motors, and Volkswagen combined.
Pretty stunning. And then we have another story out on the terminal that is very much worth a read. This idea that cheap Chinese cars are tempting global buyers, and it's threatening the giants of the auto industry. Does the lack of a proper EV strategy in the United States pose a more existential problem?
We have two different things here. One, Chinese vehicles do have a cost advantage. That cost advantage is not easily transferred to the North American market because there are things like subsidized steel and aluminum in China and subsidies for factories and other things that help them drive costs down. Also, safety standards are lower. You can't drive those vehicles that they sell in China in the U.S. market. A friend of mine recently bought a BYD EV in Mexico, and it was $29,000. It's the size of a Chevy Bolt, actually a little bit smaller, and the range is like 220, 240 miles, I think. So, look, that's he loves the car, but that's not like some 500-mile range big SUV. That's a subcompact EV for almost $30,000 in Mexico. So that gives you an idea that they're not going to be able to just dump super cheap EVs here. But look, they're taking market share in Europe. They're taking market share in South America, which is a bastion for General Motors and some of the European car companies. China wants to become a net exporter of vehicles, and they want to take over the world vehicle market. And the only thing that's slowed them in Europe are tariffs, and the only thing that is stopping it from coming to the United States is tariff and protectionist measures.
Tesla was supposed to be kind of the savior of this industry in a lot of ways when it came to EVs and the lead that they had compared to some of the smaller upstarts in the U.S.
They did invent the industry.
They sure did. But, one thing for the inventor here that was a painful trade for so long was trying to go short Tesla. Here we stand in early 2025, and Tesla shorts over the last 3 months, according to S3 data, made $16 billion in 3 months, and people are getting more comfortable to go short. Is that dangerous, or do you think that at this point, it's a trade that people are starting to get comfortable making?
I think people are comfortable making the trade, and also a lot of investors are just shying away from the stock, period, because where's the growth going to come from? It's uncertain when the Model 2 or the small affordable Tesla EV is coming, and really the big thing that drove the rise in the stock price before it fell recently was AI and autonomy. And look, that's just something that it's always tough to bet against Elon Musk and Tesla when it comes to the technologies they want to develop. They're often late, but they usually get there. Problem is with self-driving vehicles, it's just such a difficult thing. They haven't tested the vehicles on public roads, with other motorists, pedestrians, people's dogs, fire engines, all that stuff, the way General Motors, now defunct Cruise, did, the way Waymo does. And, I think Waymo's probably the best one in the U.S. at this. And, they've been at this for 15 plus years, and they're still kind of taking a very cautious, slow approach to deploying these vehicles all over the place. So if Tesla's going to rush into this, I think for investors, there's a long prove-it period that technology is not only going to work, but that Tesla can monetize it, and it's going to deliver what Elon said it did.
Humanoid robots is what we're waiting for here on Open Interest. David, thanks so much for joining us. Bloomberg's David Welch, our Detroit bureau chief. In the next hour, we're going to talk about, well, kind of vintage Mustangs. At least that's what they look like, but they have carbon fiber drive shafts and titanium conrods.
Pretty. It's so pretty.
It's a beautiful product. I'm excited to talk to the CEO and founder of Revology. Tom Scarpello joins us at 10:30 a.m. New York time. This is Open Interest.
fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
US tech is influencing global markets.
Technology.
Asia are betting on tech. From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Now, investors have reduced their exposures to U.S. equities by a record amount in recent weeks, according to a Bank of America survey that is very closely watched. We're going to discuss where the money is going with Bloomberg's Jan Patrick Barnard. What are the ramifications here? Because sentiment has already been something people are watching very closely. People are now paying more and more attention to the flows.
Yeah, absolutely, and that's a good thing to do. And I guess, like in that survey from BofA, what we have seen there is no big surprise that people have turned their back on the U.S. trade, which has worked so well for the last 2 years, or even for the last 10 years, if you want to argue that way, and that they have moved more into like defensive sectors. That Europe is everybody's darling. That makes kinds of sense, and that basically is what we have seen playing out in markets as well. It's also interesting that people have increased their cash position. I think it's the biggest increase that we have seen since 2020. It's still relatively low with about like 4%. But it shows you that people have become a little bit more cautious. The outlook is just like so messy and so clouded that people feel like they have to act on the side of caution for the moment. And that was reflected in trading the last 2 weeks and is now reflected in that survey.
It does seem to be, JP, really the defense stocks that are rising. I've been digging into this chart function on the Bloomberg terminal, CHRT, and it's so awesome to see all of this info charted. Like Rheinmetall shares, I didn't realize, have surged 1,300% in the past couple of years. Is this all about European defense stocks? Is this all about, Germany's rearmament?
Well, that certainly is a big part to the trade that we are seeing. Like, I mean, on the bigger picture, I would say, like, what has worked well for the last couple of years in stock markets in general is, like, you want to deploy your money where you have fiscal expansion, and that was the U.S. as the pretty much only place for some time. China from time to time here and there, and Europe was always like fiscally not really expanding, and this is now changing. A huge part of that, of course, is the defense play for good reason, and I mean, like the relationship between the U.S. and the Europe are, like, I would say, beyond tense, and it makes sense that that Europe is looking a little bit more after itself. I would also like say the defense trade, I mean, it's always the same with like stocks. We go over the top all the time to the upside and to the downside, and there is good argument to say like that the defense trade has run a little bit hot at this point. When you speak to people out there, they always tell you that defense manufacturing, it's a low margin business, it's high competition except for some like areas. You need lots of cash, lots of commodity. It takes a long time to get a tank from production into the battlefield and get your bill paid. So I would say like that people like the trade for right now makes sense. It's probably going on for a little bit longer, but it's also like it's not something that is like on that degree that we have seen like going on forever.
All right, fantastic intel from the heart of the beast. Bloomberg's JP Barnard coming to us from Frankfurt. Coming up in the next hour, Goldman Sachs' David Costin joins us, plus Revology CEO Tom Scarpello and Ireland's Deputy Prime Minister. This is Open Interest.
House, you were asking a question of President Trump, and he didn't quite answer the question, and he asked you a question. So the question he asked you was something like, why are you not banking certain groups? What is the answer? I don't think he gave you a chance to really answer that question, but what is the answer to that question?
Well, first off, the Bank of America has 70 million consumer customers and millions of small businesses all over the country, all over the world. And so we bank everybody. But the real question was about overregulation, frankly. And so as you look, what's happened is because the interpretations of AML, anti-money laundering, BSA, Bank Secrecy Act, KYC, know your customer's customer. You know, there's a lot of burden upon the banking system to both report suspicious activity reports and do a lot of analysis. And we have to close accounts, so we can't tell people why we did it. And often we're told by authorities to close accounts. That creates confusion. Another area comes up in this discussion is in the crypto area where the regulator said you can't bank crypto operating companies, employees of crypto companies, et cetera. We are allowed to do, we bank everybody, but the operating company, they said that's a high-risk activity. Ask us for authority, and guess what? You would have never gotten the authority. So that came up as an issue. So at the end of the day, it's about getting these regulations right.
Has the Fed decision under surveillance with the fastest coverage and exclusive analysis, including Powell's press conference. Nobody covers the Fed like Bloomberg.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. All eyes are on the White House, where a conversation between President Trump and Russia's Vladimir Putin could take place this hour on ending the war in Ukraine. Correspondent Natalie Brand has our top story.
This phone call, high-stakes phone call, comes after Middle East envoy Steve Witkoff, who's been involved in all of these negotiations, traveled to Russia to talk to Russian President Putin in person and try to really push this ceasefire deal that had been negotiated between the U.S. and Ukraine.
Pushback from global leaders after Israel launched a wave of airstrikes across Gaza, hitting Hamas targets in its heaviest assault since a fragile ceasefire began in January. UN spokesman Tamim Al-Kitan.
This will add tragedy onto the tragedy. The last 18 months of violence have made abundantly clear there is no military path out of this crisis.
Former State Department Middle East envoy Aaron David Miller.
Getting to the second phase of what was supposed to be a three-phased arrangement was never going to be possible, in large part because the gaps on the requirements that Hamas and Israel are enjoined to undertake according to this three-phase deal, were simply too large to bridge.
The long process of recovery is just beginning for people who lost homes to tornadoes over the weekend, among them Carl Parker in Poplar, Missouri.
I feel blessed. You know, I'm alive. You know, everything I got's gone, but, you know, I'm blessed. God kept me alive.
President Trump calling for the federal judge who's tried to stop migrant deportation flights to El Salvador to be impeached, labeling him crooked. But legal contributor Jill Levinson says
it's not very clear that the president can use this law dating back from 1798 to say that he has the power to deport certain people who are in this country.
Judge James Boasberg's ordered the administration to provide more information by noon Eastern on those deportations. Senate Minority Leader Chuck Schumer's canceled his book tour after heavy criticism over his vote to move forward with a Republican spending plan. He tells CBS Mornings it was the better choice.
One of the Republican senators who knows said to us, you'll be in the shutdown for 6 to 9 months till we totally destroy the federal government. So the shutdown was a much worse alternative.
The Dodgers have opened the 2025 season with a win over the Cubs in Tokyo.
Scorched to the right side, and it's Ohtani that's provided the first hit for the Dodgers.
Shohei had 2 hits, scored twice in LA's 4-1 win over Chicago. Dow's down 238. This is CBS News. The American Kennel Club says Frenchies are still tops among people who prefer purebreds.
For a third straight year, the French Bulldog is number 1. They don't need much grooming or exercise. They're friendly and they have those cute, smushy faces. Labrador Retrievers, Golden Retrievers, German Shepherds, and Poodles round out the top 5. Rising fast on the list from 47th to 14th in the past decade is the Cane Corso. They're big, strong, athletic, loyal, and very protective of their owners, though breeders warn they're not for everyone. Michael Wallace, CBS News.
Unfunny moments for a comedian at last night's Knicks-Heats game. SNL and 30 Rock alum Tracy Morgan got sick courtside during the third quarter at New York's Madison Square Garden. Video shows paramedics whisking the 56-year-old away in a wheelchair as he held a towel over his face. No comment from Morgan's rep on what was ailing him. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are 2 big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube, so head over to youtube.com and search Bloomberg Podcast Live. That's where you'll find us. Coming up, we're going to check in with the Mark Champion, Bloomberg opinion columnist. He's got some thoughts on this phone call taking place right now between Presidents Trump and Putin, the future of Ukraine. We'll get the latest there. Shelby McFadden, investment analyst at Motley Fool Asset Management. She's going to join us to give her thoughts on these markets. Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategies. She's going to give us a preview of what we might hear from the Federal Reserve tomorrow. Again, day 1 of their meetings is today. And Dan Williams, reporter for Bloomberg News. He's based in Jerusalem. He's going to give us the latest reporting on the violence in that part of the world. But right now, let's kick everything off with a Bloomberg Business Flash. We do that, John.
All right, guys, this Bloomberg Business Flash being brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest at ibkr.com/RIA. 10 of the 11 major industry groups in the S&P 500, they are lower right now as we have another day of sell-offs. The S&P 500 down 1%, down 58 points, 5617 on the index. The Dow down 206 points. The NASDAQ 100, 325 points lower. That is down 1.6%. The big decliners, consumer discretionary communication services. That's where you find 2 of the most actively traded stocks. Shares of NVIDIA right now down 3.3%. NVIDIA investors focused on CEO Jensen Huang's much-anticipated keynote speech at the GPU Technology Conference. And you also have Tesla declining 5.6%. Top decliner, the Mag 7 stocks. Chinese automaker BYD unveiling a lineup of electric vehicles it said can charge almost as fast as it takes to refuel a regular car. Meantime, Stu Kaiser at Citigroup Global Markets says, you know what, the recent sell-off, it ain't over yet.
It does feel like there's potentially more behind this. Obviously, we've gotten a couple days of calm here, which is welcome, but it's hard to think that the headlines that have driven this are finished.
And U.S. housing starts bouncing back last month as the weather improved. And here's one for you. Macy's acquiring an exclusive option to develop a TV series based on the best-selling biography When Women Ran Fifth Avenue, Glamour and Power at the Dawn of American Fashion. This is going to be a TV series on women in retail.
Huh.
And you'll be looking for the bargains.
Yeah, I was like, I don't think there's going to be bargains in me for that. Do you know who's producing it?
I don't.
Okay.
I mean, a good reporter would, but...
But you can get on that for the next Business Flash. Okay, I'm mildly interested, if nothing else, for the fashion. Happy Tuesday. Exactly. I'm Alex Steele alongside John Tucker and Paul Sweeney. This is Bloomberg Intelligence Radio. All right, it is a very interesting day in the market. Let's get some more details here with Vincent Signorella, Bloomberg macro strategist. Vince, you know, we're making a lot of hay about tech selling off and the NASDAQ down almost 2 percentage points again. However, small caps down just 0.6, mid caps down just 0.4, and the equal weighted index down just 0.4. Is this just a tech thing?
I don't think so. I think you're looking for a little silver lining in this cloud, but I'm not so sure it's really out there just yet. I agree with your analyst who said earlier there seems to be a bit more to go, probably headline driven on tariffs. The tariffs are coming, as both Treasury Secretary and President Trump said April 2nd. We need to get through that period to see what they really do. I think if you look at the data that we saw this morning, little discouraging. And this is data that's without tariffs when you see a big jump in import and export prices, especially import prices. And what actually bothered me, it's a little bit off the radar for most, but I think it's something that people should look at, is what happened with Canadian inflation. 76 of their exports come to the United States. If they're seeing a jump in inflation, they're going to see a need to raise prices, and eventually that's going to be on our tables, et cetera.
So how do you think the Federal Reserve, Vince, takes all of this into account?
Probably with a trip to the drugstore for an extra bottle of Tylenol, I would think. It's really, really difficult for directing monetary policy in a period where you see potentially slower growth and sticky inflation. I'm not suggesting this is going to be Volcker's 1970s dilemma, but it is borderline stagflation, if not stagflation, not necessarily to really those extents, but we're very likely to see slower growth. We're very likely to see sticky inflation. And it puts the Fed in a box. As we saw this morning, like, how does the Bank of Canada react to potential tariffs, which could crater growth in Canada when they saw such a big jump in inflation, where they would want to cut rates, but inflation is basically telling them not to. Mm-hmm. So it's really a no-win situation for the central bankers.
So Nick Timros of the Wall Street Journal, usually you have one reporter who's the Fed whisperer. This time it's Nick Timros. And he was saying that, like, it's not a hawk or a dove, it's a duck. So Powell wants to be a duck. You work really, really hard below the surface to not move the water at all. And that's going to be the goal, which I got to say, that was a pretty good image. Vince is laughing because he feels me. You get it. It's like, don't make any waves, literally.
I'm just, to be perfectly honest with you, I'm in the camp of that the Fed doesn't really have a Fed whisperer. It's something the Wall Street Journal likes to tout. But I work there, and I never actually really saw it personally. So I think, you know, when you get that kind of information from the Fed, it's coming not from the folks who make policy decision, but from the folks down the hall by the water cooler. And, you know, they're just hearing a little bit of a scuttlebutt here and there.
Okay, but the duck thing, like the duck thing. Let's go with the duck thing.
Let's go with the duck thing. I think I'd call it more of a swan is what he's probably trying to do. He wants to look pretty as he tries to pull this off. But again, that's the situation. You really can't cut interest rates with sticky inflation. And growth so far has been actually fairly good. So there's no rush to the finish line for Powell. I think he just walks it straight and narrow. And fingers crossed, he hopes that tariffs don't really come in excess and upset the apple cart.
I'm just seeing some reporting here by Bloomberg News. Treasury Secretary Bessent sees no reason for recession. Economic data is, quote, healthy. Is that what you're hearing out on the street?
It's healthy now, but like I'll take you back to 2008 and the famous line from Paulson, just as the economy was about to fall off a cliff, which was something along the lines that I'm paraphrasing. I think the U.S. economy is sound, and he kept saying that right up until the U.S. economy fell off the edge. I think you really need to know that, and you guys know this. What's the Treasury Secretary going to say? He's not going to come out and tell you things don't look really good out here. So he's got to talk it up again. But for that comment and for his take, if you look at U.S. economic data, it is, at the moment, pretty sound. The question is, what does the second quarter look like? Are we borrowing from the second quarter, thinking tariffs are coming, and then we're going to steal growth from that quarter, and things are going to fall off the edge a little bit? Look at what retail sales were, yesterday. Not very exciting. Not something I would have hoped for. I would have actually hoped for a big beat, showing me that consumers were trying to beat tariffs with the possibility of tariffs. And that didn't happen. So to me, that just suggests an even weaker consumer, that even if they wanted to beat what they thought were tariffs coming, apparently they couldn't.
Yeah, and then this brings us to the permits today as well, right? Specifically, permits were lower because of construction cost questions, in part due to tariffs. All right, Vince, thanks a lot. Vince Signorella joining us, Bloomberg macro strategist. The big headline that we're waiting for today is anything that comes out of President Trump and President Putin's call, which I think should be starting around now if it hasn't started already. Mark Champion, Bloomberg opinion columnist, joins us now. Mark, is it underway? What are you expecting?
Yeah, it's difficult to say exactly what to expect. What we are hearing is that Putin is going to have a number of pretty extensive demands. Among them is to halt again all provision of arms to Ukraine. But he's not talking just about American arms and intelligence sharing and so on. He's talking about all arms from Europe as well. So that will be a huge one for the Ukrainians. Noting in that when the U.S. cut off arms before, it resulted in a breakthrough, a disastrous breakthrough for the Ukrainians in the Kursk region of Russia, where they've been holding territory and were under enormous pressure. Putin chose that moment to flood troops into the zone, and at the very moment when they needed the intelligence most, the Ukrainians didn't have it. They couldn't target. They couldn't use HIMARS. So it was a disaster. So the Ukrainians will be very reluctant to do that. From what we understand, the Russians are also pushing for territorial concessions in advance. Concessions on, what will happen in terms of NATO. In other words, they seem to be negotiating a settlement where the U.S. is pressing for, and the Ukrainians have acceded to an unconditional ceasefire.
Mark, it seems that Russia may have the upper hand in terms of leverage here. Is that in fact the case? And if so, what can the U.S. do here to maybe tip the scales, even if it wants to?
Well, this is, President Trump, of all people, he wrote the art of the deal. He will understand, or should understand, that if you want to get a decent deal, you need to be ready to walk away. What is not clear is that the U.S. is in fact ready to walk away. Rather than that, President Trump seemed extremely anxious to cut a deal. To do it quickly. He keeps saying that he's anxious to do it and that he wants to do it quickly. And in that has put the Kremlin in a very strong position indeed, because all they have to do is to say, as Putin did, yes, but we're willing to have a ceasefire, but we want this and that and the other. We have a lot of things to discuss. If you really want something quickly, this is what you're going to have to do.
With about 30 seconds left, where are the Europeans in this conversation?
Nowhere, essentially. So the U.S. has, been consulting with the Europeans, and the Europeans have been, pushing their views forward to the Americans, but they are not at the table. They are not talking to Putin, and it isn't clear to what extent, if at all, the U.S. will take the European views into account.
All right, Mark, thanks a lot. We really appreciate it. Thank you very much, Mark Champion, Bloomberg opinion columnist, joining us on the call between President Trump and President Vladimir Putin. We'll obviously be updating you on any headlines as they cross.
Yep, we might get a readout here. I mean, the call was scheduled for roughly 9 to 11 a.m. East Coast time, so we'll see if there's any readout at all. But again, what's notable to me, at least, is Ukraine does not have a seat at this table. Europe does not have a seat at this table. It seems to be kind of a bilateral discussion between Presidents Putin and Trump, so we'll see what we can get there. Markets are selling off here. The S&P is off 1.1% at 63 points. The Nasdaq's off 1.9%, 330 points. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom. This Bloomberg Business Flash being brought to you by Oracle. Attention, growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. The offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. A renewed slide in Wall Street's big technology companies, dragging down the S&P 500 right now. NVIDIA, that's falling in the run-up to the CEO's keynote speech at the GPU Technology Conference. NVIDIA shares down 3.2%. And then you have Tesla shares, always among the most actively. They are down 5.5% right now. Google is confirming its acquisition of cloud security company Wiz. The price tag there, $32 billion. This is an all-cash deal. And shares of Google parent Alphabet right now down 4%. Investors have slashed holdings of U.S. stocks by the most on record. At least this is according to a survey from Bank of America. And auto manufacturers, this is some of the data we got today, bringing forward as much production as possible in February, likely adding to inventory. Factory output rising by the most in a year as a surge in motor vehicle production led to broader increases. A lot of this is the anticipating tariff story. S&P 500 right now down 57 points. That's a decline of 1%, 56.17 on the index. The Dow Jones Industrial Average down 196 points. The NASDAQ 100, 335 points higher, lower that is, down 1.7%. And NYMEX crude up 0.2%, 67.71 right now. In fact, energy, the best performing, one of the few good performing groups in the S&P 500 right now. It is, again, up 11 cents a barrel. And I'm told by an expert, Paul, that this all has to do with the Mideast tensions.
I'll go with that expert.
He's referring to me. Am I the expert?
Great expert.
Well, because you asked me.
Our in-house resident expert.
Yeah.
I mean, it's a push and pull between too much supply and then not enough supply versus what's going to happen to demand with tariffs. And today, the undersupply part's winning because of the tensions and the issues, particularly when it comes then to Iran and how that plays into the situation as well. Do we
What's
get
your
stronger
favorite
sanctions?
type of crude oil?
Well, WTI. I'm American.
Mine is Thunder
man.
Horse.
Oh yeah, where's Thunder Horse from?
I have no idea. I'm just it's somewhere in the United States.
Right click on it and it'll tell you where.
Right click on Thunder Horse.
There's a really great function called Boil, B-O-I-L, Go, on the terminal if you have one that shows all the different crude grades, have different gas grades. Super fun. It can tell you where it's produced and how it prices. And
wow, I didn't know that. Okay.
Cool. Okay, well, John
Gasoline,
Tucker's looking at
fuel,
that.
Crude. All right.
Yeah.
Just learning all
And
this
that
stuff
is
now.
your nerd update. Thank you. Boil, B-O-I-L, go. All right, in the markets, the sell-off continues. Got to be really central, though, to tech. Shelby McFadden, investment analyst at Motley Fool Asset Management, joins us now. Shelby, is your interpretation that just continuing the overall market slide or that this is a tech problem?
You know, I think it's a little bit of both, right? I think tech usually gets the hit up front, and part of that is because that's where a lot of the froth has sort of concentrated itself. So we saw that as well a couple of years ago. We had that initial sell-off that then translated to the broader market, which was we have to get some of these sort of non-foundational premiums out of the market, and then we can address things later. And oftentimes that might mean that there's nothing to address because other things are somewhat fairly priced. But I would say in these conditions, we could reasonably expect it to continue across the broader, especially large cap market, just because there are some genuine concerns that sort of underpin the environment that we trade in.
Are you marking down your growth forecast for this U.S. economy? Are you marking up your inflation forecast for this economy?
We are definitely marking up our inflation expectations. Growth is something we have to sort of go quarter by quarter. And because we are bottom up, we tend to be a little bit more focused on marking up or down those growth expectations for each individual company. But I would say if there's something we're looking at from top to bottom, it's definitely inflation. So understanding at the very least that we are most likely just going to be entering a higher price level for the next 4 to 7 years than we may have expected about 4 years ago. And that's something that we as a team had been thinking about probably for the last 2 years. I mean, before the first Fed cut, there was a pretty broad expectation on our team that we were more likely to end up in the exact spot that the Fed didn't want us to be in, which was, hey, we can't get under 2. We're stuck at 2.5. We're stuck at 2.6. And with a lot of the different prerogatives going on that are going to affect the market, it's looking more and more likely that that'll be the case.
But last time we spoke, and this was on TV, Shelby, you like Costco. So to me, though, Costco would definitely be in the line of fire for inflation and the exposed consumer.
And they are. And that's just the simple facts of it, right? Because even though they are a pretty much the best at what they do, that doesn't take them out of the storms. The way we like to think of it is, if we have to go through this, we'd rather be in a boat that's got multiple engines, right? Instead of us in a little canoe with an oar, right? And so that's how we sort of see Costco, is that they've got turbos. They can try and get through this. They still have to weather it, but they're a little bit better prepared to do it. We did hear from management up front during earnings the other week that they are starting to pick up on some inventory. So they are doing what companies at their scale can do early, that smaller companies are not necessarily able to do, trying to get ahead of any tariff-related issues with inventory, and we know they can sell it down. We've seen them do it. We saw other large companies do it after the sort of buying heights of 2020 and 2021. So if we have to choose where we want to be while still getting that solid, sticky consumer exposure that's going to provide value and get the traffic, we have no intentions on leaving that kind of company right now, because they are in some of the best shape if we're looking at active positions in the market.
Shelby, how do you feel about the consumer, and how does it impact kind of influence your stock selection? We had some disappointing UMich data last Friday. We had the airlines last week cut their forward guidance. How concerned are you, if at all, about the consumer?
Yeah, we can definitely see the consumer heading into some tougher times. I don't think it's unreasonable to want to take a look at that part of the portfolio and figure out, okay, what sort of exposure do we need to trim? So where we want to focus, and where I'm focusing really, is mission critical, right? Staples, and what provides the most value if it is going to be discretionary. So when we looked at that UMich data and we saw the expectations, they're not great, right? They're reminiscent of some dark times. But I think the important thing for us to remember is that we have to also see the outcomes. So looking at the expectations doesn't make you feel anything exciting inside. Butterflies, but in the worst way. But that's for the, the sort of upcoming short periods. We have to go ahead and see these outcomes first. And it's highly possible that the expectations end up matching the outcomes. But I think while I wouldn't say I'm bullish on the consumer, I've not given up yet, because the U.S. consumer has shown to be very resilient. And even if we're going into a financing economy, that's still a way to sort of, fund consumer activity.
Real quick before I let you go, Shelby, what about the positives of whatever we might see out of President Trump? Like, if we really do reindustrialize the United States and manufacturing, is there a play there yet for you guys?
One of the first things we talked about in our sort of what now meeting on, I guess it was November 6th, was, what does this mean for corporates? Because that was the one tangible thing that we just kind of like knew for sure, if you will, without having a crystal ball, that was most likely coming back. And what that meant was it was going to hopefully increase some CapEx and encourage more research and development and innovation because of the tax incentives. So that is a positive that we are still hoping will roll out, and that companies that are highly scaled and able to make those decisions, have those sort of piles of cash and regular generative cash flow to make those reinvestments, we'll be able to take advantage of that. So that's one tangible thing that we were looking forward to sticking. And I think in some of the valid, in many cases, noise coming out of the administration has been dulled a little bit. But we do very much hold on to that.
Shelby, thank you so much for joining us. Always appreciate getting some of your thoughts. Shelby McFadden, investment analyst for Motley Fool Asset Management, joining us from Alexandria, Virginia, via Zoom here. We got the Fed meeting today. We are going to get their statement tomorrow, 2 p.m. Wall Street time. Press conference at 2:30. Surveillance's show will start at 1:30. Simulcast radio and television at 1:30. So we'll have all of that covering the Fed tomorrow. Ira Jersey, he's going to be following this stuff. He's head of U.S. interest rate strategy for Bloomberg Intelligence. Ira, with all the cross currents going on out there, concerns about tariffs, economic growth, inflation, I don't see much for this Fed to do here. How do you think they're going to kind of frame their role going forward?
Yeah, so it's the going forward part that I think is important in your question there, Paul, because I do think that the Federal Reserve is going to be a little bit more dovish. So we've diverged a little bit from the thinking of some folks in the Bloomberg economics team, in that I do think that if you look at the preponderance of the data that's come out the last couple of months, it definitely seems to be a little bit weaker and is weakening. So I think that you'll see that in both the statement and Jay Powell's press conference afterward. They've been overweighting the beige book, and we have, I've mentioned this to you guys before, but we have a natural language processing model that looks at a lot of the Fed statements, and we do that for the beige book too. And the Beige Book statement was actually the biggest decline that we've seen in about a year in terms of just the change and the downward shift. So I do think that they'll be more cautious than they were at the January meeting.
How does that look? Like, how does more cautious look? Like, what are the key words that they're going to do to get that across without inciting any freak out or panic?
Yeah, I think it's just a matter of, a little bit of caution. So that first paragraph in the statement will be the key, where they talk about the economic environment, and they'll say that, we're now growing at a, modest pace or something like that instead of a moderate pace, right? Which, that's a very nuanced word. It sounds the same, but it's really not in terms of Fed speak. They will also note, however, on the other side, and this is the reason why I think people believe that the Fed's going to remain on hold for a little bit longer than we think that they might. And that's that inflation and inflation expectations have gone up, right? When you look at the University of Michigan Consumer Sentiment Survey from last Friday that came out, there was a massive jump in inflation expectations. And that's going to scare the Federal Reserve a little bit. But remember, they still have a dual mandate. And because of that, the key is going to be the job figures. And yes, it was okay in February. Jobs market was okay. But you did see some signs at the margin that things are even slowing down in the job market. So I think that they'll just urge caution, but they're going to sit on their hands for now. And a lot of the questions are going to be about their propensity and what's their reaction function for what's going to cause them to cut, whether they cut in June or August or later in the year. That's going to be how we'll have to read through a lot of the statements that Powell's going to make tomorrow.
All right, Ira, thanks so much for joining us. Ira Jersey, Chief U Interest Rate Strategist from Bloomberg Intelligence, joining us via our camera down in Princeton, New Jersey. And, this is one of those times where it might be a little anticlimactic tomorrow because it seems like what's moving markets these days and moving economic, forecasts or just expectations is not necessarily interest rates. It's more kind of just trade policy and the uncertainty that's brought into the whole economic discussion.
Yes, and we haven't hit April 2nd yet, so it doesn't have to, Powell doesn't have to address that. But on the flip side, we have seen that deterioration in the soft data, not yet in the hard data, but there has to be some sort of history of connection there and how long that gap winds up lasting. So how then do you wind up addressing it? And, do they say temporary or transitory at all when it comes to inflation? Because that's the theory, right? If it's just a one-off tariff, that is going to be transitory.
That is.
But if they say that, oh my God.
I can't imagine that. Maybe different word choice maybe would be a little.
Yeah, we have to look at some synonyms there for that. All right, coming up, Dan Williams is a reporter for Bloomberg News. He's based in Jerusalem. We're going to get more on Israel ending Gaza truce with some deadly strikes overnight. Of course, we're blaming Hamas for that as well. We will break that down for you from the ground. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom. It is Bloomberg Business Flash. And after tumbling 10% from its record, then rallying for a couple of straight sessions, the S&P 500 sell-off, that is resuming today. Right now, the S&P 500 down about 0.9%, 50 points lower. We're at 56.24 on the index. Right now, Tesla, one of the heaviest weights on the market, after falling just about 6%. Tesla shares actually down right now 5.4%. They're seeing competition, among other things. China's BYD announcing an ultra-fast EV charging system. It says it's nearly as quick as filling up a gasoline car. Then Google parent Alphabet's sinking after the owner of Google said it would buy cybersecurity firm Wiz for $32 billion. This would be the company's most expensive purchase in its 25-year history. Google shares, Alphabet shares down right now 4%. Meantime, Peter Shear at Academy Securities, talked to him earlier today, says U.S. trade policy having just the opposite of its intended impact.
So I think one of the big problems with our strategy so far is rather than having people come to the table begging for mercy, it's actually pulled money out of the system. It's made people rethink things, and they're not rethinking things in a way that really involves the U.S. I think people are trying to rethink things away from the U.S., and that's the negative.
Right now, the NASDAQ 100 down 304 points. That's a decline of 1.5%, and the Dow down 150 points. Head of the Fed decision tomorrow, two-year yield pretty much unchanged, 4.05%. The 10-year, the benchmark, up 1 basis point. That is at 431. So panic? I mean, no, but I got to bring this to you. The first outbreak in the U.S. of deadly H7N9 bird flu, the first strain since 2017, has been detected in a Mississippi poultry farm. So this raises fresh health concerns. Just to be sure, this is separate from the H5N1 strain that you've been hearing about sweeping through bird flocks. It does not appear to transmit easily between people, but those that are infected, most patients become severely ill. Most of the human infections have occurred after exposure to live poultry or contaminated environments. So put that in your pipe and smoke it for whatever that's worth.
Cool.
Something else to worry about.
Thanks. I appreciate that. I did make a carbonara the other night, so you use raw eggs, and then I was like, oh, God, should I have done that? Should I have not done that?
Anything,
it's carbonara. What are you going to, you know?
I don't know what that is.
What are you talking? You have to. It's egg yolk. You got to use the egg yolk.
Okay.
Okay, anywho, in the broader
I'm not
market...
filling in for you when you're sick.
Okay, fine. Well, okay, thanks for that. Appreciate you. All right, news overnight, of course, is that Israel launched airstrikes across Gaza, killing hundreds of people and shattering a nearly 2-month ceasefire with Hamas. Joining us now for more is Dan Williams, reporter for Bloomberg News based in Jerusalem. Dan, how did this wind up unfolding overnight?
Well, tactically, it unfolded as a surprise. In fact, I think we will discover in the coming hours and days that the conversation that preoccupied many Israelis and as a result, I imagine, Hamas and Palestinians over the weekend and over the last couple of days about a shakeup within the government, a termination of Israel's internal security chief, I imagine that was in part designed to create a smokescreen, a tactical smokescreen to lower Hamas's guard and to enable these lightning strikes that began overnight. But operationally speaking, strategically, they really should have surprised no one because the last agreed ceasefire between Israel and Hamas expired 17 days ago. The sides were in loggerheads in attempts to mediate or negotiate through American and Arab mediation an extension to that ceasefire, a new ceasefire deal. Israel responded initially by cutting off aid supplies to Gaza and part of the electrical supply there. And it openly said it would resume warfare, something it promised to do all along in order to achieve its goals of destroying Hamas and retrieving hostages. It was just a matter of time before we were to see this war begin anew, failing a capitulation by Hamas, which simply was not in the cards.
Dan, do we know why Hamas has refused to release the remaining hostages?
Well, certainly. It's in a long-term diehard war against Israel. Hamas is committed to seeing Israel's destruction. And what it wants in the conclusion of this war is effectively a return to the kind of ceasefire we've seen between Israel and Hamas some half dozen times over the last 20 years. Basically, Hamas wants to return to the status quo ante. October 6th, 2023, a day before it launched this attack on Israel, albeit with far greater devastation in the Gaza Strip to deal with in terms of reconstruction. But Hamas wants to stay in power and wants to retain its weaponry. Israel has a very different objective here. Israel's objective is not to return to the status quo ante, not to enter another ceasefire that it believes Hamas will only violate in the future. Israel's attitude is that the October 7th attack was a game changer, and Israel is now changing the rules. And the new rules, according to Israel, is Hamas cannot be allowed to remain in Gaza, not in power, not with its rockets and rifles, and not in a manner that will ever threaten Israel from Gaza again. So those two objectives, those strategic endgames, are, on the face of it, impossible to reconcile. Israel was hoping at least to recover some of the hostages through pressure on Hamas, but even a measure of returns, some of those returned, the ones that Hamas said was willing to return, the numbers it was offering were well below the numbers that Israel was accepting for an extension of the truce. But really, that's irrelevant to the ultimate fact that there is no reconciling the objectives of the two sides, and the hostages and Palestinian civilians are caught in the middle.
So now what?
Well, what we've had now is intensive Israeli airstrikes, at least 2 or 3 waves since nightfall. We've had, according to authorities in Gaza, at least 400 Palestinians killed, many of them civilians. It would appear a number of senior Hamas figures as well. What we don't have so far is a return of Israeli troops and tanks to Palestinian population centers in the Gaza Strip. Were that to happen, if it happens, it would escalate things much further in terms of the stakes, in terms of the death toll, in terms of the risk posed to hostages, be it from accidental damage caused by the Israeli strikes, or be it from the open threat of Hamas to execute the hostages should it believe the IDF, Israeli forces, are about to conduct a successful rescue. So the stakes are getting higher by the hour. The question is, what is the off-ramp offered to Hamas? Hamas has been offered an off-ramp in the form of a consensual evacuation, a consensual exile for its leaders from the Gaza Strip. Israel has even offered bounties of $5 million for any members of Hamas who would give up hostages, deliver them safe and sound back to Israel, not just the money, but also that would include safe passage and immunity from Israeli strikes. So far, none of those offers have found purchase among Palestinians in the Gaza Strip for a number of reasons. I think Israel is hoping to increase the pain, increase the pressure in a manner that may cause Palestinians to reconsider. And indeed, if Israel does manage to eliminate the current leadership of Hamas in the Gaza Strip, it was very successful during the war in doing it with the pre-existing leadership. If it manages to eliminate the new leadership, I think they're hoping that that will have a trickle-down effect with more junior commanders being more willing to cut a deal for their own survival, realizing that the game is lost. But for now, it would appear that both sides are in their corners, really doggedly sticking to their principles and their policies and their strategies. It's very hard to see a way to reconcile the two right now.
Is the U.S. playing any role right here, Dan, in these? Because it seems like the administration is focused on Ukraine here.
Well, I'd say the U.S. is indeed focused on Ukraine, but it's really playing a very significant role here, if only rhetorically, and it's not only rhetorically. The Israelis know that they have the back of a Trump administration that has openly shown really indifference to the Hamas claims. It's been openly called for Hamas to be ousted in a manner that really echoes Israel's demands. And ironically enough, the Israeli defense minister today used a Trump metaphor for what Hamas will face if it doesn't relent on the issue of hostages. He said the gates of hell will open on Hamas if it doesn't deliver the hostages. That's taken directly out of the Trump playbook, the Trump rhetorical roster. So the fact there is a lockstep rhetoric is very important, because Hamas cannot necessarily hope to appeal to American public opinion, or at least the U.S. administration's opinion, when it comes to suffering. I'd just like to add on this point that the U.S. attacks on the Houthis in Yemen since the weekend, while they have their own objectives as outlined by the Trump administration, have also blunted a strategic retaliatory arm for Hamas in the region that's probably been very helpful to Israel too.
All right, Dan, thank you so much for your reporting. We really appreciate it. Dan Williams, he's a reporter based in Jerusalem for Bloomberg News. We appreciate getting the direct reporting there of the escalation, the truce that has now been shattered, the ceasefire between Israel and Hamas. We'll have continued reporting on that. Markets selling off here. The S&P is off 63 points. 1.1%. This is Bloomberg.
listening to Bloomberg Intelligence with Paul Sweeney and Alex Steele on Bloomberg Radio.
Happy Tuesday, everybody. Alex Steele alongside Paul Sweeney and John Tucker. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance, and we're broadcasting to you live from our interactive broker studio right here in Midtown Manhattan. Now, every day, Bloomberg writes a big take story, and it's literally what it says. It's a deep dive into the big issues of our time that move markets, that move geopolitics, and move policy. And today's is on cheap Chinese cars. So apparently, Chinese car makers are gaining market share globally, particularly when it comes to emerging markets, with sales of inexpensive compacts, crossovers, and SUVs, despite tariffs, despite any other headwinds. Joining us now is one of the authors of that story, Chester Dawson, senior editor for Bloomberg News, and he joins us from Detroit. Just put in perspective how much of the global market China has right now for automakers. It looks like we're having some difficulty hearing you. If you're on mute, we can get you off. But
here's the funny thing about the story.
Tell me.
One of the reporters, U.S.-based, one of them Johannesburg, one of them Sao Paulo. I mean, all over the world we bring these people together.
Yeah, we love that. We love those global stories. Yep. You really get everything that you need. All right, Chester, if you're back with us, walk us through the kind of market share that Chinese automakers have.
Yeah, I hope you can hear me now, but it's starting from a very small base, but it's growing very rapidly. So it's basically about 3%, but it's forecast to grow by leaps and bounds over the next few years. And it's really amazing when you look at particular markets where they have a 30% share, like in Chile or in Russia, where for obvious reasons, most of the competition's pulled out. They've got over 3/4 of the market. So those are obviously kind of outlier examples, but slowly yet surely, almost everywhere around the globe, particularly in emerging markets, the Chinese are gaining more market share, gaining momentum, and often undercutting the more established rivals. Obviously, the big exception there is the U.S., but elsewhere you're seeing tremendous growth.
So what has been the response by the Western auto manufacturers? I'm thinking the Volkswagens and the Fords of the world. What are they doing, or how are they responding to this growth by China?
Well, it's really twofold. In their home markets, obviously, they've sought protection by lobbying for various protectionist barriers. In many cases, the argument is, hey, we just need a few years of breathing room till we can get up to speed and have a more competitive product. But we've kind of seen how that works historically, and it's not always a silver bullet. Outside of the industrialized world, because Canada and even the EU has been drawing up the drawbridge a bit for Chinese-made vehicles, but in much of the rest of the world, where growth is often fastest, the Chinese are making really impressive headroads, and the established automakers are not sitting on their hands. They're often trying to beat the Chinese on price, or use their better brand name recognition and credibility, and often and sometimes working with local dealers to pressure governments in places like, say, Brazil, to throw up their own barriers that blunt some of the inroads being made by Chinese.
This would be a silly question, but are Chinese car makers displacing European and U.S. car makers, or is this like expanding general auto market share?
That's a really good question. I think it's both. I mean, you're not seeing growth so fast that the pie's expanding to the point where everybody's getting a bit of it. You are seeing erosion. It's not true everywhere, but take Thailand. That's a perfect example of where that was basically owned by the Japanese for decades. And, there were other automakers, Ford and others sell there too, but it was basically known as kind of Japan's backyard and where companies like Toyota sold tremendous numbers of vehicles. The Chinese have really started to eat their lunch. So that's happened in, you can see that a little bit in places like South Africa and Brazil as well. So yeah, the pie is still growing, but not not enough for everybody to gorge equally, and it's really the Chinese that are pigging out, so to speak.
How's the quality of these Chinese cars? I remember when the Japanese cars came into the U.S. in the 70s and 80s, the quality was just a lot better. That was one of the reasons they were able to get share. How about the Chinese quality?
That's an excellent point, too, because for years, the Chinese have kind of labored under the impression that their cars are junk. And, that was true until fairly recently. However, in recent years, the Chinese have caught up and in some cases even surpassed the technology that some of the Western or Japanese automakers have. There's a company called Xiaomi in China that sold its first car last year and now just bumped its capacity up to 350,000 a year, which is like 7 times as many as Rivian, a U.S. startup, makes. This company was making mobile phones a couple of years ago. That was its main claim to fame. And it's been able to move a lot of that connectivity and technology into the cockpit of the vehicle. So you're finding that not only are Chinese cars cheaper, but oftentimes they have just as many creature comforts or sometimes more than the equivalent, say, GM or Toyota or Volkswagen.
All right, really appreciate your time today. Thank you so much. It was a great story joining us there. Chester Dawson, a Bloomberg senior editor for Global Business Americas. And check out the Big Take story. You can find it on the terminal or Bloomberg.com/Big Take. Okay, let's just take a quick look at the markets. We are still lower here. The Nasdaq's almost off by 2%. But I'll say it again. The S&P is only, quote unquote, down by about 1%. And the Dow's only down 0.6%. I just say that because it really is tech-driven.
Okay, yeah, that's definitely a part of it, absolutely. Looking at the yields, pretty steady here today. The 10-year Treasury is only up about 1 basis point, 4.31%, so the bond market's taking it in stride.
Yep.
We'll get another data point, of course, tomorrow with the Federal Reserve, tomorrow afternoon. Again, I'm not sure if it's going to have its usual import for the market.
All right, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio, Sirius XM channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. Second hour Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Tuesday, everybody. Alex Steele here alongside Paul Sweeney and John Tucker. This is Bloomberg Intelligence Radio. The latest news right now, German lawmakers backing landmark defense spending plans. The German Bundestag lawmakers are backing the bill with 513 votes in favor. It does have to go to the upper chambers, I think, on Friday, but the rhetoric seems to be that once the lower house passed, this will then sail through. Buns are dropping after the spending vote passes. The 10-year yield is up by about 3 basis points, hitting 2.84%.
And, I'm just going to, at the German stock index, the DAX, just since an August 24 low, it's up 35%.
Yep.
What happened to the sleepy European stock market vis-a-vis the U.S.? It's been a real story here in 2025 at the end of 24.
I mean, that's what happens when you're going to put almost €1 trillion worth into the system, potentially a huge, huge change within the fiscal situation in Europe as well as Germany. Speaking of, the White House saying that President Trump and President Putin are currently speaking. We'll bring you any updates and any headlines as that crosses. Let's get you updated right now, though. Here's a business flash with John Tucker.
All right, sell-off in large tech, dragging down stocks right now. 7 of the 11 major groups in the S&P 500 are lower. Communication services. Right now, that's the biggest drag. Overall, the NASDAQ composite, the NASDAQ 100, I should say, is still down 12.5%. So it is down in correction territory, continuing from its record high. S&P 500, 72 points lower, down 1.3%, 5603. The NASDAQ 100 down almost 400 points right now. That is a 2% decline. The Dow Jones Industrial Average is 316 points lower. Deal news, Google parent Alphabet agreeing to acquire Wiz. That's the cybersecurity firm. $32 billion. That's cash. Comes a year after the initial talks fell apart. And as the Federal Reserve opens its 2-day meeting, Tom Becker at BlackRock says, don't expect a whole heck of a lot from policymakers.
I think they've been pretty clear that they're on hold here. So December, they kind of iced the easing cycle. I think the data they've gotten since, given, even subject to the uncertainty, I think that they think that this is a good level to stay at, given that the labor market appears pretty firm.
Among the laggards right now, this is in terms of the percentage, the index points. NVIDIA, that is down 3.25%. Meta Platforms, down close to 5%. Amazon.com, down 2.6% right now. Meantime, investors have slashed holdings of U.S. stocks by the most on record. This according to Bank of America's latest survey of fund managers, reported being about 23% underweight U.S. stocks, a plunge of 40 percentage points from the previous tally that they did. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Alex, Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming on YouTube as well. As John just reported, Presidents Trump and Putin currently speaking. The call started at 10 a.m. Eastern time. That's according to the White House. And we will certainly have more reporting on that as we go forward. As John was just reporting, broad sell-off in the equity markets continue here. Let's see where the action is under the hood. Isabel Lee joins us. Isabel, what are you looking at today?
I'm looking at Chinese EV stocks. They're gaining following a presentation at NVIDIA's annual AI conference. One of them is NIO. Shares are edging higher by around 3%, at least the ADRs, and the other is Li Auto. So NIO is also reacting to a new deal. The world's largest battery manufacturer, this is a mouthful, Contemporary Amperex Technology Co. Ltd.
Okay.
We will say
it rolls right off the tongue there.
Has agreed to invest up to $346 million in building out a battery swapping network across China in collaboration with NIO. So you see shares are reacting to that. And this partnership agreement will see both companies work together on expanding their EV network. So NIO has been founded in 2014, and basically it manufactures EVs which allow the driver to replace the depleted battery with a charged new one in a few minutes. That takes time and it requires CapEx, but still, it has a market for that. And this isn't the first collaboration between two companies. So the past was successful, and investors are hoping that this one will be too.
What else are you looking at?
Lucid, another EV company. This one is much higher.
The
Shares
theme.
started jumping 11%. And of course, this was after Morgan Stanley upgraded it from underweight to equal weight. So Morgan Stanley says it sees potential for the stock to re-rate basically on AI hopes and dreams. And also there's a new leadership and through strategy partnerships. So they're really hoping that that will pan out. Their price target though remains unchanged at $3. And I want to bring this to your attention. So Lucid actually had kind of a tough headline the past 2 weeks. Its leaders were sued because of overhyping the company's production capacity surrounding its SPAC merger in 2021. So Lucid was one of the meme stock favorites during the height of the pandemic. Sometimes I still hesitate saying meme stocks because it sounds like it's not the most positive thing, but I think if you're loved by retail traders, they'll trade you a lot. You'll get volume. Maybe your shares might pop.
Yeah, just ask the GameStops.
Yep, AMCs and all that kind of stuff.
Oh, totally. AMC definitely saved it.
Yep.
All right, Isabel, thanks a lot. Really appreciate it. Isabel Lee joining us from Bloomberg News. Okay, let's get to the headline of the morning. President Trump, President Putin currently speaking. That call started at 10 a.m. That's according to the White House. Joining us now is Roz Matheson, Bloomberg News Director for Europe, the Middle East, and Africa. What's the headline you're looking for?
Well, the headline really will be straight out of the gate after the meeting, potentially, and that's going to be whether Donald Trump has convinced Vladimir Putin or whether rather Vladimir Putin has agreed to the terms of a ceasefire with Ukraine. That may not happen in this call today. It might be that they discuss some of the parameters of it and they agree to come back and continue talking. They may not sign off today, but it's really about whether that happens, and then secondarily, what are the conditions that Vladimir Putin has put forward in that call, and what has Donald Trump's reaction to those conditions been, and does he say that he's comfortable with any or indeed all of them?
Interesting. So, Roz, I mean, you're based in London, and talk to us about what's the view of some of these leaders across Europe? They're not involved. They don't have a seat at the table. Are they concerned about that?
Well, certainly they are, and we had an exclusive story out today where we know that Vladimir Putin is insisting that as part of any ceasefire that no weapons at all go into Ukraine, so not just US weapons halted, but also arms shipments from Europe as part of what he's looking for in terms of a ceasefire agreement. And certainly that would be bad news for Ukraine and something that they would struggle to accept. But for European leaders, it's another sign that despite all their efforts to get involved in the conversation and to have a seat at the table, that Donald Trump at least sees this primarily as a US, Russia, Ukraine conversation, and possibly in that order. So for the European leaders, it's about how can they make sure that they're representing Ukraine's interests here and whether they can at this point, and what would be their options in the event that Donald Trump says that he's comfortable with a full freeze on arms shipments to Ukraine as part of a ceasefire.
We just heard also that the Bundestag in Germany approved ramping up infrastructure and defense spending. Historic change within the European market, in particular Germany as well. Does that change the calculus of the role that Europe can eventually play in all of this?
Well, certainly, yes. After quite a long debate in the end today, went longer than we thought, the Bundestag has now passed that measure. And certainly it's significant because it comes even before Friedrich Merz takes office as Chancellor, or his government is even formed, and so managing to get it through the current parliament. The question is, obviously, that's a big step by Germany to break their rules around fiscal spending, particularly when it comes to defense, but how quickly does the money start flowing, and where does it flow to, and how long does it take to show up really in defense production? For example, defense companies don't turn on a dime. They take a while to shift their production and to increase it. So we're not going to see an impact straight away, but certainly from Europe, it's a big statement of intent. And again, a recognition that the direction of travel is very different with the US these days under Donald Trump, but likely set to continue even after the Trump administration. And that is that Europe has to look more to itself, to its own defense going forward, and it has to build that resilience. So this is more a longer term step than something we'll see impact of immediately.
So certainly, Roz, that's a historic day for Germany and its future. But that's the German economy. The rest of Europe, you think about the Italys, the Spains, the Portugals of the world. I mean, did they have the ability to really step up and make similar types of investments in their own infrastructure, military? There's a concern that they may not.
Well, certainly they don't have the fiscal headspace to do so to the extent that Germany has, because Germany's been so careful fiscally for so many years that they do have some headroom here. And as you say, for other nations, much less so, because they've been through the pandemic, they've already been through a lot of spending to support Ukraine, and so they're carrying a lot of debt here. And how much can they then leverage into fresh spending? And also you've got the question of domestic politics. While there's a lot of sympathy still for Ukraine across Europe, you can see in the narrative domestically in some of these places questions about, well, we can't keep sending so much money to Ukraine. We can't spend so much on defense if those weapons are going to Ukraine, because does that come at the expense of welfare spending, of healthcare, of education in these countries? And so the narrative domestically is becoming more complicated for leaders. And so you've got the fiscal reality, then you've got, reading the room with voters, and that's going to make it quite difficult.
All right, Roz, thanks a lot. We really appreciate it. Roz Matheson, a Bloomberg News Director for Europe, Middle East, and Africa. Let's get more on all of this with Wendy Schiller, professor at Brown University, to discuss all of this, really. So from your professional view and your academic view, what are you going to be looking at in terms of the headlines and what we might get from President Trump and President Putin call?
Well, certainly whether Trump, cedes the ground on, stopping or temporarily pausing arms shipments to Ukraine. Remember, these are weapons that the United States government pays U.S. defense manufacturing companies to, go to Ukraine. So that will affect their production, their compensation. I mean, everything's intertwined here. And, will Trump say, okay, we'll give you a month, but basically taking away all of Ukraine's leverage? And it just doesn't seem to be in the United States' interest to do that for Putin. I mean, why take away all your bargaining room? It doesn't make any sense in terms of getting a good deal. Trump wants to be the guy who ends this war. I think that he's made that very clear, but he wants something out of it. And Ukraine has resources. So why not try to get a deal where the United States has a formal stake in Ukrainian resources, and that keeps the U.S. interested and also unwilling to let Putin come in and try to take all of Ukraine?
Wendy, from a domestic political perspective for President Trump, is his objective to get a deal or to get a good deal for Ukraine?
Good question.
Well, I think he wants a good deal for the United States of America and himself. So he'll sell whatever deal he negotiates as a good deal. I mean, he's very good at selling. This is a president that knows how to do that. And the American people, yes, I think the vast majority are supportive of efforts in Ukraine to defend themselves from an invasion by the Russians, but they're also worried about housing prices, their own jobs. The price of eggs is finally coming down, but we see that they're holding back on vacation planning. They're starting to hold back on house hunting. There are these weird signals that Americans are much more nervous about the economy than they thought they would be under Trump. And I do believe that Trump and the Republicans in Congress have to start heeding those signals sooner rather than later. So how much attention the American public will pay to the details of the deal, I think really is in question.
Who is in Congress right now who ardently supports Ukraine in opposition maybe to the White House pushing for a ceasefire? Is there anyone left?
Well, yeah, I mean, Alex, there are Republicans, particularly in the House. Some of them come from areas in swing states that actually have fairly strong Ukrainian populations. So there's sort of a constituency angle there. And then there are some that ideologically believe that Russia is our enemy, that we don't want Russia to be able to expand willy-nilly and invade countries. And they want to preserve the space for the United States to stand against Russian aggression. So they do have beliefs there. Whether the leadership will sort of translate those views into anything, I think we'll have to wait and see. But also the defense industry. I mean, they have a stake. They make weapons. Granted, we were running a little short of weapons. So, either you build up the U.S. defense military for itself, or you continue to pay defense manufacturers to arm the rest of the world. Either way, it matters for the economy. So even if you have defense manufacturing in your district, and most districts have some connection to the defense industry, that's also important to Republicans, particularly in the House. And 2026 seems far away now. By the end of the summer, that's where they're going to be looking, and they got to pay attention to signals that are being sent now.
Wendy Ross Matheson, Bloomberg News in London we were talking to her about the European perspective of being maybe not having a seat at the table, or at least the adults' table. Does President Trump, how does he view the role or the position, the view of our supposed European allies here? Does he care at all?
Donald Trump, Paul, has been very consistent on this. He believes that Europe has not paid its fair share on NATO. He believes that the U.S. has been sort of honoring agreements made, after 1945, certainly to fight communism. And we also discouraged Europe, really, from arming itself fully because we saw Europe involved in not one but two world wars, and the United States had to get in twice. So, I mean, Trump has been clear, make your own way, pay your own way. These are also states with more liberal social welfare policies than we have. More liberal vacation time, higher wages, more unionization, all the things that Trump seems and the Republican Party seems not to want to support in the United States. So I think he looks at them and says, you've given a pretty good life to your people, but you have to pay your own way now, and maybe you have to cut back on those services. And that ties into the Republican mantra here of a smaller federal government and fewer social services. So everything is consistent, I think, in Trump's positioning towards Europe now.
What is the longer-term ramification of German rearmament and defense spending and infrastructure spending, and a world where the president of the United States is willing to work with President Putin?
Again, Alex, Donald Trump is now, and it seems that, Marco Rubio is on board as Secretary of State and as Secretary of Defense, in the position that the United States is a powerful but lone actor. I mean, I know I'm going to get criticized for this, but George Washington's farewell address, written mostly by Alexander Hamilton, said, don't get involved in permanent alliances or entanglements with Europe. And Trump is sticking to that script and is asserting U.S. power individually. How that works out for the United States in a global economy and, of course, our principles of democracy, we are all going to have to wait and find out. But they are committed, I think, to that platform.
All right, Wendy, as always, appreciate getting your thoughts here. Wendy Schiller, she's a professor at Brown University. And again, the phone call between Presidents Trump and Putin taking place as we speak. The White House reported that call began at 10 a.m. Eastern time. And so we will have headlines. Presumably there'll be a readout of the call, and we'll get some news later on today, perhaps.
We will, of course, bring that to you the moment that it crosses. In the meantime, markets just trying to figure out which direction we're going to be going here. The NASDAQ is off by a full 2 percentage points. The S&P is off by 1.2%. So we are picking up some steam to the downside. I kind of blame it all on tech, but I got to be honest, the S&P rolling over a little bit as well. So where do you go in the market? That really remains to be seen, because the bond market's doing a whole lot of nothing. Yep. The 20-year is selling off a little bit, hasn't have a lot of liquidity, and no one really cares.
You have the 20-year on your screen?
I do, but I just go WB and I just look at all of them. But in general, nothing is really moving. And taking a look at the FX market, also, you're seeing the Swiss franc as well as the dollar a little higher, so maybe a little bit of a safe haven play within the currency market. And then in terms of commodities, it's still going to be gold, $30.27 an ounce. Yep. Huge. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash, being brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. Offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. It is a sell-off in tech stocks dragging the market lower right now. NVIDIA most active. Shares of NVIDIA down 2.4%. Among the headlines around NVIDIA today, one from the information, it reads, Amazon undercuts NVIDIA with aggressive AI chip discounts. The Magnificent Seven stocks hitting the lowest since September. In the S&P 500, the laggards include NVIDIA. Then you have Meta Platforms. That's down 4.9%. Microsoft down 1.5%. Amazon.com, that is down 2.2%. right now. Investors also going to be focused on the Fed's updated summary of economic projections and Chair Jerome Powell's press conference tomorrow about clues about the path of policy ahead. This comes, of course, amid uncertainty over trade policies. Again, we're going to get all that with our live coverage tomorrow. Right now, the S&P 500, 71 points lower, down 1.3%. 5603 on the index. The Dow Jones Industrial Average is down 350 points. The NASDAQ 100, 370 points lower. That is down 1.9%. And I'll bring this news story along to you from Bloomberg Law, Paul. President Trump calling for the impeachment now of the judge who ruled against his efforts to deport those alleged Venezuelan gang members. So this escalates the administration battle against the judiciary. And you could say, you know, does this signal some sort of constitutional crisis in the offing?
Ooh, interesting.
Maybe another thing for investors to latch on to. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele and Paul Sweeney. We are live here in our Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube, so you head over to youtube.com, search Bloomberg Podcast Live, and that's where you'll find it. I'm looking at the 30-year mortgage that's quoted by the Mortgage Bankers Association, 30-year fixed. It's down to 6.67%, and that's down from 7.09% just a couple of months ago. So trending in the right direction. Got to be good for real estate, I would think. Let's check it out with Jeff Brown, founder and CEO of T2 Capital Management. Hey, Jeff, in the commercial real estate business, we do have mortgages coming down. Are you seeing that at all as a positive sign for commercial real estate broadly defined?
Definitely a positive sign. Commercial real estate, a very leveraged business. Interest rates matter, in a significant way. And so, yeah, we'll take what we can get. If it's moved from 7 to 6 2/3, we'll take it.
Where in commercial real estate do you guys see relative value the most attractive right now?
Yeah, there's a few spots, and certainly a lot of headlines get focused on, the doom and gloom that's out there. Office has been just a whipping boy for real estate for really since COVID, so called 5 years now. But some bright spots are out there, and T2 is active in some of these spots. Private credit has been a bit of a darling. Frankly, it's a great time to be a lender right now, as banks and others kind of try to process all the information that's going on, not just economically, but politically, and figure out where is it wise to allocate capital. So being in private credit, being that lender in these spots of uncertainty has some advantages to them from a pricing power perspective. Also, we have found a tremendous green shoot in student housing as well. We recently exited a large position at the University of Tennessee just last month. With liquidity as difficult as it is to come by in the past couple of years, really, for us to exit $100+ million position just last month is noteworthy. So those two spots, credit and student housing, have been real green shoots for us.
So then how do you view sort of some of the difficulties in universities and colleges as costs really rise, as some funding is taken away? Does that provide opportunity for you, or is that a risk factor?
A little bit of both. It's a great question. I would say it definitely leads to greater discernment, greater investigation, greater diligence on various schools. It's easy to paint real estate and even sectors within real estate with a broad brush, but in student housing in particular, you've got to pick your spots with schools, with geographies, growth dynamics or lack of dynamics in that regard. So there's, again, you just got to be careful. You got to pick your spots, but it is cause for a lot of us to step back and at least reassess what had been true even just a couple months ago.
How about on the multifamily front here? We've heard for such a long time that there is a housing shortage in the U.S. What role does multifamily play in kind of solving that?
I think it plays a huge role. You just alluded to mortgage rates dropping from 7-ish down to 6 2/3. It's meaningful, Lord willing. It leads to a lot of people being able to jump into the housing space that may not have had the ability to historically. But there has been an affordability crisis for a long time within the United States and a housing shortage really since the great financial crisis. And my perception is that multifamily can fill at least the bulk of that void. Now, what you have on the flip side is we need to build. Part of resolving the demand issue is providing supply. And it's been incredibly difficult to, as investors, to rationalize doing ground-up construction, multifamily projects anywhere in the country over the past 3 or 4 years now, as we've had to deal with rising interest rates. I think that's seemed to have leveled off at this point. But what you have now are elevated insurance costs. We all know the natural disasters that are taking place around the country and what that leads to on the insurance front. And then construction costs really have not abated that much. They've settled down a bit since COVID, but they haven't really receded to the point where people can easily make sense of ground-up construction.
And to that point, we saw permits falling as well today in the data that we got out at 8:30, and part of that was because we don't know what those construction costs are going to be, in part because of tariff risk when it comes to things like lumber, and that's not even addressing labor.
Alex, it's a horrible story. What we're dealing with right now on the construction front, on the front lines for us, we've got a plumbing contractor, for instance, that has recently taken the position in light of tariffs, in light of the uncertainty that's out there, said, hey, we can give you a bid, but I'm just going to tell you, we're going to mark it up by either 30 or 40%.
Wow.
And you have 24 hours to accept it or not. So this sort of paranoia that exists out there, again, kind of founded by the uncertainty that exists politically, has definitely caused a lot of people to step back and reassess things.
Interesting. All right, Jeff, thank you so much for joining us. Really appreciate it. Jeff Brown, founder and CEO of T2 Capital Management. Talk about the commercial real estate business. We like to keep our finger on the pulse of that important market, which, again, has undergone a tremendous amount of dislocation from the pandemic and is now getting back on its feet. Taking a look at gold here. It's up another 1% here, 3,031. The Goldman 3100 call from just a few weeks ago, looking pretty solid. Somebody else who had a good long gold call has been Mike McGlone, Bloomberg Intelligence Senior Commodity Strategist. Mike, are we getting to a crazy area here in terms of the magnitude of the move in a relatively short time period here?
Hey, Paul, I'm more worried about the word worried. Gold sustaining above $3,000 an ounce to me is more of an S&P 500 put, meaning a good food to feed that bull would be the stock market going down. Because, yeah, gold's stretched at this level. It's a pretty significant round number. It's pretty significant level above its, let's say, 60-month moving average. But that's why I published today. Here, gold, yeah, I'm still bullish, but it's kind of more of an indication that, yeah, if you want gold to go higher from here, stock market going down, showing those deflationary forces, which gold loves, is, I think, a key prerequisite now.
Yeah, but what about all the whole physical buying, all the central bank buying that supported gold up front? Is that petered off, and this is just the speculation?
Thank you very much, Alex, for that. Yeah, but that's
you
perfect.
You are welcome.
To me, I look at that as indicative of stuff that you expect in a bull market. Things getting kind of strange, spreads widening out from the U.S. And let's also remember part of the reason we are entering this bull market, we have this significant shift in leadership in the U.S. and a significant, almost unprecedented austerity and tariffs, which is good reason to make the stock market just mean revert a little bit. So let's remember at the end of last year, the stock market capitalization to GDP was around 2 times. Now, to put that in context, it's the highest in about 100 years, and just at the end of 2020, it was 1 times. So if that helps trigger what the administration wants is lower yields, the Fed to ease, lower energy prices, a good way to get that is the stock market. Gold's a primary beneficiary, and I think that's what's kicking it.
So how about anything else? Are the other precious metals following suit here? Is there a way to play this trend maybe through silver or something?
You got it. They're following suit. Gold is beta in the space, and they're all kind of coming up reluctantly versus gold. For instance, silver. Silver is known as the devil's metal. It's known as leveraged gold. It basically trades 2 times the volatility, and it's earned that reputation. So if gold's up about 40% in 1 year on your 1 year basis, silver should be up about 80%, but it's up less than 40 cents. It's being dragged up by gold. So gold's everything. Central banks are buying gold, not silver. And then it's also the industrial metal versus precious metal factor. Gold has been demonetizing silver for 100 years, and silver is becoming more industrial every day. And we all know what's happening with the rest of the world becoming less able to export to the U.S. That's a pressure on their GDPs, most notably from China.
Yeah, and you can see the ARBs kind of blowing out too, like trading LME prices versus U.S. prices when it comes to silver or gold. Mike, the conversation about revaluing U.S. gold reserves mark to market and then using that to help either fund a sovereign wealth fund, et cetera. Are you hearing anything more on this at all?
I'm hearing that a lot. Again, Alex, I think it's just an accounting thing. To me, we still own 8,000 tons of gold. That's not going to change. What's been kind of unique in the crypto space is they've been saying things like, oh, maybe the U.S. will sell some gold and buy Bitcoin. And that was kind of pie in the sky. I think that's kind of silly. But as far as, I guess that could be more fuel for a gold bull market. But at this stage, I don't really need that. I'm more kind of worried about it going higher. And a good reason for it to go higher is just a little reversion in the stock market. Like S&P's back down below its 200-day moving average today, and gold's about almost 20% above its 200-day moving average. So it's getting a little stretched, but that S&P is rolling over. That's all that matters.
How concerned are my good friends, my new good friends in the oil patch, concerned about WTI crude oil at $67?
Oh, it's complete consensus now. Prices are going lower, and you can see that in the curve. People call it. It used to be called a bull backwardization. That's when the future up prices are lower. Now it's called normal backwardization. Why? Because they know they can sell forward, lock in some profits before they get to the break-even cost, which on average in the U.S. is around $56 a barrel. So yes, there's good reasons for crude oil to bounce recently. We're seeing tensions in the Middle East, and we did get to a 3-year low a couple weeks ago at $65 a barrel. But to me, the whole big picture for crude oil is I don't think it's going to stop this downward trajectory until it gets well below that cost of production around 56, which is around $40 a barrel. And that's not profound because that's what it's done for basically the last 20 years. Every time it goes above 100 too much, it has to get way down. And what's the shift? You saw what's happening with BYD today. They have a car now that can charge in 5 minutes. The world's shifting rapidly. My electric car is 11 years old, and I feel like I'm driving a Model T. I've got to get a new one.
Yeah, and you're in Miami, too. You got to be conscious of that stuff.
Yeah, no, seriously. It's such a good point. All right. Hey, Mike, really appreciate it. Thank you very, very much, Mike McGlone, joining us. He covers commodities and commodity strategist for Bloomberg Intelligence. All right, coming up, what are we doing? Oh, the keynote, NVIDIA.
Oh,
that's very exciting. It kicks off at 1:00 p.m. Mandeep Singh, a Bloomberg Intelligence Senior Technology Industry Analyst, will be joining us. Jensen Huang will be speaking at 1 p.m. Also, Google buying Wiz. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And after 2 sessions of rallies, the market selling off today, although it's off the worst level of the session right now. The S&P 500, 62 points lower. That is down 1.1%. We're at 5612 on the index. The Dow Jones Industrial Average down 288 points. The NASDAQ 100 down 335 points. That is a decline of 1.7%. Among the laggards in the S&P 500 right now, in terms of index points, you have NVIDIA, that's down 2.2%. Meta Platforms, 4.2% lower. Microsoft, down 1.6%. Amazon.com, down 1.8%. Shares of NVIDIA among the most active ahead of the CEO keynote address that we're going to get today. Nadia Lovell at UBS says the path ahead for markets will depend on policy out of the White House.
We're clearly not out of the sea of fog yet. You know, the market is like the terrain, choppy and volatile within this trading band. It is not clear yet if the bottom is in after we dipped into correction territory last week.
And of course, Federal Reserve officials expected to stand pat on interest rates again at tomorrow's policy meeting. Bloomberg Economics expects officials are going to lift their inflation projection to close to 3%. So, of course, that would be well above the Fed's 2% target. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, that's your Bloomberg Business Flash. Alex, Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney live here in our Bloomberg Interactive Brokers studio in New York City. Sunny New York City, how about that? We're also streaming live on YouTube, so head over to youtube.com, search Bloomberg Podcast Live, and that's where you'll find us. Well, one of the big themes in the marketplace in 23 and 24 was AI, and that was really driving not just the tech stocks higher, but the market overall. We got the NASDAQ off about 13% year to date in 2025, so people are questioning, I think, a little bit of the AI leadership story. And there's going to be a big event today. NVIDIA investors look to a CEO keynote of NVIDIA today to maybe rekindle some of the excitement about AI. Mandeep Singh joins us here, senior tech analyst for Bloomberg Intelligence. Does the tech world, Mandeep, need a little kick in the butt maybe from Mr. Jensen Huang at NVIDIA?
Well, he, if you remember, presented at the CES, and that was a very big event. So if anything, I think this could be even bigger than that, given this is their annual conference. And look, they have a lot of products to showcase. The problem they're running into is the macro story is really not very supportive of,
What I love about Silicon Valley, and this has been my entire career, you go out there, and they are such an optimistic group of people, and their basic feelings, technology can fix everything. Just let us, just don't worry, we'll fix it for you.
Yeah.
Whether, is that still the case out there?
It is, but what do you do with the tariff uncertainty? And if you're an NVIDIA, I mean, the market is still undersupplied. Everyone wants your chips, but the tariff restrictions probably will play a role to how much they can sell to China. Remember, China used to be more than 20% of their sales.
Yeah.
Now it could be almost negligible this year. And given all the focus on China post DeepSeek, I mean, you can imagine how everyone is trying to figure out how the hell did they train on NVIDIA GPUs?
Okay, and that was like literally the first thing that NVIDIA said once the DeepSeek news broke that Monday was like, we didn't sell to China.
Yeah.
Like, we didn't do that. It wasn't our bad.
So now there are some proxy countries, whatever you're selling to Singapore can end up, you know, with Chinese companies training their models on those chips. And
well, how much of the tech sell-off, though, in the Mag 7 that we're seeing is just we're reverting from maybe an overvaluation and hype versus reality versus materially something changing with this thesis?
I mean, look, from all angles, if you look at generative AI, this is a multi-year secular trend. We have sized this market, and there could be a pivot from, you know, training to inferencing now, because what we have seen is the receptivity to spend, you know, $10 billion upfront in training the next version of the model is not there. Everyone wants to see ROI when it comes to CapEx. If you're putting $80 billion in CapEx, tell me you're generating $40 billion in revenue from that. And that wasn't there. So I think they will make that pivot towards inferencing, which is more in line with. So inferencing is more, you have a trained model and you're using that in chatbot, Copilot, an AI agent use case, and you're billing the customer for the usage of the chips, which is like the
So
cloud
it's like
model.
real world application versus like training it to do good stuff or training it to be smart. Then it's actual models. Did that make sense?
And look, I mean, the biggest difference is in the architecture. So with training, you're building a cluster of 200,000 GPUs, even 1 million GPUs, all in one data center. Whereas in inferencing, you're saying, I'm in this location, my traffic will go to the data center that's closest to where I'm sitting. If somebody is in London or Asia, then it will go to the data center that's local to it. So I don't need to build data centers with 100,000 plus chips all in one data center. So that's a bigger difference is now I'm optimizing for where my user is, where my traffic is, and it's all based on latency and how I can serve the customer.
Don't they call that on the edge? Like you have to get literally on the edge of the customer versus say in a big power plant near or a data center in Virginia or something. So do you think that Jensen Huang can stabilize NVIDIA stock right now?
I mean, look, if there is one visionary in this world right now who can talk the big picture around AI, it is Jensen Huang, along with Satya Nadella and, OpenAI CEO Sam Altman. So, like these 3-4 guys really are driving the Gen AI wave. And Jensen will talk about like multiple markets that they're trying to address. So it's not just data center. He's going to talk about humanoids. Probably quantum computing as well comes into equation, even though it doesn't generate any revenue. And he has said it's more of, 10, 15 years out. But that's the kind of, sway he has right now where people will listen to his future ideas and how he's thinking about taking the company.
And this is 1 p.m. East Coast time?
Yeah.
Okay. Well, who's the audience for this thing? Is it developers? Or
Apparently everybody.
Anybody on the enterprise side, all your CIOs, CTOs, they care about what he's going to unveil.
Kujan out there?
Yes,
Good.
we do. Yeah.
Kujan Sabani does he's our West Coast tech guy.
Before we let you go, I guess like Google's buying Wiz, it's a big deal, $33 billion. Like, was this a surprise to you?
I mean, the price tag it's their most expensive acquisition. And for a company that generates less than $1 billion in revenue, you always question the multiple, but it still is the fastest growing cybersecurity company. And we have seen in cybersecurity, there's always a CrowdStrike that comes out of nowhere. And now CrowdStrike is a $4 billion run rate company. In the case of Google, it's a capital allocation decision. If they're spending $80 billion on chips and data center, $30 billion is sizable in terms of M&A. So what does it mean for Alphabet's CapEx outlook for 2026 now that they have committed $30 billion here? And
they had $95 billion of cash sitting on the balance sheet as of the quarter end. Rob Schiffman, the credit guy for Bloomberg Intelligence, covers all the technology companies, says they can go raise whatever they want, whenever they want it. I didn't even want to talk to you today. My first request was for Jennifer Rhee, who covers all the antitrust for Bloomberg Intelligence.
True, yeah.
I didn't think Google could buy a paperclip and the DOJ wouldn't come down on them. Are they going to get approval for this?
So, and given they're in the midst of that Chrome divestiture and, the DOJ monopoly lawsuit, look, Google's revenue exposure is still 80% plus is still consumer oriented. They're not an enterprise software company. Cloud is still 12% of their business. So from that perspective, they'll have an easier time convincing the regulators that they can buy an enterprise software company as opposed to a consumer-oriented company.
But one of the reasons why a deal didn't go through in the first place, because Wiz is like, this is never going to go through, forget it. Regulators are never going to like it. Now, granted, that was during a Biden administration, but it's not like President Trump has all of a sudden greenlit a million
That's what I'm thinking.
M&A deals.
But an extra $9 billion.
Extra, they have sweetened the deal, so extra $9 billion.
They are paying for that potential risk.
Money talks, as they say.
All right, Mandeep, we know you got to run, get back to your desk, but in the next 10 minutes, Mandeep Singh, Bloomberg Intelligence Senior Tech Industry Analyst. Again, you're looking at Jensen Huang speaking at 1 p.m.
Yep, Wall Street time.
Oh, no, I guess we're an hour and 10 minutes away. Oh, okay, so you can walk slowly back to your desk.
Get a sandwich.
Yeah, okay, that's fine. All right, coming up, we're going to dissect some of the economic data from this morning, but also push ahead to Fed Chair Jay Powell. I was talking about him being a duck, then we thought maybe it's a swan. Paddle really hard under the water, but make no waves. Is that going to be the road of least resistance for Fed Chair Jay Powell? Michael McKee, Bloomberg International Economics and Policy Correspondent, will be joining us to take a look at that potential Fed news. He's then running to D.C. For the meeting. Of course, he'll be in that presser tomorrow asking the best questions. Let's just be totally honest. This is Bloomberg. This is Bloomberg Intelligence Radio. I'm Alex Steele alongside Paul Sweeney. We cover all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. We also wind up sourcing our amazing group of reporters and analysts throughout the newsroom, and one of them is Michael McKee, Bloomberg Economics policy correspondent.
Shucks.
Oh, yeah. He's literally running to a plane. He flies to D.C. It's very strange. We don't understand it.
Paul and I have discussed
we would
this
all
at
train
length.
it except for Mike McKee. So he's getting a plane. He's going to D.C. He's going to be there for the Fed meeting. He's going to be there at the Fed press conference as well. Hey, Mike, how do they make no waves?
Say as little as possible. They won't change. We know they're not going to change rates because they've already told us that. Then it comes down to they have a statement. They'll change the economic view of the part that says what the economy is doing a little bit to incorporate the fact that this is new information. But then they won't do anything else. The dot plot's not going to change. Probably 2 dots stay as they are, and the summary of economic projections, they probably will bring down their growth forecast a little bit. But beyond that, the idea is to get in and out of town without knowing much. Somebody asked me today what the goal of the Fed was at this meeting, and I said to get to the airport without the markets moving.
Exactly.
See? A duck.
Yes, I know.
Swan, paddle really hard under the surface.
Yep.
And then you don't make waves.
Well, they could. There's one area there where they might make news, and that's that they might pause QT because they worry about what happens with the debt ceiling, and the idea of pausing it would then keep them out of trouble, they think, going forward. But the people I've talked to in the markets think that if they pause it, that's the end. They won't go back to it. So that'll be one interesting question that could, there are desks within the trading houses that will care about that, but I don't think it is going to particularly move the overall markets.
How do they, I'm sure the question will be asked about tariffs multiple times. How do they respond to, how do you guys deal with it? Because we as just out here in the public, our heads are swimming out here. How do you guys deal with it? How do you think they have a tactful response to that?
Well, what Powell generally says, and I would expect him to say again, is that we don't comment on fiscal matters. Our job is monetary, and so he won't. He won't say anything about whether he thinks tariffs are a good idea or a bad idea. He has gone so far as to say tariffs generally raise price levels, and he could do that again, but he won't say it will be inflationary because it depends on how it's applied. And he'll say our job is to deal with the economy as we find it. And so once we know what the president's going to do, we can model out what might happen to the economy and see if that calls for any monetary policy response. But until then, we just have to sit and wait because it's not our job.
When it comes, though, to that part, the soft data is already reflecting the tariff risk, right? And if you wind up having, they've cited the University of Michigan Sentiment Index before. So if sentiment's being reflected of tariffs, don't they have to address it?
No. He'll be asked about it, and he'll say certainly everything that's going on is a reason why people could be nervous about the future, but we watch what they do, not what they say, is the old saying from the Fed. And until it shows up in the hard data, they can't really do anything about it. You look at the sentiment poll. The sentiment surveys are sort of like political polls. And the political polls told us that Donald Trump was going to lose. So the Fed is going to say, well, let's see if it actually translates into any action.
What's the piece of economic data you think they're focused on the most these days? Is it inflation? Is it jobs? Is it any one have precedence over the other?
It is definitely inflation, because the labor market is still fairly steady. Inflation has been sticky.
Unless you're a federal employee.
Unless you're a federal employee, but again, that's not something the Fed can do something about. But the inflation numbers have been sticky, and the numbers we got today, the final the import price numbers that get plugged into the PCE suggest that the PCE is going to move a little higher with upside risk, and so they're going to have to note that inflation is not coming down, but then that keeps them where they are rather than forces any kind of move.
All right, Mike, go get your plane to D.C. What are you in the air for, like 20 seconds?
If only. Unfortunately, the air corridors between Washington and New York are fairly busy, so sit on the runway for a long time.
So can you get to see the
it's still if as long as there's not a storm that slows you down, it's still faster than the train.
All right, well, now you just jinxed yourself. All right, Mike, thanks a lot. Mike McKee, Bloomberg Economics and Policy Correspondent. Here is a headline for you. Chief Justice John Roberts of the Supreme Court issues a statement. Apparently, he is calling impeachment for judges for rulings improper. Again, we're not entirely sure what rulings improper would mean, but he is calling for impeaching judges for rulings improper. Mike?
Well, Donald Trump tweeted this morning, and this is a response to, and a lot of people within the administration have been saying that these judges should be impeached who are putting temporary restraining orders on Trump administration moves. He's referring to Judge Boasberg, who yesterday said that the Justice Department has to explain why they ignored his order not to deport those Venezuelans.
And then, of course, the difference between an order versus a written order, also that coming down as well.
It's remarkable that the Chief Justice spoke.
Yes.
This never happens.
We will keep you updated on all of those headlines. That wraps it up for me and Paul. We're going to have ARK Invest CEO Kathy Wood speaking with Bloomberg Sonali Basak and Tim Stenovic in just moments. And then, of course, we'll have Balance of Power to dive more into these headlines. Happy Tuesday, everybody. This is Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
The call heard round the world is still underway. Welcome to the fastest show in politics as President Trump gets on the line with Vladimir Putin, now 2 hours into the call, as they discuss the potential for peace in Ukraine. This is 11 years to the day since Vladimir Putin illegally annexed Crimea. We'll have much more on this coming up with Bloomberg's Ian Marlowe. And as we bring you an important conversation ahead with Kathy Wood, we'll distill what we learned when it comes to crypto, AI, Tesla, Elon Musk, and so much more with Nathan Dean, Bloomberg Intelligence's senior U.S. policy analyst. President Trump announcing a new self-deportation app. We'll get to that a bit later. We've come a long way from Mitt Romney in 2012, and we'll get into it with our political panel later on this hour. Bloomberg Politics contributor Jeannie Shanzano and Republican strategist Ashley Davis are with us here for the duration. So welcome to the Tuesday edition of Balance of Power here on Bloomberg Radio, on satellite channel 121, and on YouTube, as we now bring you this important conversation with Kathy Wood and my colleague Tim Stenovic live on Bloomberg.
Our Bloomberg TV and radio audiences who are joining us now is ARK Invest CEO and CIO, Kathy Wood. Kathy, good to have you on the program this afternoon. I want to start right with Bitcoin and what you see as the outlook for Bitcoin's price. In recent weeks, you've come out and said $1.5 million per Bitcoin by the year 2030. Since then, though, we've seen quite a few outflows. We've seen a lot of volatility. Sonali just went through that. Is that still your view? 1.5 million by 2030?
Yes, it is our view. I think right now we're in a risk-off period generally. And if you've been watching Bitcoin, it's almost been a leader in terms of risk on, risk off. So I think that's what we're seeing. If we look at our on-chain analytics, what we see is, I'm sorry, I have to get this off. If you look at our on-chain analytics, what you will see is that we are in the middle of, we're a little bit more than halfway through a 4-year cycle. We think we're still in a bull market. And we believe that the deregulation that we're seeing here in the United States is going to be very important to institutions moving into this new asset class. Asset allocators have to have a point of view on this new asset class. And we think by putting it in portfolios, risk-adjusted returns for the entire portfolio will go up.
One question I have to the point you're making here on where the risk appetite stands around Bitcoin versus other asset classes, there has been a serious dip in markets, Kathy. If you had to choose where you would buy the dip the most, would it be in Bitcoin, Tesla, or NVIDIA?
Oh, my goodness. Well, we post our trades every day, and you'll see that we've been buying Tesla and names that mimic Bitcoin and other crypto assets like Coinbase, like Robinhood, taking advantage of this risk-off period.
So what does this mean in terms of where you see things going? Do you see more of a sell-off before things get better in these risk assets, Bitcoin or otherwise? How do you know that we're not at the lows?
So one of the things we think is going on right now is, and Treasury Secretary Bessent today said he does not believe that we're going into a recession. We think we've been in a rolling recession and that we are actually going to see some negative quarters here. And that's because the velocity of money is collapsing as people the labor force is worried that, and we're talking about federal, state, and local, quasi-government categories like education and healthcare. There's a lot of fear around job security right now. So we see the saving rate going up. We see the velocity of money coming down. And we do think we'll see 1 or 2 negative quarters. What we believe that will do is set this administration up and the Fed up with more degrees of freedom for tax cuts and perhaps lower interest rates, or at least ending quantitative tightening.
What do you see as the rate path for this year? The Federal Reserve kicking off its 2-day policy meeting today. We're going to hear from Jay Powell tomorrow. How many rate cuts do you see happening this year, Kathy?
Well, we tend not to be very short-term in our focus, but if we're right and inflation is going to surprise on the low side of expectations, we wouldn't be surprised to see 2 or 3 cuts. Now, if you look at an indicator called Trueflation, it's probably the broadest measure of inflation out there. It is saying inflation is down to 1.65%, well below where the Fed is pinning it at roughly the CPI's 2.8%. And we believe that the combination of actually food prices have started coming down. Even egg prices have started to collapse, as a matter of fact. Gasoline prices are coming down. We're seeing some rent prices coming down. So we think inflation is going to surprise on the low side of expectations for those reasons, and because innovation is inherently deflationary. And our 5 innovation platforms are all driving different kinds of deflation. Good deflation, which we'll call unit growth, but deflation nonetheless. So we think the Fed is going to have many more degrees of freedom in the second half of this year than most people think. We could see more than the number I just suggested, 2 to 3 cuts.
Hey, Kathy, you and I have spoken quite a bit over the last few months. You were optimistic about the Trump administration, specifically with regard to disruptive technology and your thesis, but also with cryptocurrency. You just spoke about the easing regulatory environment around crypto. I'm curious, though, what you think about President Trump's relationship with crypto. The Wall Street Journal reported that the Trump family has held deal talks with Binance following that guilty exchange plea. And then also you have the president getting into meme coins. You have World Liberty Financial. Are you at all concerned that the Trump family is too close to crypto?
Well, I think the Trump family is very supportive of crypto, which is great. It's completely different from the environment we had been in. Our view on meme coins, we're not as focused on them. We would not be putting them into our various private funds. And I think that the combination of AI and blockchain technology is creating millions of these meme coins. We think most of them are not going to be worth very much. We think there are just going to be a few crypto assets that will gain most of the spoils in the entire ecosystem.
Kathy, even some of the people who believe most firmly in the crypto story here, they are still worried about those meme coins and a lot of retail investors being stuck holding the bag. And another thing that's happening at the same time is you have a lot of exchanges looking to loosen their listing standards. Do you worry that this could go too far, that too many coins that are going to hurt retail investors ultimately will be listed on too many exchanges?
Well, I think that the SEC did a very important thing in declaring these meme coins not securities. What they essentially were saying is, we are not going to regulate them, and it's buyer beware. And so if I have one message for those listening who are buying meme coins, buyer beware. And I think the message is loud and clear from the regulators. What we think will happen is there will be some fearsome declines in the prices of some of these meme assets. And, there's nothing like losing money for people to learn. And they'll learn that the SEC and regulators are not taking responsibility for these meme coins.
Buyer beware of what specifically? Because you did say that you believe that there are only certain crypto assets that will gain the most spoils. What do buyers need to be aware of?
That the millions of meme coins will probably end up worthless. So when we're talking about the big three, we're talking about Bitcoin, Ethereum, Solana. The use cases for those are multiplying. And we think they're going to become very important in the years ahead. Meme coins, not so.
What about Trump's meme coin? Is that one of the ones that you think will become worthless, Kathy?
It's interesting. The meme coins will be collector's items. So digital collector's items. And so, of course, some will withstand will withstand the judgment of time, and that may be one of them. But our working assumption is that when you're talking about millions of meme coins, that that's just a step too far, and that most of them are not going to be worth very much.
Kathy, I want to switch gears here a little bit and talk about something that I know you've been focusing on a lot, tokenization. Now, one question I have about this is, do you think the investment community, particularly the venture community, is underestimating how catastrophic this could be to their business model? If you have companies that can raise money through tokens rather than through traditional venture capital and go public this way or list this way rather than through the traditional listing process, is that a sea change coming for the way that this has typically been done?
I actually think it's very complicated, but in terms of our own venture fund, and we did start an interval fund, which is a 40 Act fund. I mean, we could see tokenizing that, putting it on chain, and enabling many more people to get involved with the private world. And I think other venture capital firms could do much of the same thing. I do agree there's going to be a lot more competition, a lot more ways to fund new companies. So that is true as well. So I'd say this new world's going to be complicated. When we hear Larry Fink of BlackRock saying he wants to tokenize everything, it's big because it takes a lot to move the needle at BlackRock. So we're watching the tokenization movement very closely for our own purposes as well.
A little earlier, you said that when you look at these dips, you've been trying to take advantage of them, particularly in part through Coinbase and Robinhood. I have a question about Robinhood in particular. Do you think it looks more and more like Coinbase in the future? And to the extent that you're buying more of it, is it on the thesis of expanded stock trading among retail investors, for election betting, or expanded crypto trading? What of those three things is your favorite thesis?
Well, our main thesis for both is we're looking for the winners in the digital wallet space. Most of us are not going to have many wallets. You can think about this in the same way you think about credit cards. Most of us don't have very many credit cards. So we're looking for those winners. And, Robinhood and Coinbase are coming at this from different angles. Of course, Coinbase from the crypto first angle, and Robinhood from more the equity end of the spectrum. Both of them have to, Robinhood has nailed the user interface. I think Coinbase is putting a lot of effort into getting that right as well. So we're looking at them as two of the bigger winners.
All right, there you have it from Kathy Wood speaking with us here live on Bloomberg in a conversation with Tim Stenivek and Shonali Bossack. I'm Joe Matthew in Washington. We've been listening along here in what is always an interesting back and forth with Nathan Dean, Bloomberg Intelligence Senior U.S. Policy Analyst, who we talk to a lot about crypto regulations and some of the other matters that Kathy Wood was talking about. Quick check on the baseline here, by the way. We've been watching Bitcoin tumble today, down almost 3% now, just trading above $81,000. You heard Kathy Wood talking about Tesla, down 4%, $8 a share. Robinhood down 6%, or about $2.50. It's not a great day on the markets, but we could learn a bit from what we just heard, and that's why Nathan is with us. It's good to see you here. Standing by targets for Bitcoin, despite the sort of sentiment that we've seen here since the last couple of weeks, since the big rally that followed the inauguration, the election, and the inauguration for that matter. What do you make of her steadfast view?
I think she's right, but it's just going to take a long time. I mean, when it comes to deregulation, she focused on that. Let's talk about what could happen in 2025. We first had President Trump come out there with this executive order. The strategic Bitcoin reserve did not include the language that many people in the cryptocurrency industry wanted, where they were going to go purchase Bitcoin. But then secondly, you've got this stablecoin bill, this Genius Act, which just passed the Senate Banking Committee last week. We think it's a 70% chance it can get done by July. But then for the rest of the cryptocurrency industry, what about Bitcoin or Solana or Ethereum? Then they're going to have to sit and wait, because the SEC has a crypto task force that's currently working. Their first meeting is on Friday. Everybody can listen to it. But the SEC can only do things within its jurisdiction, and that is securities. And Bitcoin is not a security. So for the cryptocurrency industry and this idea of institutional adoption, which is what they're really looking for, they need Congress to pass a bipartisan crypto market structure bill. I don't think that could happen in 2025. So if you're looking for companies like Coinbase and Robinhood to get this regulatory clarity, you're probably looking at mid-2026 before anything really impacts the company's bottom line.
Well, you're no stranger to politics. Isn't that a liability for Donald Trump, who promised to get this done, elected in part because of the progress that could be made, his embrace of crypto?
Well, but there's only so much that you can do without an act of Congress. You know, the Bitcoin reserve was certainly one thing that he could do. We called it that. We think it was going to be a rebranding of the already had or already owned cryptocurrency assets. But then, convincing Congress to go out there and purchase more was going to be a tough task. And convincing Congress to create this bipartisan crypto market structure bill is going to be a tough task. The good news for the crypto industry, though, is that they're actually making progress with the stablecoin bill. It passed the Senate Banking Committee 18-6. I did a vote count just before coming on this show. I think it gets 60.
Really?
So even if Elizabeth Warren comes out there and says that I'm going to filibuster, I think there's enough Democratic votes to overcome that. But then the idea is, what do we do with the spot markets for commodities like Bitcoin? The CFTC is the one that primarily the industry wants to have that authority, but it takes an act of Congress. I think it can get there. The challenge is just how much time do they have to debate about it, and whether or not they can get it done when the broader macro agenda could actually, slow things down.
So what's holding up? Is it Democratic opposition to a framework bill? I thought we had kind of gotten our arms around this idea in the last Congress. Why such a long wait?
So I think it's the political capital aspect of it, because look, I think you can eventually get to 60 votes in the Senate, but there are still a lot of skeptical Democrats out there, and there are a lot of folks saying, look, when President Trump has a meme coin and the meme coin goes up, a lot of people make money, and then subsequently it declines. So a couple of days later, that's something that's a lot of folks in the crypto industry don't like. We just heard Kathy Wood say meme coins, buyer beware, for speculation purposes. So I think what the Republicans did here, and this is specifically, I think, the Republicans in the Senate, is what they did here is they said, look, let's take the stablecoin piece first. That was the one that had the most bipartisan support. Let's get it over the line. Let's get it to the president's desk, and then we'll worry about market structure. Because had they gone forth with market structure, I think they would have been trying to boil the ocean as opposed to boiling that lake. And like we saw with the Safer Banking Act and marijuana in the last Congress, then it just gets messed up, gets delayed, and never ultimately goes nowhere.
If Nathan Dean is with us, we have to ask you about a major headline about the Fed yesterday. Of course, you saw the Bowman headline, and we talked about it with Patrick McHenry, the former chair of the House Financial Services Committee. Michelle Bowman nominated for the Federal Reserve's vice chair for supervision. We talked to Nathan a lot about Basel III, which maybe just went out the window, and the idea of what else could take its place. Patrick McHenry with us at the table yesterday. Listen.
It would not be exceeding the European standards, which was Michael Barr's goal, not what he said, but what the policy looked like. It is a reworking from soup to nuts, throwing it out, starting it over again, and making sure that it's a data-driven operation, not a politically driven, ideologically driven operation like Michael Barr put forward.
Not a big fan of Michael Barr at any point in his tenure holding the gavel. What does take its place?
Well, the interesting thing there is that, I was going to say Chairman McHenry, former Chairman McHenry said is that, they wanted to be in line with European standards. So they've already implemented it. It's called Basel IV. Capital requirements went up around 3 to 4% in Europe. Now, the initial Michael Barr proposal was 19%. He declined it down to 9%. Our view is that when Governor Bowman gets in there, and we think she's going to be confirmed as Fed vice chair, you're going to see more of a capital neutral rule. So maybe think a 0 to 1% increase in terms of capital requirements. Because like Chairman McHenry said, this thing's going to get blown up and then reproposed and restructured. That also signals that it's not going to happen in 2025, probably won't happen in 2026. It could, but implementation of this is most likely for 2027. What bank investors need to know most importantly, though, when it comes to the Basel III endgame is that if you get a capital neutral rule and our capital requirements go up 0 in the United States, do European regulators subsequently decline theirs to make it online with international standards? So this idea of race to the bottom is something that's floating out there. But I will also just add that Governor Bowman probably has other things that she wants to do first. This is going to take time. Look for changes to the annual stress testing first. Maybe look for changes to the enhanced supplementary leverage ratio, the ESLR first. But eventually they'll go back to reproposing the Basel III endgame. I just don't think it's going to happen in 2025.
It's going to be a couple of years, it sounds like, if that's the case. So producer James just got the Basel III T-shirts made. They're already going to the flea market, I guess. Collector's items. I knew it. Nathan, thank you so much. Nathan Dean on the heels of Kathy Wood. Great to see you. Bloomberg Intelligence. Find him on the terminal, of course, and online. I'm Joe Math. This is Balance of Power on Bloomberg Radio, on the satellite channel 121, and on YouTube, where you can find us right now. Search Bloomberg Business News Live. Watching Wall Street in the wake of all of that conversation, we are headed lower. We'll get an update from Charlie. I think actually we might be doing that right now. We'll do that in a couple. Stand by. S&P 500 down 1%, 63 points. The NASDAQ down more than 1.5%, 287 points. Big news coming from the Supreme Court. This is unusual. We didn't see it coming, but we just heard from the Chief Justice. John Roberts says the impeachment of federal judges, which has been proposed repeatedly by this administration, and God knows Elon Musk has made it a hobby of his, is, quote, not an appropriate response, unquote, to disagreement with their rulings. This is pretty extraordinary to be hearing from the Chief Justice right now, and I'm glad to say that June Grasso is with us, the host of Bloomberg Law. It's been a while since we've been able to compare notes with June, so you know it's got to be pretty important, June. It's great to see you, and I appreciate your stopping your day for us here.
My pleasure.
What is it that pulled John Roberts out into the open to make this statement today?
Well, and as you mentioned, extraordinary, especially for this Chief Justice. I can't remember the last time he's said anything like this, sort of sua sponte, as they said, just out of the blue, because of some of the things that have been going on and today with Trump, with that Truth Social post where he called Judge Boasberg, who is the judge in this case involving the Venezuelans who were flown to El Salvador, and the question is whether it was done against that judge's order. So because there are calls for his impeachment, and in fact, as you mentioned, an impeachment has already been filed against one judge who made a ruling in the Doge case over the Treasury data. And so with more calls for this, I think he's just trying to step out there and say, this is not the way to go. And it's not the way to go. I mean, impeachment, you know, high crimes and misdemeanors, treason, bribery, not giving a bad ruling to the Trump administration. That is not a ground. What you do is you get a bad ruling, you appeal it if you can appeal, if it's the part of the process at that step. The Trump administration is taking the birthright citizenship cases to the Supreme Court. Why are they calling for impeachments at this point? And as you mentioned, Elon Musk has been doing this repeatedly, calling for every bad ruling to be, you know, the judge to be impeached. And that's just not the way it's done.
Donald Trump himself taking to Truth Social today, as you referenced this case involving the deportation of suspected Venezuelan gang members. Quote, "This judge, like many of the crooked judges I'm forced to appear for," he writes, "should be impeached." All caps, triple exclamation point. But June, of course, this is what Donald Trump does, right? I mean, did the Chief Justice actually need to say something here? Was there a legal mechanism that was about to lead to their impeachment?
Well, I think he wants to nip this in the bud, sort of, because you do have that one impeachment notice being filed, and now you have another GOP representative saying he's going to file for impeachment of Judge Boasberg, who, by the way, is a well-respected judge, the chief judge, the senior judge on the D.C. circuit. He's been on the bench since 2011, really well respected and tough. So it'll be interesting to see what he does in this case with the Venezuelans. But I think, you know, the Chief Justice wanted to make a point of this. And just last week, two senior judges talked about the importance of not having impeachments and how it's wrong to have impeachments for judges. So it's something that's been building up. It didn't just happen today, but I think maybe having Trump say that might have signaled to the Chief Justice, I better step in now because this is going to get out of control really quickly. And it's already been a concern. It didn't just happen today. It's been a concern for weeks. The impeachment motion for that judge I mentioned was filed last month. So even though you know they're not going to be able to get them impeached. I mean, if you couldn't impeach Trump years ago, they're not going to be able to get the votes to impeach them. But just the whole process of putting a judge through that in any respect when it's just about an order, and it's not even final orders, it's preliminary orders that they're saying are so bad that the judges should be impeached. It's just not the way the legal system is supposed to work. And I think the Chief Justice just said, let me stop this right now if I can.
Wow. Sounds like, the Chief Justice is speaking up for his team. He's looking out for the judicial branch in this case because, June, I think we can agree here in our remaining moment, the judicial branch has turned out to be the check on the administration while Congress is still trying to find the door.
Exactly. And now we're faced with the question of whether Trump and the administration are going to obey the orders of this particular judge, the judge in this Venezuelan case. And as you mentioned, I mean, the Chief Justice, it's really extraordinary for him to say this, to step in at this point, or any point really. Usually you hear what he wants to say in some speech he gives or in a Q&A he does at a law school. You don't hear it like this. Here's a statement from the Chief Justice of the United States. It's extraordinary.
Remarkable. I'm glad we could spend some time with June on that. June Grasso, thank you so much. It'll be a fascinating edition of Bloomberg Law, of course, coming up after Balance of Power this evening here on Bloomberg Radio. Thank you for being with us. I'm Joe Matthew in Washington. We're spinning a bunch of plates here. A couple of them weren't even in the air when we started here at 12 noon. We want to update the markets. We're also going to update for you what is happening overseas and at the White House today. They are now, 2.5 hours into this phone call between President Trump and Vladimir Putin. Ian Marlowe will join us ahead to talk about what's going on here. We've also got our eyes in the Middle East today with a ceasefire that appears to have just fallen apart. But it's the markets we want to hit right now, and our colleague Charlie Pellet is standing by at World Headquarters in New York with his eyes on Wall Street. Charlie, how's it look?
Indeed, lots going on. A lot of moving parts to this market. Joe Matthew, right now, bottom line, lower across the board. 24 minutes ago to go until we hear from Jensen Huang of NVIDIA. His speech coming up at 1 o'clock Wall Street time. NVIDIA shares right now trading lower. We got NVIDIA down now by about 1.8%. Bottom line here, stocks selling off. The Dow, the S&P, NASDAQ all in the red as investors prepare for the Fed's decision tomorrow on interest rates. They're also assessing the impact of President Trump's trade policies on the economy, and as you alluded to, a number of geopolitical issues. S&P right now down 57, down 1%. We've got the Dow down 293, down 0.7%. The NASDAQ Composite Index right now down 270, lower by 1.5%. 10-year at 4.29%, the 2-year 4.03%. Spot gold up $34 the ounce, looking at a record $3,035, up 1.2%. And West Texas Intermediate crude down 0.6%, 67.16 a barrel on WTI. You heard Kathy Wood talking about it. Bitcoin moving lower today. Bitcoin right now down by 2.5%, 81,809. Bitcoin moving lower. However, Kathy Wood sticking with her target of $1.5 million by 2030. Again, recapping, stocks lower, the Dow, the S&P, NASDAQ, all in the red. Balance of power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet, thank you so much. It's still St. Patrick's Day for Charlie. God love him. The voice of Wall Street and the New York subway. If you were on YouTube, you would have seen that beautiful green tie. Find us on YouTube right now by searching Bloomberg Business News Live. We're 2.5 hours in, give or take a couple of minutes, 2.5 hours into a phone call between President Trump and Vladimir Putin on what is today 11 years to the day since Putin illegally annexed Crimea. They're talking about Ukraine, of course, how to bring this war to an end, although based on what Donald Trump said on Air Force One over the weekend, they've already kind of framed what this is going to be. They're essentially talking about dividing up assets at this point, knowing that Ukraine does not have a seat at the table. We're going to get a readout at some point. There are very few people on this call. It's just the two presidents and a couple of aides listening in. And Ian Marlowe joins us right now, Bloomberg senior reporter covering U.S. foreign policy. It's great to see you. The anatomy of a phone call like this, we don't know what they're talking about, but give us a sense of the sort of process when they get on the line. It's not like Donald Trump's calling a small talk Vladimir Putin. They're, I presume, set up by both offices. They're introduced to each other. Is there a framework for the call? Is there an agenda? Or do you just start ripping?
I think generally there's an agenda on these types of calls, and both sides now know what they want to get out of this. I think the issue for the Trump team is emerging from this still looking strong and not looking like you're getting run around by Putin, who, you know, people have long said kind of wants to engage in this process in part to potentially spin it out. And, you know, continue getting battlefield gains and the rest of it while the U.S. pressures Ukraine. So I think there's a lot of pressure on Trump's team now to emerge from this on both sides, not looking weak vis-a-vis Russia and not looking too fierce when it comes to pushing the Ukrainians to the table, which has been the main criticism, I think.
Well, that's right.
Europe.
I mean, we are talking about, he says we're talking about land and power plants, dividing up assets. We're essentially talking about how great the reward will be for Russia after a decade of aggression, no?
And Bloomberg is also reporting that one of the Russian asks on this is for the U.S. to halt weapons shipments to Ukraine as well. So there's not only the sort of post-ceasefire negotiations in terms of what sort of things Trump needs to say to bring Russia to the table, but there's also sort of immediate things that Russia is probably going to look for. And you know, Trump, you know, Secretary of State Marco Rubio and others have said they just want to stop the fighting. And they kind of use that as an explanation for almost any question people have about this process. You know, will it involve Ukraine giving up territory? Will it involve security guarantees on the U.S. side? And they just say, look, we just want to stop the fighting, end the bloodshed, and then we can kind of figure out everything. But a lot of people already know what sort of things are being debated here, and they're very concerning for people in Europe and for Ukraine. And so there's not a lot of detail at the moment on exactly what Trump is necessarily offering to Russia to bring them to the table. And at the moment, it does look like Russia has at least some of the upper hand, given how desperately it seems Trump wants a deal and how willing he is to pressure Ukraine to bring them to the table too.
Yeah. We can tell you the call has ended. Just want to be clear here. It ended some time ago, as a matter of fact. NBC News is now letting us know. Typically, the White House will issue a statement saying that the call has ended. That did not happen. A White House official telling NBC News the call ended. It lasted over an hour and a half. So they've been off the horn now for roughly an hour. We still don't have a readout. What do you think happens next?
I'm not honestly too sure. When we were in,
they may not either.
Yeah, exactly. I mean, when we were in Saudi Arabia with Secretary Rubio, when they were dealing with the earlier talks with the Russians, I mean, just process-wise, the Russians bring along their own delegation, their own press, and they are, very free and talking to the media about what they want. And so, some of us with the U.S. delegation were learning things via Russian state media and stuff. So sometimes that's the way this process works. The White House might be more formal about it. But I think we'll probably get a readout, and then we'll have a sense, maybe, Trump is unorthodox. He might, jump in front of the cameras and give his sense of what's
We're going to have to see him at some point today, right? We should let our viewers and listeners know that there's a 3 p.m. EO signing that's on the schedule. It's the only thing on the White House guidance today, so maybe he uses that as an opportunity, or they can always add something. I guess a win would be a deal, right? I mean, that's the ultimate win. Would a meeting between these two also qualify as progress?
I think so, yeah. I mean, I think there's the White House is very interested in showing progress on an issue that Trump talked about a lot on the campaign trail, and a lot since he's come into office. He's put a lot of resources into it. There's always the risk with a leader-level summit, Putin, Trump, that you reward, Putin like, in the past he had rewarded Kim Jong-un with a summit that's premature. Yeah. You know what I mean? Before the details have really been hashed out. Right. And, so far in this process, we've seen, since the inauguration, we've seen a lot of big foreign policy announcements and the details being hashed out later in a very strange way, sometimes in the courts. Sometimes things fall apart. Sometimes, like with what's happening now in the Middle East, with Israel renewing its attacks, we're seeing things reverse from what Trump and his team had wanted. So we'll see. But I think a summit would be, if it's just Trump Putin, then you're into criticism about whether Ukraine is involved and whether Trump is moving forward with this without Ukraine. So we'll see. We'll see.
Just go to Yalta. I mean, do people realize that's in Crimea? It's kind of amazing how this stuff works. Yalta references running wild this morning. In our remaining 30 seconds, is there a world in which we see Vladimir Putin at the White House? It's been floated as an idea.
And he's talked about Xi Jinping coming to the White House as well. Which
That's
is
not
also,
real, right? Either of these?
It's hard to see them happen. It's hard to see the team allowing that to happen, but we'll see.
Fair answer. Ian, thank you. I know you've got a lot of work ahead as we stand by to hear more about what happened on this call. It is done. They've hung up the phone, and we're standing by for a readout from the White House. We'll assemble our political panel next. In Washington Live, I'm Joe Matthew. This is Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ very much in the red. We got 20 minutes to go until we hear from NVIDIA's Jensen Huang. Ahead of that speech, we've got NVIDIA shares leading tech lower, down 1.5%. Among other tech names, Tesla right now down 4%. S&P in the red by 55 points, 56.19 right now, a decline of 1%. Dow Industrials down 310, lower by 0.7%. NASDAQ down 261, a drop for NASDAQ of 1.5%. The 10-year 4.29%, with the 2-year 4.03%. Gold now surging $34 the ounce, $3,035, up 1.1%, and Bitcoin trading lower by 2.4%. Bitcoin 81,911. Housing starts bounced back last month as the weather improved, and with that story, here's Bloomberg's Vinny Del Giudice.
In February, housing starts rose for the second time in 3 months, up more than 11%. That reverses January's weather rack drop. Beyond the weather, mortgage rates are weighing on the housing market, with the number of homes for sale the highest since the financial crisis. Building permits, in turn, are down. Potential U.S. tariffs could add another dimension, higher costs for Canadian lumber. Vinny Del Giudice, Bloomberg Radio.
NVIDIA lower in the run-up to CEO Jensen Huang's keynote speech, 1 o'clock Wall Street time. Chief Justice John Roberts says the impeachment of federal judges is not an appropriate response to disagreement with their rulings, and Texas is reporting 20 new confirmed measles cases since March 14th. Recapping, stocks lower, S&P down 57, down now by 1%. Balance of power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, great to see you. Charlie Pellet, live from New York, every day here on the fastest show in politics. We're covering politics in Washington. Charlie keeps his eyes on the markets for us, and coming off our conversation earlier this hour with Kathy Wood, a lot to consider there. 1.5 million, standing by the forecast. All right, so here's the news. It's being reported, at least, by multiple sources now that the call has ended. The call heard round the world, even though we don't know what was said on it. Trump, Putin, about an hour and a half. They got 90 minutes under their belts this morning, of course, remembering what comes along with a call like that, using translation and so forth. Sometimes these can be labored. Questions about whether that's a long call, knowing that Vladimir Putin met with Steve Witkoff for something like 4 hours when they had a chance to sit down. And these two, of course, know each other well, and they know what they're talking about. Donald Trump just, of course, last weekend on Air Force One, talking about the contours of a deal that in some cases has already been hashed out. He says they're talking about dividing up land and power plants at this point, which may well have been the center of their call. I'm glad to say our political panel is with us. Let's hash out what we know here. Ashley Davis, Republican strategist and partner at S3 Group, back with me in Washington. In New York, it's Jeannie Sheehan Zaino, Bloomberg Politics contributor, senior democracy fellow at the Center for the Study of the Presidency and Congress, and our Democratic analyst. What do you think, Jeannie? I don't know. We don't have a readout. We haven't seen Donald Trump since then. He does have a 3 o'clock event on the calendar that he could turn into a press event, presumably, to talk about this. Was this a success in 90 minutes? What's your expectation?
Yeah, I mean, it's anybody's guess at this point what happened right before the speech. Putin, right before the talk, rather, on the phone conversation, Putin gave a pretty anti-West speech, mocking the G7, saying that they wanted peace and they were still going to try to come after Russia. So you're hard-pressed to imagine he was very conciliatory in the phone call. So I think that's what's got Ukrainians, Europeans, all of our allies so concerned, is what could possibly have been agreed to. And of course, there's also concern that Donald Trump has echoed Russian talking points about the election, about public opinion polling. So potentially there is concern that he heard from a plea from Putin and he's going to come out swinging against Ukraine. So it's going to be really, really fascinating to hear what the readout on this looks like.
Ashley, you know what it's like to be in the Oval Office on a day like this. We, of course, don't know what was said on the call, but talk to us about the decisions that are being made and some of the choreography that surrounded this. This wasn't like Donald Trump picking up the phone in his bedroom calling Vladimir Putin today.
No, absolutely not. And obviously, just as Jeannie said, this has been weeks, if not months, of negotiations back and forth. But the president really wants this done. He wants a ceasefire. You've seen with his they're not tweets anymore, they're X's,
They're truths,
I guess.
I think.
Truths.
Yeah.
That 2,500 people are dying a day. I don't know if that number is accurate or not, but he wants this war over. And I think what Jeannie said is, do we give up too much by getting a ceasefire or whatever else? But I'm shocked, to be honest with you, if we'll see this, if it really happened, is if both presidents were really in that meeting for an hour and a half. Like, just from my experience under Bush, like, he didn't do hour and a half meetings.
Okay, yeah.
Everything was teed up so much that those final negotiations were just for the two principals to kind of come in and shake hands.
So that's
But-
the style of this administration, or you think other things are happening?
No, I'm just saying my experience with the Bush administration in regards to the Trump administration. No, I think he's the one that.
So he's
the art
doing
of
the weave.
deal.
He's doing the weave on the phone with Vladimir Putin.
I think so. I mean, that's what I think is going to be very interesting. And I'm assuming he did not want to get off of that phone call, or it was probably in the Situation Room and it was probably live.
Yep, sure.
But he probably did not want to get off that without some sort of deal. That's my gut right now, but I could be completely
No, I love this.
Wrong.
I'll ask you more impossible questions to answer. Jeannie, there have been a lot of references to Yalta today. We remind our audience that Yalta is actually in Crimea. It was 11 years ago today that Russia annexed Crimea. And some of the analysis would suggest that this is entirely an exercise in how much Russia should be rewarded for its behavior. Do you see it that way?
Yeah, first of all, after you guys are talking, I'm trying to think of how does weaving translate into Russian, and what is Vladimir Putin hearing as Donald Trump is weaving? I think one thing that we heard from the National Security Advisor over the weekend was fascinating on this point about Crimea, because he talked about the fact, is it really in our interest, the United States, to drive every Russian out of Ukraine, including Crimea? And that raised a lot of concern that potentially the Trump administration is open to allowing Russia to negotiate to keep some of the land that it took. And obviously negotiations, you have to be able to ask for what you want and work this out. The problem on the Ukrainian side is, of course, they agreed to the ceasefire or the pause without condition. And to the point that you guys were just making, the question is are we going to allow Putin to push for what he wants and not allow Ukraine to get something in return? And that, I guess, is really the concern that we're all going to wait to hear what the readout on this thing looks like.
All right, I want to ask you both about what's happening in a completely different room here in Washington, D.C., a courtroom where the administration was due to provide more information today about its decision to not adhere to a court ruling, to not turn an airplane around that was carrying, at least one airplane. There could have been two, we've now learned. More than 200 suspected Venezuelan gang members. They ended up in El Salvador. We talked about this a lot yesterday. The judge says you violated a court order here. The Attorney General, we heard from AG Bondi on Fox last evening, says otherwise. Listen.
This one federal judge, again, thinks he can control foreign policy for the entire country, and he cannot. And right now we're evaluating our options.
Okay, so the administration may continue doing these flights?
Absolutely.
Absolutely. Fast forward to today. By the way, there's no decision on this coming following that request for more information. We just heard from the Chief Justice, Ashley, John Roberts, suggesting the impeachment of federal judges is, quote, not an appropriate response to disagreement with their rulings. Very unusual to hear a statement like this from the Chief Justice, knowing that Donald Trump, as recently as today, and Elon Musk on a daily basis, have been calling for the impeachment of judges. How important is this to hear from the chief?
I think it's a very important statement when we just talk about the word of impeaching judges when you don't like a ruling. And that's what he's talking about. He's not, which I think is very important to remember, he's not talking about the case.
Correct.
And
this has come up in any number of cases where we hear about impeach the judge.
And also, there was a lot of talk in the last administration about just the Justice Department being politicized on both sides. I mean, this has been a long, which I feel is a horrible thing for our country to have to be talking about, because that's one thing we should be believing in is the judicial system. However, I'm going to be conservative on this issue in regards to when they did get the ruling that they should turn around the plane. Are we really going to turn around 261 gang members that have committed horrible crimes in this country and are here illegally. So my question would be, why do they have rights one way or the other? And it's just a losing argument, I think, from the general public that we want to bring these people back. But I understand the bigger dynamic of the judicial conversation. But in the words of national security and in the thoughts of what we should do, these people should not be in our country.
What do you think about this, Jeannie? We talked about it yesterday. Whether you think that these people deserve due process is one question. The Chief Justice is trying to stop this conversation about impeaching judges right now, though. Will he be effective?
I don't know. This is very reminiscent of something that Chief Justice Roberts said in 2018 when he said we don't have Obama or Trump judges. And here he goes again. And I do think it is an important moment because so many people have been talking about, have we reached a constitutional crisis or not? And here you see the Chief Justice of the United States, who seldom likes to enter the political fray, taking very, very seriously a very troubling post on Truth Social by Donald Trump today, talking about impeaching a judge that he disagrees with. And the clip you played from Pam Bondi is just fascinating because I don't know where Pam Bondi has been, but it is always one judge who makes a decision. And then if you don't like that decision, you appeal up. And that's what I think is very troubling about all of this, is there are procedures in this country that we follow to ensure that we all enjoy rights and liberties. And, you know, on these 200 plus or minus people who were deported, the fact is nobody knows who they are. It is a big black hole. We don't know if they were gang members. We don't know what their names are. We have to just trust the president. Okay, we trust them. But if next time Kamala Harris comes into office, are Republicans going to want to trust her when she picks up 200 people and throws them out of the country and says, don't worry, we vetted them. They were very bad people. So this is why we give people rights. If they've committed crimes, if they're here illegally, obviously you remove them. But the problem is here, we have no verification on those points. That's why a federal judge looks at each case and says yes or no. And that's the real problem that we're facing here.
Well, maybe the answer to this whole situation, Ashley, is self-deportation. I want you to just park that idea for a second because we've got some history here around this. And Donald Trump is going there again, taking to social media today from the White House an especially crafted video to urge unauthorized immigrants to see their way out, self-deport. There's even an app for that. Listen.
People in our country illegally can self-deport the easy way, or they can get deported the hard way, and that's not pleasant. The Biden administration exploited the CBP-1 app to allow more than 1 million aliens to illegally enter the United States. Now my administration is launching the CBP Home app to give people in our country illegally an easy way to leave now and self-deport voluntarily. If they do not avail themselves of this opportunity, then they will be found, they will be deported, and they will never be admitted again to the United States, ever again. You're never coming in.
All right, I think you get the point. If you're listening on Bloomberg Radio, he's sitting behind the Oval Office for this. And of course, it brings us back to the 2012 presidential campaign. Remember, Mitt Romney was laughed at during one of the primary debates when he suggested self-deportation. Analysis following the outcome of that election, as you read at Politico, go back to November of 2012. Fascinating analysis that Mitt Romney's maniacal and crazy policy of self-deportation, these are quotes, alienated Asian and Hispanic voters, helped cost him the election. This individual said he had a crazy policy of self-deportation. He lost the Asian vote. He lost everyone who was inspired to come into this country. That man was named Donald Trump. Ashley, a lot's changed since 2012.
First of all, we didn't have the border crisis that we have or had right now as we did.
But is self-deportation a more serious concept now than it was then?
So I think it is for a few reasons. And by the way, he did put this in, they did start this last week, and you saw one of the Columbia students actually did take advantage of it and leave.
The new app.
the new app. And so I think they're trying to do everything possible to get as many people out that came here illegally. And so this is what they're doing to say, you're not going to be in trouble if you do it now, and you can maybe try it again. And I hear the music. I need to stop talking.
That's all right. We'll have more time. With this, Ashley Davis,
But I actually
Jeannie
think it's a good
Shanzano.
idea.
Self-deportation is back on the table. Our great panel will be back with us in our second hour. The phone call has ended between Donald Trump and Vladimir Putin. We'll have a lot more on that in hour 2 on Balance of Power here on Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
The call has ended. Trump and Putin. Welcome to the fastest show in politics as the two presidents discuss how to end Russia's invasion of Ukraine without Ukraine on the line. I'm Joe Matthew alongside Kaylee Lines in Washington. Welcome to the Tuesday edition, the early edition of Balance of Power here on Bloomberg TV and radio. Kaylee, a lot of references to Yalta today, but it's unclear if these two had any breakthroughs in this call.
Yeah, as we have yet to hear from the White House or from the Kremlin, for that matter, as to what the content of this conversation was. We just know it lasted for some time, over 90 minutes is what our reporting suggests. But you would think if a deal was actually made, if there were some kind of breakthrough, the White House would be eager to announce it, as President Trump has made it very clear what he wants to achieve here.
That's true. He does have an event on the guidance for a bit later today, but it was closed press, Kaylee. There's still a chance that we'll hear from Donald Trump, even though apparently this call ended some time ago, about 90 minutes ago, if that turns out to be the case. We've had a couple of reports to that effect so far. He could speak. We could also get a written readout on the call, which would be typical. But of course, some of the traditions that we associate with the White House are not always put forth by this administration. We'll just have to wait and see what this day brings.
And that's why we also have to keep our True social feeds up and refreshed, because it just as easily could come from there. So we'll keep watching to see if we get a readout. We also have to talk about the courts today, as the backlash of a federal district judge over the Venezuelan deportation flights over the weekend has now actually resulted in a rare statement from the Chief Justice of the U.S. Supreme Court, John Roberts, who says it's not appropriate to pursue impeachment.
Something that the president suggested just today on Truth Social, and has been a daily hobby for Elon Musk to talk about impeaching judges. It looks like he's just trying to stop this conversation. It's not exactly a process underway that he's standing in front of, but we'll have more on that coming up this hour.
Indeed, we will. Just like right now, we have more on what's moving in markets on this Tuesday. Charlie Pellet has a look from New York. Hey, Charlie.
And good day from New York with the Dow, the S&P, NASDAQ, all very much in the red. All about NVIDIA at this hour. NVIDIA shares trading lower right now. We have got NVIDIA trading down as CEO Jensen Huang is about to speak in San Jose, California at the GPU Tech Conference AI. It is an event described by the New York Times as the Super Bowl of AI. 25,000 people in attendance right now. We got NVIDIA as he's about to speak down by 1.1%. Yes, we will bring you those headlines as they become available. The Dow, the S&P, NASDAQ, all in the red. Investors preparing for the Fed's decision tomorrow on interest rates. They're also assessing the impact of President Trump's trade policies on the economy. S&P right now down 60 points, down 1.1%. The Dow down 351, down 0.8%. NASDAQ lower by 273, down 1.5% to be sure, trading very close to session lows. The 10-year, 4.28%. The 2-year right now, 4.03%. Gold up $34 the ounce, $3,035 on gold. That is a gain of 1.1%. West Texas Intermediate crude down 1.2%, $66.79 a barrel. And Bitcoin, big story today, it is slumping 2.5% right now at 81,896. Again, NVIDIA shares, they are trading lower. NVIDIA right now down by just about 1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Haley Lyons.
All right, Charlie Pellet in New York, thank you so much. Here in Washington, we are waiting with bated breath to get a readout of the call that we understand lasted for more than an hour and a half this morning between President Trump and Russian President Vladimir Putin. Of course, a conversation that was widely anticipated, especially after last week, U.S. and Ukrainian officials agreed to the terms of potentially a 30-day ceasefire. The problem is, Joe, you need Russia to sign up for that as well, and it's a big question as to what Russia would ask for in return to making such an agreement. We expect President Putin may have given President Trump an idea of that today, but we just don't know exactly what was said.
Knowing that there had been talks underway that led to this call, and it was just last weekend on Air Force One, President Trump said discussions had taken place about dividing up assets. Those are the words he used. Quote, we'll be talking about land, we'll be talking about power plants, unquote, suggesting that they're pretty far down the road on this without President Zelensky at the table.
Yeah, it's these conversations, at least to this point, are happening basically entirely separately, not direct contact between Ukraine and Russia.
Well, as Kelly mentioned, we're waiting for a readout, but we want to bring you to the White House right now. Bloomberg's Tyler Kendall is standing by as we wait for news. Tyler, what do we know?
Yeah, hey, Joe. Well, I can confirm that the White House has told us reporters here that we will be getting a readout shortly. What we do know going into these calls is Bloomberg News was reporting that Putin has called for a halt to all weapon flows into Ukraine, or at a minimum, according to sources familiar, no more U.S. weapon flows into the country. It remains to be seen if that's something that the White House would potentially agree to, considering that the U.S. just last week reversed a halt on military assistance and intelligence sharing with Ukraine in order to get them on board to backing this 30-day ceasefire proposal that Kayleigh was mentioning there. Our reporting indicating that Russia might be slow rolling these negotiations over these concerns about Western military assistance, Ukraine's sovereignty, and then also, of course, what to do with these seized territories. Now, going into this call, this White House really projected at least some sort of optimism, considering that Vladimir Putin has not publicly committed to that 30-day peace plan. And I had the chance to speak with one foreign policy expert who told me this is really a tightrope act for Russia going forward here, because Moscow does want to see these improved relations with Washington. For example, our reporting indicating that we were expecting commerce ties to be discussed during that call today. And I had the chance to catch up with Treasury Secretary Scott Bessent here on the White House North Lawn earlier this morning. And I asked him how the U.S. is going to use its economic might going into this phone call. And he said at this point, it is all, quote, path dependent as the U.S. weighs potentially amping up those sanctions in order to get Russia to the negotiating table. Joe and Kayleigh, a lot of big questions still remaining, but perhaps most pertinent, perhaps also path dependent at this point. What are security guarantees going to look like for Ukraine? Up to this point, the White House has not committed to any such guarantees.
All right, Bloomberg's Tyler Kendall live at the White House for us on Bloomberg TV and radio. Thank you so much. We want to continue this conversation now with national security reporter Dan Flatley, who is here with us in our Washington, D.C. studio. Dan, I don't want to ask you to play a guessing game because obviously no one actually knows yet what was discussed between these two presidents on this call today. But if it's anything short of a deal being agreed to on the Russian side, will this not count as a victory for Donald Trump?
Yeah, I mean, like you said, Kayleigh, I think we're all waiting with bated breath, particularly because we don't know how Trump is going to pull this off. From our reporting, we understand that what Putin wants, more than anything at this point, is no more U.S. weapons, no more U.S. aid flowing to Ukraine, which, as you can imagine, for the Ukrainians is very much a deal breaker. They're not going to be happy about that for a variety of reasons. And Putin, wants at a minimum a slowing or a stoppage to U.S. aid and potentially aid from some other European allies that are helping Ukraine. So that's a very high bar to clear, I should say. So I'm not sure what Trump will be able to offer that would assuage Putin's concerns in that regard. We know it was a long call. Reports are about an hour and a half. So obviously they had a lot of ground to cover. It's interesting to think about how quickly we've gotten to this point. I mean, this war has been going on now for over 3 years at this point. And, it was only in the last couple of months that we had a lot of back and forth. We all kind of remember that Friday afternoon blow up at the White House with President Zelensky of Ukraine. And now we're here. So we know the Ukrainians are at the table. They're trusting the U.S. up to this point. And so now it's kind of all on what's going to come out of this call. One potential outcome would be, hey, look, we didn't really agree to anything. We made progress. We're going to continue talking, but we don't have any concrete agreements. But as you said, there was some groundwork laid out before the call. So I just think we have to see what Trump or Putin says.
Seems like we're spending a lot of time trying to figure out what Russia can get out of this. Right. Not a lot of time identifying what the U.S. can get, or God forbid, what Ukraine's going to get out of this.
Well, I think that we know that, Trump's approach to this has been basically, I'm the deal maker. I'm the only person that can get this deal done. Right. And I want to stop the killing. So, and Trump has, I don't know whether Trump has, I'm trying to think if Trump has directly talked about this, but people around him have talked about the Nobel Peace Prize and other sorts of things. So I do think that Trump wants some sort of deal. The question is, how are the Ukrainians going to feel about that deal? How are Republicans in the Senate going to feel about that deal? And without having typically these types of negotiations take months, if not years. If you look at what's happened in Gaza with Israel and Hamas, that ceasefire, that truce has broken down. So, these things take a lot of time, even to get to the start of this type of truce or ceasefire. And they can break down from there. So I still think we have a long way to go before we actually know what's going to happen here.
Yeah, great. Dan sets us up for our conversation with Wendy Sherman. Dan Flatley, thank you. The former Deputy Secretary of State in the Biden administration joins us live now on Bloomberg TV and radio. Wendy, it's great to have you. The line, of course, in the Biden White House was nothing for Ukraine without Ukraine. Are the Yalta references accurate? And is that the cost of doing business? Do we just want to see the fighting end?
Well, Joe and Kaylee, first, it's good to be with you and to be with Bloomberg. I think that some of these references to Yalta are quite apt in the sense that I believe the president believes in what we call great power relationships, that there should be spheres of influence geographically and that people who are these big powers decide how things go forward. Now, that is really not in America's national security interest. It may indeed end fighting ultimately, but at an enormous cost where Putin believes he can take more territory, maybe not tomorrow, but in a year or 2 years. President Trump is very close to President Duda of Poland. And quite frankly, Poland is in Putin's sights, as are the Baltics, Moldova. And so there's great concern here, not only for a potential World War III, but for an incremental change of what's on the map and an end to democracy and the rule of law, something we think is important. When I really negotiated with the Russians, trying to stop this invasion, even though we knew it was a fait accompli, we needed to show we could do diplomacy. Every one of the 30 NATO states that met together, along with others, and the Russians at a NATO meeting said how important it was to establish sovereignty, territorial integrity, the right for countries to make their own decisions. So I agree with your reporter. We need to see what came out of this phone call, but we see an administration that is really taking away some of the tools like foreign assistance, like the Voice of America, that we use to make sure that our interests were pursued and not the interests of Russia or China.
Well, Secretary Sherman, as you talk about this notion of sovereignty and territorial integrity against the contrast of President Trump framing this in terms of the division of Ukrainian assets, is there a world in which you realistically think, when all is said and done, Ukraine's sovereignty and territorial integrity as it existed prior to 3 years ago will remain intact?
I can think of some ideas, Kaylee, but I'll leave it to the negotiators that would ensure that fundamental principle of territorial integrity. Russia is looking, I believe, for the United States and for the world in the United Nations to declare that some of the territorial gains that Russia has made by its really horrific and illegal invasion of a sovereign country, part of Russia, to name them as part of Russia. I don't think that Ukraine can live with that. I do think there are other solutions, and as I said, smart negotiators know what they are.
The Donbass is, of course, a very different scenario for Ukraine and for Russia. What does that mean in the negotiation?
Well, again, I think in the past, President Zelensky has talked about allowing some form of autonomy as part of Ukraine for the Donbass. We know that there are a lot of Russian speakers. Many people, virtually everyone in Ukraine speaks Russian and Ukrainian, given history. So I think there are a lot of solutions here, but I think the greatest concern for me today is not only that President Trump may give Putin everything he wants and really put Ukraine at risk, but put Europe at risk, and that the president is as well, with the efforts by Elon Musk and Doge, taking away the tools of American power. Those include not only our diplomacy and our strong defense, but it also includes development and foreign assistance and the Voice of America and the ability to do research on cutting-edge technology and cutting-edge technology for the diseases that we all face and the diseases of the future, as well as AI and quantum. And we're seeing our government reduced and our tools reduced in a way that really doesn't help American security. When business goes abroad, they want security. They want assurance. I ran a global consulting firm for over a decade. Started out with Madeleine Albright, called the Albright Group, and then became Albright Stonebridge Group, and now is part of Denton. And I know what business wants And you cannot achieve that kind of security if you don't have all the tools available as a nation. And those include, I can tell you, China and Russia are thrilled with what the president is doing. It is to our detriment, to the detriment of business, and to the detriment of our national security.
Well, and to continue on this point around other aspects of U.S. involvement abroad, I know you signed on to the amicus brief warning of the danger of terminating foreign aid through USAID. Obviously, some of those programs under Secretary Rubio have been, if not effectively reinstated, will continue to exist. But how much damage already has been done to U.S. soft power with the attempted rollback?
I think enormous damage has already been done. I do think children will die, and Americans are just very generous people, have always been tremendous donors to ensure that children around the world don't die. But it's more direct for Americans. We ensure that disease does not reach our shores. I was around during the Ebola outbreak in West Africa between 2014 and 2016. And I can't begin to tell you the number of conversations I was part of to make sure that Ebola did not reach this country because, as you know, people get on airplanes and they travel. And we didn't want Ebola to come here. So it was in our interest to help Liberia and help Sierra Leone to make sure they dealt with Ebola. And we did that with USAID funds. In fact, we had helped Nigeria train nurses, and 200 Nigerian nurses, if I recall correctly, went to Liberia and Sierra Leone to help stop that outbreak. So, in other words, there's a chain of events that helps increase our security. The president talks a lot, as we all understand, about the needs to make sure our borders are secure. He talks a lot about the scourge of violence, of criminal behavior, of cartels, of drug dealing across our border. Well, USAID has provided monies in the past to governments in Latin America and Central America to ensure drug enforcement. Those dollars are now gone, and that puts us more at risk. So this is not just being about generous, which Americans are. This is not just about humanitarian concerns, and Americans are. And the last thing I'll say is American farmers have depended on USAID buying their goods to use abroad. For some farmers, that's easily 20-25% of their business. And so we're hurting American farmers as well. I think it's really important for Americans to understand that these are not dollars that just get thrown away. These are dollars for our national security interests.
All right, we'll leave it on that note. Former Deputy Secretary of State during the Biden administration, Wendy Sherman, here with us on Balance of Power, and we'll have much more ahead on Bloomberg TV and radio.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. NVIDIA CEO Jensen Huang takes the stage at the GTC event in San Jose, California. A speech that anyone associated with the AI world is listening to very closely. We're monitoring developments. We'll get you headlines as they become available. But right now, Jensen Huang takes the stage. NVIDIA shares, they are trading lower right now. We've got NVIDIA right now down by 1.1%. NVIDIA, part of a larger, broader tech sell-off today, has sent the Dow, the S&P, NASDAQ all into the red. So here's where we stand right now. S&P down 61, drop there of 1.1%. We've got the Dow Jones Industrial Average down 337 points, a decline of 0.8%. NASDAQ, meanwhile, down 284, drop there of 1.6%. And again, NVIDIA, with Jensen Huang speaking right now, NVIDIA shares lower by 1.2%. The 10-year yield, 4.28%. The 2-year currently yielding 4.03%. Spot gold up $32 the ounce, up 1.1%. 3,032. West Texas Intermediate crude down 0.5%, 67.28 a barrel on WTI. Bitcoin, major sell-off there, with Bitcoin down another 2.8%, 81,631 right now on Bitcoin. Recapping stocks lower, the Dow, the S&P, NASDAQ all in the red. The S&P right now down by 1.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash. Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet in an all-green world headquarters in New York. Still looks like St. Patrick's Day up there. Thank you, Charlie, and thank you for being with us on the Tuesday edition of Balance of Power here on Bloomberg TV and radio. Alongside Kaylee Lyons, I'm Joe Matthew, where we were pretty surprised to hear from the Chief Justice today in Washington. Kaylee, John Roberts says the impeachment of federal judges is not an appropriate response to disagreeing with their rulings. And of course, this is something that we've heard about quite a bit from this White House. Donald Trump and Elon Musk have both, in fact, as recently as today, suggested as much. In this particular case right now involving the deportation of more than 200 suspected Venezuelan criminal gang members, a court ruling that suggested the plane be turned around. Of course, it did not turn around. And ever since then, this is a conversation that's been in the air.
Yeah, and it seemed that the judge in this case, Jeb Boasberg, was the subject of this Truth Social post from Donald Trump. He didn't actually name him. He just called him a radical left lunatic of a judge, but did call directly for his impeachment, which the Chief Justice is saying is inappropriate. So for more on this, we turn to our all-star Supreme Court reporter, Greg Storr, who is here with us in our Washington, D.C. studio. Greg, if you could just provide, first of all, some context around how unusual it is for the Chief Justice to even issue a statement like this. What does that suggest about the severity he feels about this situation?
Yeah, extremely unusual. And about the only other example I can think of was during Donald Trump's first term when he issued a statement saying, we're not Obama judges, we're not Trump judges. For him to do this, he really says that he must feel very strongly. He thinks of himself, well, he is the head of the federal judiciary as well as the head of the Supreme Court. He has a role in making sure federal judges are safe and in making sure that the independence of the judiciary is respected. And it's pretty clear this has been building for quite some time. And we don't know for sure that he was responding to Trump's comments earlier this morning, but it sure seems like it's fair to link the two.
To make sure the judiciary is respected. That's remarkable that you just said that. He's basically speaking up for his team, supporting the judiciary branch at a period of time where it has become, according to many, the lone check on the Trump administration.
Yeah, absolutely. And of course, how many cases do we have out there right now? And how many cases have judges issued temporary restraining orders where all they say is, hey, put things on hold to give me a few days to figure this out. And what we're seeing is a pattern of the Trump administration saying, no, we don't want to give you you can't have a few days. We need to go ahead right away. We certainly saw that with this flight of alleged gang members, deporting them to El Salvador. And, in that context where judges' authority is being questioned in all manners, as I said, the Chief Justice felt like, this may have been a bridge too far.
Wow. Thank you, Greg. Greg Storr broke that story exclusively on your terminal and online, Bloomberg.com, as we now assemble our panel for their take on this and some of the other stories impacting today. Bloomberg Politics contributor Jeannie Shanzano is with us, our Democratic analyst, senior democracy fellow with the Center for the Study of the Presidency and Congress, alongside Republican strategist Ashley Davis, partner at S3 Group, back with us here in studio today in Washington. Jeannie, I'll start with you here. The fact that the Chief Justice had to say this tells you what?
It tells us that the Chief Justice is as concerned as we have heard other people about the language coming out of the White House. And in particular, Greg is absolutely right. We don't know if this was a direct response to Truth Social. I try to imagine that the Chief Justice is not out reading Truth Social, but maybe he is. I know I do. And this could be a response, or it's been a long time coming. But it is very, very rare for Roberts to jump into the political fray unless he feels it's absolutely necessary. And of course, the idea that you would impeach a federal judge because you dislike a ruling is anathema to anybody in the judiciary, in the third branch of government. And so as the person who sits at the top of that, he feels it's important to speak out on that point and to tell the president, take the process that's available to you, which is appeal a decision you don't like. And I'm sure that's what the Trump administration will do if this comes out against them. But we don't even know that much yet.
Well, we do know a little bit more about another issue, Jeannie, which is the phone call that President Trump had with Russian President Vladimir Putin earlier today. The readout from the White House has just hit. It reads in part, today, President Trump and President Putin spoke about the need for peace and a ceasefire in the Ukraine war. Both leaders agreed this conflict needs to end with a lasting peace. They also stressed the need for improved bilateral relations between the United States and Russia. Putin and Trump agreeing to start talks on a Black Sea security agreement. Again, the need for a ceasefire and peace. But this is a little bit different in tone than what we're seeing out of the Kremlin side of things. According to IFX, the Kremlin said specifically that foreign weapons aid to Ukraine should end, though they do, according to the Kremlin, Putin backs the idea of not hitting energy objects for 30 days, keeping in mind a 30-day ceasefire is what Ukraine and U.S. officials outlined in Saudi Arabia.
Yeah, this is the news here. You can read all you want about hopes for peace, about some of their posturing here, but the leaders agreed the movement will begin with an energy and infrastructure ceasefire, technical negotiations on implementation of a maritime ceasefire in the Black Sea, leading to a full ceasefire. The readout says these negotiations will begin immediately in the Middle East, presumably back to Saudi Arabia, Kaylee, where this began.
Yeah, certainly we've already seen 2 rounds of discussions held separately with Russian officials and Ukrainian officials with the U.S. at the table. And I guess the question becomes, is there a point at which all 3 parties come together, or these continue to be done kind of bilaterally?
Well, that is a huge question here as they talk about, again, the Middle East as a region for potential cooperation to prevent future conflicts, going on to talk about maybe economic cooperation. But of course, ending Russia's invasion of Ukraine, Kaylee, is what this is supposed to be all about.
Yeah, so we want to add the voice of Ashley Davis in here as well. Ashley, obviously, President Trump has made no secret of the fact that he wants to get a deal done. Is having an agreement for an energy-oriented ceasefire for some period of time enough of a victory for today?
I'm actually a little surprised. I mean, I'm reading this as you guys are. I would think that the president is probably a little bothered that he didn't get a complete ceasefire, but this is obviously the first step. I mean, what his big concentration has been on, at least publicly, has been the killing of human beings and soldiers in Ukraine. So that obviously has not happened in regards to stopping fighting. Yeah. But some of the infrastructure that they're concerned about is at least starting a ceasefire. So listen, is it 60% there? Listen, we're making progress. We didn't make progress for 3 years. So, I mean, obviously the devil is in the details, but...
What do you think, Jeannie, about what you're hearing right now? This is our first chance to take a glance at the readout. We'll probably hear more from the president at some point. As we've mentioned, we've got our eyes on Truth Social, but an energy and infrastructure ceasefire. There's no mention of divvying up land, as Donald Trump suggested last weekend.
Yeah, I mean, it suggests again, and I'm just like Ashley said, just still trying to read through what the little bits we're getting now, but it looks like they didn't discuss the all-important issue or couldn't come to an agreement on the land portion of this. And of course, that has been an enormous concern of both Putin and the Russians and Zelensky and the Ukrainians. You know, talking is better than not talking. They seem to be making some progress if this is to be believed. But just to put in there, Zelensky, the Ukrainians are deeply concerned that these pauses that Putin may or may not agree to are really just time for him to better position himself militarily ahead of resuming the fighting. And of course, they are also concerned that their views on what should and should not happen are not being heeded. And so, you know, there's a long way to go. The problem with bilateral discussions between the U.S. and Russia, or the U.S. and Ukraine, is that this is really between Ukraine and Russia. And those two are not coming face to face yet to have these discussions. So I think we have a bit of a ways to go before we see a real concerted pause in the fighting.
Well, if we still have a ways to go, I wonder how ahead we seem to be getting on the U.S.-Russia relationship. As a headline from the Kremlin just crossed that also discussed was cooperation in energy and on economic matters. Ashley, can we really get back to a more normalized U.S.-Russia relationship without a full ceasefire, not just starting with energy and infrastructure?
Well, I think this is the fine line that the president's trying to walk, because if we're not going to give any more aid, which is obviously very unpopular in this country as a whole, then what will happen to Ukraine if we stop giving aid? I mean, will Europe step up? That's one question. However, and I've been saying this for a few weeks now, this is one chess move in a bigger match. I think that he is starting to build some sort of relationship with Putin, keep your enemies close, because the end game is really China. China,
but you
North
still
Korea.
think he sees Putin as an enemy? Because he doesn't often speak of him in those kind of
think
terms.
that this is a negotiation. I think that to isolate him and not have any discussions. I mean, and George Bush did the same thing. Obama did the same thing. To isolate him is probably not the way to go when you have bigger issues around the world in regards to if China and Russia are allies together, fighting the rest of the world in Iran and Iraq and North Korea, that's not good for America. So peeling off Putin, or at least minimizing Putin a little bit, can be helpful for that bigger geopolitical issue.
They spend almost as much time talking about the Middle East in this readout as they do Ukraine. Jeannie, the leaders spoke broadly, according to the White House, about the Middle East as a region of potential cooperation to prevent future conflicts. Going on to write, the two leaders share the view that Iran should never be in a position to destroy Israel. Yesterday, we spent a lot of time talking about a potential preemptive strike against Iran, some of the hot talk that we've heard from President Trump with regard to their being able to access a nuclear weapon, and essentially Tehran thumbing its nose at creating a new relationship with the U.S. What do you make of the inclusion of this line in a readout of a phone call about Ukraine?
I think this was critically important for the White House. They wanted to get this in here. I mean, we saw the attacks on the Houthis over the weekend. We know that they have been trying to approach Iran about their nuclear weapons. We know Iran is without defense right now. And of course, isolating Iran and befriending Putin would be a big coup for the White House. That said, what's fascinating too is to think about the juxtaposition. Donald Trump, when it comes to Ukraine, he really wants peace at any cost. But when it comes to what's going on in the Gaza Strip, it is peace with a cost. And that is a big, big distinction. And you have to ask yourself why. I agree with Ashley. He would like to pivot to China. But so far, the administration has taken very few steps in that direction. Maybe we see that going forward.
Well, and also, as Jeannie points out, the administration as a whole, we should consider the other characters in this than the president himself. Steve Witkoff, for example, has a hand in both of these theaters. He was in Moscow, but he also has been actively involved in the Middle East. That is actually technically what he was envoy for, whereas Keith Kellogg is no longer envoy for both Russia and Ukraine. It's just Ukraine only. Now, who are going to be the decisive people to watch moving forward, Ashley?
I think the president, I also think the vice president will continue to play a role. I mean, his role in this international theater has been very interesting. I also think the National national security advisor, the Waltz, former Congressman Waltz from Florida. So I think there's many different dynamics. Obviously, Secretary Rubio, there are going to be, but listen, I think this is something very personal to him, both the Middle East and Russia, Ukraine. I think he's going to continue to stay very, very involved.
All right, Ashley Davis and Jeannie Shanzano, our political panel today as we deal with this breaking news. Again, the U.S. and Russia in this phone call between Trump and Putin deciding a ceasefire, a 30-day ceasefire will begin with energy and infrastructure, though talks on a full Ukraine ceasefire will start immediately, according to the readout. So for more, we go to the White House, where joining us live is Bloomberg's Tyler Kendall. So Tyler, obviously we have more information than we were working with some time ago. Is the White House framing this as a good thing for President Trump? Did he accomplish what he wanted to today?
Right, Kaylee, so far all we've gotten is this readout, but the White House did go into this meeting rather optimistic about the chances to come out with something tangible. Interestingly enough, as you've been discussing this statement talking about how both sides agree there needs to be a lasting peace, that already is raising questions about what that lasting peace would look like, considering we know that Vladimir Putin is against putting peacekeepers on the ground in Ukraine, something that our European allies have been pushing for, Ukraine has been pushing for, trying to get what sort of firmer security guarantees we could see from the White House. We also saw in this readout that they are stressing this renewal in bilateral relations after there really hasn't been much direct contact with Moscow in recent years. Of course, these direct talks are reversing what was a longstanding U.S. policy not to negotiate directly with Russia. I mentioned earlier this hour that I had spoken to one foreign policy expert who said that this really is going to come down to a tightrope walk act for Russia, because the Kremlin does want to renew these bilateral relations with Washington as it seeks, for example, greater access to Western financial markets. And I wanted to pull out one quote that you guys have already mentioned, this idea that the leaders agreed to, quote, the movement to peace will begin with the energy and infrastructure ceasefire, as well as technical negotiations on the implementation of a maritime ceasefire. You'll recall this actually mirrors very closely that peace plan that Zelensky had put forward to our European allies the day after that Oval Office meeting devolved here in Washington. Zelensky had floated that he wanted to foresee a ceasefire in the sky and the sea, as he called it. It does appear that that message, at least so far, has gotten through.
Tyler, optics everything on a day like this at the White House. We haven't seen President Trump yet, and there's no indication on the guidance that we saw earlier that would happen. Are we hearing anything about a news conference, a statement from Donald Trump or any of his surrogates who might be speaking more about this?
Well, we are, of course, watching closely his Truth Social platform, where he often comes out to give us his personal take on how the readout could go. Still on the schedule is that 3:30 p.m. Eastern executive order signing. As of now, it remains closed press, but we'll have to see if that perhaps opens up, as these events typically do, for President Trump to come out and make this statement. We'll be watching closely all of the senior administration officials today. Earlier, we heard, for example, from Treasury Secretary Scott Bessent, who said that on the table was the potential for the U.S. to ramp up sanctions. He said they're currently at a level 6. We could see them go up to as high as a level 10 if that's what it takes to get Russia to the negotiating table. As of now, it appears that there has been forward movement, at least according to this U.S. readout. So perhaps that is not the path forward that the U.S. is going to have to take, but we're still watching closely what other concessions, what other ideas we can get out that this pair spoke about on the phone call today.
Bloomberg's Tyler Kendall live at the White House with the readout in hand following President Trump's telephone call with Vladimir Putin, more than an hour and a half long. Dan Flatley is back with us now in studio here in Washington, of course, covering national security for us at Bloomberg. Dan, last time we spoke, we didn't have any details. Now that we do, can either of these leaders claim a win?
It's a good question, Joe. I think time will tell. We'll have to get some more details about what transpired behind the scenes. What we do know at this point is that there is this agreement, we can call it, on energy and electrical infrastructure for a certain period of time. An agreement to begin discussions on a maritime ceasefire and continuing peace negotiations in the Middle East.
None of this keeps neighborhoods from being bombed, though, right?
Yeah, I think it's probably a win in the general sense, in the human sense, as you point out, that there will be less bombing, less killing for the foreseeable future, assuming that this holds. It doesn't address, of course, troops on the ground It doesn't address territorial disputes. It doesn't address a number of the issues that the Ukrainians wanted to discuss, including security guarantees and things of that nature. It leaves Putin the option to continue to press on a cessation of arms and materiel to Ukraine, supplies of that material by the U.S. and other allies. So, look, it's promising, one might say, in its bold strokes, but still a lot of details and implementation that has to come with this. So, hard to say.
Well, and is it safe to assume, because Ukraine already had with the U.S. agreed to a full ceasefire for 30 days, that they will be amenable to at least a ceasefire in these specific areas with which we're speaking about?
Yeah, that's a great question, Kaylee, and I think that's something that we're going to be doing some reporting on to understand. There is a potential scenario in which the call started, Trump or Putin presented their terms. They couldn't agree to, let's say, I don't know. I'm just sort of speculating a little bit, but one could imagine that, they may not have been able to come to terms on that 30-day ceasefire. They may have settled on something a little bit different. But again, energy and infrastructure is not a small thing. This has been a part of the Ukrainian grid network territory that has been targeted by Russia. The Ukrainians have targeted some Russian assets, energy and infrastructure assets as well. And really, this has been a war that in many respects has involved energy in a lot of different respects. The Russians make a lot of their money, if not, a majority of their money from selling energy into the West and now into India and China. The Ukrainians brokered deals over the years to allow Russian energy to transit their territory in the hopes that it would prevent a war. So we're sort of back to energy and infrastructure at this moment. And so I think that is kind of an interesting development, not one that we were expecting, although, Kaylee, as you say, it does stop short of this 30-day complete cessation of hostilities that we were
Beyond that, Dan, this readout from the White House says the blood and treasure that both Ukraine and Russia have been spending in this war would be better spent on the needs of their people, projecting to this idea of a full ceasefire. That wouldn't have been the case if Russia had not invaded Ukraine and continue its occupation. That doesn't seem to be reflected in any of the language coming from the White House lately.
Right. Yeah, I mean, it's not a small point, Joe. If this deal had been negotiated under the previous administration, under the Biden administration, we may see a different framing of this whole discussion. That's been Trump's point that he's made time and again all along, that you have to talk, you have to have these negotiations in order to bring this conflict to an end. So I wouldn't expect Trump to come out and say, the illegal Russian occupation of Ukraine needs to end today, so on and so forth. He has not in any of his previous statements previewed anything like that. So it's not unexpected for Trump. It's certainly unexpected, if we go back to 3 years ago, again, to where this all started when Ukrainian President Volodymyr Zelensky addressed a joint session of Congress. And you had members of Congress pouring out of that auditorium talking about how inspired they were by the Ukrainian resistance to the Russian occupation, talking about Zelensky as a hero, talking about the illegal occupation of Ukraine and all of that. We're in a different place now. It's in some ways 3 years is a very long time. It's a very long time in war, no matter how you cut it. But it's a very short period of time when you think about where we were three years ago and how much the rhetoric has changed. And I think that politically Trump feels that he has a mandate to bring this war to an end on whatever terms he sees fit. And, that's certainly been Vice President J.D. Vance's perspective as well. And so here we are, and we'll see how these negotiations play out in the Middle East. We'll try to learn some more details about how this call went down and what was discussed and how things may have changed. And I'm sure that there will be a lot more reporting to come about how this will be implemented and maybe some of the nuances that we don't know at this point, how those will come into play. But I think for now, if you were looking at this call and waiting for the outcome very nervously, you probably are feeling maybe a little bit better than you might have initially. But I'm sure that there will be people that aren't happy with this result for a number of reasons, and some of them good reasons too. So, obviously more to come.
Well, and it's interesting that we get this news after today, seeing what we saw in Europe and Germany specifically, where the parliament has essentially okayed now a full shift away from the policy of austerity and allowing debt to be essentially not a factor when we consider defense spending. And it makes me wonder about the role Europe is going to play here. If they really have any part to play in these conversations that will be happening over 30 days and beyond, and how quickly Europe is actually able to get itself to a place in which they can provide a security backstop if we ultimately don't end up with a U.S. guarantee on that.
Yeah, this is history, but, since the end of the Cold War, really since the end of the Second World War, the U.S. has been the security guarantor for Europe. So this is a huge sea change, and for Germany to be leading the charge on this is notable. I think it was the British Prime Minister, Keir Starmer, that spoke with Trump ahead of the call and really impressed upon Trump the need for some type of security arrangement around this deal. So we do expect the Europeans and the British to be involved in this. I think it's an open question of how involved they will be. It's going to be a different role for them than they've played, in the past. But it's certainly, I think that again, we talked about this earlier, but the White House meeting between President Zelensky and President Trump and Vice President Vance was, I think, among other things, a major wake-up call for Europe, and they have decided that they're going to have to play a bigger role in European defense. And again, just to go back to Trump's presidential campaign, this is something that he's talked about time and again. So, again, it's and we talked about Israel and Gaza earlier and how hard it is to keep these agreements together. So. I still think there's a lot more to come on this.
All right, certainly so. We appreciate you joining us on this breaking news. Bloomberg national security reporter Dan Flatley. Again, the big headline here, the U.S. and Russia in this phone call between Presidents Trump and Putin agreed to a 30-day ceasefire beginning with energy and infrastructure specifically, though talks for a wider ceasefire will begin immediately and take place in the Middle East. We want to get some more reaction now here on Bloomberg Television and Radio from General Ben Hodges, the former commanding general of the United States Army Europe. General, welcome back to Balance of Power. When we consider all of the ways in which this phone conversation could have gone, is this ultimately a good outcome, the beginnings of at least a ceasefire in part?
Well, of course, I have to tell you, I was expecting the worst. I was expecting that we were going to hear that the president had agreed to recognize Russian occupation of Crimea, agree to Russian demands for elections in Ukraine and things like that. So the fact that we didn't hear those is better than if we had. But we have to be very clear that I think Vladimir Putin has actually zero interest in any true long-term settlement as long as he remains in power, and that his ultimate objective still remains the destruction of Ukraine. So I didn't hear or read anything about Russia backing away from their ultimate objectives. So we should be very clear about this.
So to that end, General, and it's great to have you back here as this news breaks today. If you're a member of the Ukrainian military, if you're a soldier or an airman deployed, you're waking up tomorrow morning to the very same world that you are in today, correct? There's no ceasefire when it comes to military. The battlefield will continue. Donald Trump talked about some of the Ukrainian forces surrounded by Russians, that he was going to spare them. We didn't hear a reference to that in the readout today either. So the fighting continues.
Well, and I'm sitting here, of course, this is in just the last few minutes, but I'm trying to digest a little bit. What does it mean? You're right. There's nothing that is better for any soldiers on the battlefield. And when we talk about energy and infrastructure, that sounds to me that Russia is acknowledging that Ukraine was hammering their oil and gas infrastructure. And so, of course, they want that to stop. Now, I'll be curious to see, does that mean that Russia will also stop attacking Ukraine's power generation, for example? I will want to see that if that's really going to happen. And, I think that the fact that when the United States comes out of a call with Putin and says, oh, it's going to be a great relationship, Vladimir Putin is convicted in the International Criminal Court. So he is responsible for the death of tens of thousands of innocent people. So I don't understand how the president of the United States, at least in normal times, would come out and say, we're going to have a great relationship with the Russians.
Well, and especially when we look at the readout we got from the Russian side and what the Kremlin is saying, they specifically make reference to the idea that U.S. aid flow to Ukraine should stop. General, what would happen if the U.S. were agreed to cut things off?
Well, I think there's two or three parts of this. Once again, all the demands, all the things that have to cease or stop are those things that affect Ukraine negatively. I still, to this day, have not heard anything from the administration that says Russia must stop doing X, Y, Z. So I think that's what I think about when I hear what you just pointed out, Kaylee. Now, of course, you know, the other part of this, the hubris of the U.S. administration. Ukraine is not bound to any of this. Europe is not bound to any of this. And so if the United States makes the terrible decision to abandon a democratic country fighting for its survival against Russia, then Ukrainians are not going to stop. And Europe is going to have to fill in the gap. And, you know, I'm here at a conference in Berlin right now. That's exactly what people are talking about, is how they're going to increase deliveries, because this discussion between President Trump and President Putin has been done without meaningful European involvement or even Ukrainian involvement.
Well, with that said, you were commanding general, U.S. Army Europe. What are military leaders in European capitals, our allies in Europe, saying about this today? How worried should they be, whether you're talking to leaders in Poland or Estonia?
Well, first of all, of course, we still have NATO, the most successful alliance in history of the world. Yes, of course, there's problems, there's concerns about American commitment, but the fact is, so much progress has been made since really 2014 to improve capabilities and structures and readiness of different nations. So we're in a better place than we were now, the alliance is, than it was 10 years ago. And particularly, like I'm sure many of your listeners know, Joe, that Germany today, the German parliament passed law that changes their entire budgeting system so that now they will be able to spend hundreds of billions of euro on defense. So this is not the same old Europe from just a few years ago. They will, in fact, be able to provide much of what Ukraine needs over time. And I think we, the United States, we're going to regret having lost real influence in Europe because of that.
General, we just have a minute left here, so I apologize that we have to keep it short. But what would you expect to hear from Ukrainian President Volodymyr Zelensky in reaction to this?
I think that President Zelensky will say nobody wants peace more than Ukraine. This war started when Russia invaded Ukraine. Russia could end it tonight. They could, if people really want peace, they could end it tonight. That's what the Ukrainians want. But the Ukrainians also know that you cannot accept the Russian version of peace, because that means total subjugation of Ukrainian people and the destruction of the Ukrainian state.
General Ben Hodges, it's great to have you back with us, sir, and appreciate your jumping on the line with us with breaking news. The call between President Trump and President Putin leading to a 30-day infrastructure and energy ceasefire. Kaylee, we might still hear from the president later on today.
Yep, just about an hour and a half from now, he's scheduled to be signing executive orders. It's not open to press at this point, though. Historically, we have seen that he does use it as an opportunity to answer questions from journalists. We'll, of course, have it all covered for you in the late edition of Balance of Power.
And a lot more on the call coming up next, and the markets today, as we hear from Jensen Huang coming up next on Bloomberg Business Week.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And a very good afternoon, everybody, live on radio, TV, YouTube, and Bloomberg Originals. This is Bloomberg Business Week. Yes, it is Tuesday, March 18th, 2025, and we've got stocks, they are lower across the board, kind of bouncing around their lows. I'm Carol Masser here at Bloomberg headquarters in New York City, and Tim Stenivek out there on the West Coast at the San Francisco Bureau. And Tim, there's a lot going on.
Yeah, there is. We're watching tech stocks specifically, especially NVIDIA under pressure. This is Jensen Huang takes the stage at GTC. It's called the Super Bowl for NVIDIA, Carol Masser. But tech stocks having another bad day. You were gone for 2 days. We saw 2 days of buying on the major equity indices.
What are you
now
saying?
You're back, Carol. Stocks are in the red. I don't know what to say.
I know, they are in the red. We're going to talk about those big tech names. Also, we're going to get into what is a very big story at this hour, and this has to do with the future of Russia and Ukraine. We know President Putin and President Trump having about a 90-minute phone call, a bunch of headlines. We're going to make sense of what it means. Is it a step forward, or is there still a lot to be done? So we're going to get into that in just a moment, Tim.
Also, the mission of the Federal Reserve in a volatile world. Just 1 day before that Fed decision, of course, we are going to hear from Jay Powell tomorrow, but the Fed already hard at work on that second policy meeting of the year.
All right, and as you mentioned, big tech certainly front and center. We're going to hear from the NVIDIA's CEO, co-founder Jensen Huang, big keynote on AI. So we're going to get into that in just a moment. Also, Alphabet doing a big deal, so we'll talk about that in just a moment. And then we've got the first broadcast interview ever of the CEO of HSBC USA. So we'll get to that all over the next 60 minutes. First up, though, let's get a check on that trade on this Tuesday. Here's Charlie Pellett.
Hi, thank you very much, Carol Masser. Welcome back. Indeed, a lot of red on the screens today, but NVIDIA, one of the major tech stories that we're watching for you at this hour. NVIDIA shares, they are slumping now, down 2.5%. NVIDIA's CEO, Jensen Huang, starting his keynote speech last hour at the company's GTC conference, which he referred to as the, quote, Super Bowl of AI. The stock has lost some steam. It is now trading lower again. NVIDIA shares down now by just about 2.6%. One announcement that did come out, GM and NVIDIA will be working together to build custom AI systems using NVIDIA accelerated compute platforms to train AI manufacturing models. So the Dow, the S&P, NASDAQ, all in the red, tech selling off. We begin with NASDAQ, now down by 308 points, down 1.7%. S&P down 63, down 1.1%. And the Dow down 290, a drop there of 0.7%. The 10-year at 4.27% with the 2-year currently yielding 4.02%. Gold now up $32 the ounce, $3,032 on gold today, up 1.1%. West Texas Intermediate crude down 0.8%, 67.06. And Bitcoin now slumping by almost 3%, back at 81,490 on Bitcoin. So again, recapping, tech stocks leading the way lower. The Dow, the S&P, NASDAQ, all in the red. NASDAQ and the NASDAQ 100 index both down by about 1.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellett, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week. We did mention our big story at this hour. President Trump and President Putin of Russia speaking today in a long phone call, about 90 minutes, on how to bring an end to the Russia-Ukraine wall. President Putin committed to limit Russian attacks on Ukrainian energy assets, but did decline to agree to a broader 30-day ceasefire as the United States had sought. With more, let's head to the White House and to Bloomberg's Tyler Kendall. She's there on the lawn of the White House. Tyler, is this a step forward to ending the war between Russia and Ukraine?
Well, Carol, the White House would like to paint it as such, but importantly, you mentioned there Vladimir Putin falling short of backing a 30-day ceasefire proposal that the U.S. had been hoping for. Importantly, that White House readout goes on to say that negotiations will start for a maritime ceasefire on the Black Sea, followed hopefully by talks for a full ceasefire and then a more permanent